There we
Good
go.
morrow,
Yo, yo.
everybody. How are we all doing? Rich, you need to start being more consistent with your cameraman. I gotta like adjust how big I am now because you're different every time. That's better.
It's gonna
That'll
change.
do.
I'm gonna keep you on your toes. Is basically what I'm gonna do with my camera settings. I'm just keeping you on your toes, mate.
That's the way it was. All right. Anyway, good morning, everybody. How are we doing? Welcome to a Monday. Shit! I just dropped my bottle. Oh my god!
Welcome to a Monday. Shit.
I got a glass bottle, and this is the second bottle I've already smashed one just because I knocked it over. I need to stop being so clumsy. Anyway, good morning, everybody. What is good? It is a Monday morning. It is the start of a new week. Let's bring that energy. Let's have a good start to the week, and let's start as we mean to go on. Rich, how you doing, brother?
Not too shabby, hey Nige. Not too shabby. I am doing some stuff here in the background, and I was a bit delayed this morning. Let's just put it like that. I delayed myself, like a muppet, and yeah. And now I feel a little bit out of sorts. I feel like everything is not done.
Yeah,
I don't know if that makes sense. Like, I'm not ready. Why am I not ready? So I'm already taking a trade.
Okay. So hang on a minute. So whoa. So you feel psychologically like you're not ready. You feel delayed. You feel nothing's done. Yet you've already taken a trade. Walk us through that. Walk us through the process and mindset on that.
It's because everything is the other way around. So normally,
I see what you've done.
Go to the gym.
Yeah.
I go to the gym, come back. On my way back, get breakfast for the wife and myself. And then we have coffee, we chat. Didn't go and get breakfast. Made myself breakfast this morning. Was very unhappy about the breakfast that I had made. It was subpar, or at least it was subpar to my expectations. And then came to the office, switched everything on. Well, it was already switched on. My wife switched everything on. God bless her.
Oh, so hang on a minute. So not only does your wife switch all of your technological stuff, gadgets on for you, you also didn't get a breakfast. So, dude, you are like husband of the year today, aren't you?
Very much so, yes. Very much so. It's the little things, and in this case, I didn't do the little things.
You didn't do anything.
Rocked up to the PC, saw, oh, okay, this looks like a very nice movement. Got in on it. TP1, TP2 hit, and
I'm looking at the NAS now, and you probably would be close to TP3 by now, I'm assuming.
Almost. TP3 is another 30 or so points away.
Okay.
I'll bring it up on screen and then you can have a little look-see. But
let's have a little look-see.
Okay.
Yeah.
During the Tokyo session, we were struggling to really break below this point over here.
Mm-hmm.
So if I just remove that, then you'll see it more clearly. We really struggled to break through this, and then we started getting a little bit of volume pre-London, and then London session we opened up, really struggled to push lower. I really like the fact that we kind of like just bounced off of the 50 EMA and just entered. TP1 was hit incredibly quickly, TP2, and then it reversed from there and just came back down and hit my stop loss, and now it looks like it wants to continue up. So what I'm going to do now, what I'm going to wait for, is I'm going to wait for price to come back down again, do something similar to what it had done here, just prove that it doesn't really want to carry on pushing lower, and then start pushing up. And then the area that I would like to see hit is we had a base area here last week Friday, where price started showing a bit of downward trend after basically being bearish the whole day, Tokyo session and London session. New York Open predominantly had bullish price action. And then we came to basically the end of this bullish run, and then we started producing some bearish price action. And anyway, so this base over here, price reacted out of it, came when the day opened now, we wicked into it, struggled, and then started pushing lower again. So I'm looking for price to get back to this base area. So a pullback here, one little pullback, one or two bearish candles, and then a small bullish candle like one of these or this. It doesn't look like a bullish candle here, but on MetaTrader it is a bullish candle. Very, very, very slightly bullish. I'll look for a push up to see if we can potentially, let's say hypothetically, get in there. This is what the... Wow, how good am I? Can you imagine that? So this is what I would like to see. I would like to see it pull back a little bit and then start pushing up and then aim for somewhere over here. TP3 on my original trade would have been 29,111.16, and then TP4 would have been 29,151.16. But yeah, this was a TP2 and 2 stop loss, which was break even. So it is, I'm up 0.75% for the day already.
I was going to say, when you say to me you've hit TP2, I always think before stop loss, I always think, okay, he's banked something, you know, so it's TP. When you say TP2, I'm like, yeah, okay.
Yeah, TP2 is stop loss to break even. So the only way I'm losing money in a trade prior to any of the or prior to take profits being hit, any one of them is a full stop loss, or if we hit TP1 and then back to stop loss. If we hit TP2, it's a break even trade. TP3, it's still break even. TP4, all of the positions are out. So pretty decent, I would think.
For some reason,
this is what I'm going to wait for.
I can't seem to move any of my lines on this stupid bloody, what do you call it? Position sizer.
Double click on the line. So it's
supposed
I
do,
to...
but then I drag it, let go, and then it goes back and it pings back to where it was.
Okay, so do you have an instant or pending?
I got instant.
Do you have the lock on? Is it locked?
I'll tell you what, you know what would probably be easier is if I shared my tab.
Let's have a look at your screen.
Alrighty then. There we go. So you should see this, okay?
Okay.
So instant.
All right. Okay. Which one is your stop loss?
I think this one is.
It's going to be the green one, I think.
No, green one I think is my TP.
You're in a short.
Oh, yeah.
Yeah, so the green one is your stop loss. So that's why.
I haven't changed on gold yet then. Okay, that makes sense.
That's why. So,
so what? Ready?
Yeah, that's because you're pulling on the take profit.
Yeah.
So you have it locked to a 1-to-1 TP.
Oh, so I got to pull my stop loss.
If you want to do 1-to-1s. So if you don't want it to move together.
Oh, I turn the lock.
Yes, and then you can move it, and then you'll see how it's going to adjust itself.
Oh, that makes more sense now. Fair.
Yeah.
Okay. Oh, okay. Sweet. Okay.
If it's locked, it's going to lock you to the risk to reward ratio.
Right. Do you know what? That makes so much more sense on my euro trading the other day. Because
Is that what made you so frustrated?
Yeah, dude, I was trying to trade the euro and nothing was working. Like the whole risk was wrong, the whole lot sizing was wrong, just everything was bloody wrong. And I was like, what's going on here? Like, why isn't it doing what I want it to do? And yeah, lock.
Yeah. So like I said, the lock just locks the ratio of your take profit to your stop loss. Whatever is your predefined ratio. So in your case, it's a 1-to-1, but you can make it 1-to-2, 1-to-2.5, whatever ratio you want to have. And then every take profit that you add simulates that exact same risk to reward ratio. So if you add a TP2, then that TP2 is also going to be a 1-to-1 on your current. Okay. Well, it would be TP2 would be a 2-to-1 technically. So it multiplies it.
That makes so much more sense now.
Yeah.
See, I'm still trying to get used to this position sizer.
Dude, I think once you're used to it, you're going to love it. But I think that the frustration comes in when
You're trying to
do something and you've either, like in this case, you'd forgotten that you'd locked it. Or you're trying to pull on the take profit instead of the stop loss. Because if it's locked, your stop loss is the one that you need to draw or to move up. And then the ratio is going to play around.
Yeah, no, exactly. I think that's what it was. Yeah, I was looking. I was like, what's going on here? I was like, why, why isn't it working? Yeah,
it's so funny to me your coloring as well. Like you have take profit gold and stop
No,
loss.
no. To be fair, I haven't changed it yet. On it should be. It should look like this. I'm gonna just catch price up. Where the hell is the TP and stop loss?
I think it's still hidden. So if there we go.
So stop loss is red, TP is green.
Okay, so what you can save this one. So go into the position sizer now. So if this is how you want it, like ask for confirmation, do not apply take profit. Like, are you fine with that?
Yeah. What do you mean do not apply take profit? How does that work?
It means that it's not going to put the take profit down for you.
Oh no, I want to take profit down.
Yeah. Okay, and then ask for confirmation. You're happy with that as well?
Yeah. 100%.
Okay. Then, so what you would do is double click on the top right hand side where it says position sizer. Okay. When you have all of the settings up.
Say, you can't see it. Okay, yeah, fair. Yeah, I got them all up. Yeah.
I can't see it, but once it's up, you say save on right hand side. And then you can save a preset.
Okay. Position, size, template, bosh.
And then when you go to gold, all you do is you go back into it and you just say load, and then you just.
Oh, okay, yeah, fair. Yeah, there you go. Can you tell that I don't use like EAs and stuff? Yeah, I'm useless. Oh, okay, I got it now. Yeah, dude, that's sick. That makes so much more sense. Because now it's staying.
Awesome.
Red.
While you're busy doing that, I am going to say hello to everybody in chat quickly. So first and foremost, we've got Leon Green, Kiprotich saying, is there a chance to get a trading account? Not today. We don't have any giveaways today. However, do stick around. Like periodically, we'll have giveaways. We had one last week, Thursday. Where 3 people won 20k bootcamp accounts. So whenever we do a giveaway, we will let you know beforehand, and then you can rock up. But do stay and partake in the chatting, and maybe you'll learn something, or maybe you'll teach us something. Azrael Trades, good morning, guys. I received my account. See, exactly like this. Azrael won one of the 20k bootcamp accounts last week, and yeah, if you've received it now,
dude, I was so gassed for Azrael the other day. Like he messaged me on my Instagram as well. He was like, "Bro, it's my birthday. I won, and I won the account." I was like, "Yes, mate." It's
his birthday. He got the #1 position, and he got an account. So
yeah, dude, I was so
what a birthday surprise!
What an absolute day for you, bro. I was so happy. Genuinely, it made my day receiving that message.
Yeah, dude, it's a pretty cool feeling knowing that on your birthday you actually get everything just goes your way. It's just so cool. This is from us. Good morning, everyone, and welcome to a brand new week. Fresh charts and new opportunities awaiting us. Yes, woo! Hello, everyone from Mahimber.
Yo,
hello to you.
Good, man.
We've got Henry. Good evening. Good evening, Henry. Unbiased trader. Morning, all, and hosts.
Unbiased
morning
trader.
to you, unbiased. Abradolf Linkler. Sup.
Sup.
Ty Keith, good morning. Rich and Will, good morning to you. Ty, had a great trading week, guys. Or have a great, yes.
I was going to say, there's no past tense there.
That's present continuous. Have.
You too, bro.
MK, good morning. Good morning to you, MK. How have you guys been? I've been good. I don't know about Will. Will, have you been good?
I've been good. Yeah, I've been really good.
Just good.
Just good. Pretty good. It's not been amazing. It's been pretty good. It's a weekend though, isn't it?
I don't know why you're saying. Oh, untick locked. Yeah. Felix, good morning, guys. Shane saying skill issue. Definitely a skill issue, but don't worry. The nice thing about skills is that they can be upgraded.
Yeah, it was definitely a skill issue.
Greetings from MGN. Good morning to you. Felix saying scaled my 10K to 12.5K with a $920 payout pending. It is a good start to the week. It is indeed, Felix. Congratulations
nice
to you.
Big
Let's
up to you, brother.
let's do this. Congratulations to you. Lo-fi or calm lounge today?
I don't know. That I was kind of vibing the first one.
Anyway, we're lo-fiing today. Well, congratulations to you, Felix. I do hope that this account treats you most fairly and that you carry on pushing it and getting more scales. Everybody's saying congratulations to you. MK saying, did my analysis for GU. And awesome. Then... Yeah. That's good. We can have a look through GU and EU if you'd like.
I looked through GU earlier. We got that massive leg up, which is a real shame. We got this leg up way too early. It was like 7 a.m. and I don't think we did, but let me have a look again. I don't think we've got any news out for today.
No, today is a very, very quiet day for news.
I was trying to work out why we had such it was a beautiful leg up, but I'm trying to work out why such a beautiful leg up so soon, so early. And okay, I suppose London Open and that, but usually it's like 8-10 o'clock we get a move if we're gonna get it. Not 7 o'clock. Like it started moving up from like 6 onwards, but 7 a.m. on the dot, GMT +1, so 7 a.m. UK time. We just started legging up, as you can see in front of me. Just give me a minute.
You can just double click on the side panel.
Can I? I can. Wow. Learning so much today.
What a great day. I'm learning.
What a great day to be alive. Yeah, so like this, it was beautiful price action, to be fair. Genuinely, really was lovely, lovely price action. But it was too early. It was 7 a.m. I don't trade at 7 a.m. I was catching Zeds at 7, and I wasn't. I was up at 7 a.m. but I wasn't in the gym either. So to be fair, I probably could have, but usually 7 a.m. I'm in the gym, so I usually miss this. So even when I'm not in the gym, 7 a.m. isn't a trading time for me. So yeah, it was a little bit early, a little bit premature for me, which was... Let me get rid of this for a minute. There we go. Which was a bit of a shame. But nonetheless, look, we've got the consolidation here. I will move back over to TradingView in a minute, but I know you guys find my TradingView chart boring, and it's a bit sexier colors on my MT. So I may take a buy or take a nice little long if we can have a nice break and close above this area. Now we have broken it. I'm just waiting for a close. Because I've already marked out, I've marked out this high. I've already marked out where I want to be targeting. I just want to see if we can get up there. Because if we're not going to break and close above, we can see 1, 2, 3 wick rejections, 3 attempts to push up and failed. If we don't break and close with a little bit of momentum, with a little bit of impulse, then I'm not interested. But that's my analysis for GU. Like I have looked at it. I do want to be buying GU. However, EU is the complete opposite. I'm sort of like double analyzing here. I'm analyzing on MetaTrader and on trading view, because like I said, I don't like these colors. These colors are woo. It's like
Woo!
yeah, it's like a hallucinogenic. I've just popped some hallucinogenics, and next minute my trading views just turn all colorful.
It is too pretty. You know
Yeah,
when
it's too
something
pretty.
is too.
Well, dude, I look in the mirror most mornings, so I do understand what too pretty looks like.
I was about to say, so you have no clue what I'm talking about, right?
Yeah, so we've had the break and close under here. If we've got a lot of rejection. If we reject here and push one last under here, then I'm probably going to be short bias on EU. And GU seems to be failing. So this is a point where we could be holding. Oh, in fact, is this candle closed now? No, it hasn't. We got 2 minutes, or 1.5 minutes. So yeah, I think this is going to be an area of interest for pound and the euro. So I'm just going to wait. Gold. I'd like to be buying gold, but I feel like it's. Maybe I'll buy a gold on this account. Yeah, you know what I'm gonna do? I'm gonna do it.
You're gonna buy gold?
I'm gonna buy gold on this account. Let me make sure it's the right account.
Oh, dude, I need a new chair. Oh, this chair is so dog shit.
Okay, yeah, it's the right account. I'm gonna risk. I'm gonna be a big boy. I'm gonna risk 2%.
While you're doing this, there's
not 200%.
So, how about we do this? So, Mikey or Mikesy is asking, do you guys have any advice on cutting profits too early in winning trades? I have such a hard time sitting on my hands. Looking back at the data afterwards, I would have made a fortune if I had held. All right, let's do this. Will, seeing as you are going to be taking a trade on your, which account is this? Your play account?
This is my play. Yeah. This is my play account. This isn't my main account.
All right. So, seeing as you're going to be taking a trade on your play account, how about we do this? Set a target and a take profit that you're comfortable with for the time being, and then see if you can hold it the entirety of the day, regardless of what it's doing. Don't close it early. Don't close it or anything like that. Give yourself some room and say, you know what? I think that this is a logical place to put my take profit. This is a logical place for my stop loss, and then just let it happen. Okay. Then what we do is we address this, what Mikey is asking for. So in my mind, there's two ways that you can really approach taking profits early solidly or letting them run solidly. One is lock up profits as you're going up. So as price is going into profit, take a little bit off of from the table, a little bit of your risk, so that you can kind of like satisfy that need of locking something up. So that's the one thing. The other thing is to just walk away. Set your take profit, set your stop loss, and just walk away. So Will, by doing this,
I'll see you later,
can walk away. Not right now, though, because he still needs to be on stream for another 40 minutes. But just kind of like play around with the idea of which one of the two. So you're saying you looked back at your data, and the data said that, listen, you should have held, you would have made a fortune. And that's usually the problem, is we look at data in hindsight, and we're like, oh, I should have done this, I should have done that. But in the moment, you have emotional attachment to the trade itself. The trade itself feels much. It must move. It should be going in my direction. It's not. I'm impatient. Whatever emotional experience you're feeling, it's all psychological. It's all in here. You put a lot of emphasis on the importance of that one trade. So either don't look at the trade, do something else, or put steps in place for you to take profit off of the table going in your direction, so that you don't feel like you're being inactive, or, you know, the emotional side of it's like, you'll feel great if you've like locked up a TP1 or locked up a TP2 or something like that.
Yeah.
So try that as a
Yeah.
let's put it like that. For now, try this and see what works for you. Because ultimately, at the end of the day, it's going to be trial and error. And whichever one works best for you according to your backtested data, according to your emotional input and output that you can have at the market, and just how you feel generally when you're taking profits.
What's really cool is that you've come up and said, my data says, and I love that, because when people say, excuse me, when people say, I should have, why? Excuse me, we got indigestion today. Why should you have? Because I should have because I closed early. It's like, you can't just say this. Like, I should have been a millionaire 2 years ago. Why? Oh, well, I just should have been because I could have made better decisions. Well, yeah, okay, cool. Everyone could have made better decisions. Everyone should have done something different, but you've actually able to come and say, my data says. That's definitive. You have got numbers on paper that says you're an idiot, basically. And it's a great feeling to be told that you're an idiot, because to be told you're an idiot means that you can do something about it. Whereas if you don't know why you're an idiot, then it's like, well, now I just feel dumb with nothing to do. Whereas if you're able to say, right, okay, here's what I am doing. Here's the results that I have, and here's the results that I should have.
Yeah.
Now, how do I know that
Split
these are
them.
the results? Now, how do I know that these are the results I should have? Because and this is the luxury about journaling. Because I've journaled my trades, I'm able to identify what I did get and what I could have got or what I should have got. Now, you can go further as well, depending on how advanced you want to go with your journaling. By the way, GU is looking beautiful at the moment. I may look at taking a buy in a minute's time. So if you want to really, go deep into it, what you can do is what you did get is split into threes. What you did get, so the actual realized P&L, what you should have got, meaning what would have happened if you had have stuck to your plan, if you haven't already, because there's always going to be a slight digression. There's always going to be a slight divergence with it. And then what you could get in the future. And that third one, there we go. I'm gonna open up an order now. So that third one is a really, really difficult one to help identify. If you give me 2 minutes, I will explain. But I just want to take this trade. There we go. I'm also going to take one down here if it pulls back. So
while doing that, you may as well draw your pending one if you want.
No, I'm going to wait. I'm going to wait because I'll let discretion have an opinion as well.
Very well.
So with that third one, guys, it's the ability to understand, okay, if I'm sticking to my plan, usually there's not going to be that much of a difference between what you did get and what you could have gotten. And then what you're able to do is test the idea. If you're testing a 1 to 2, but you're like, I wonder what this would happen at a 1 to 3, you're able to also journal a potential and then be like, okay, I wonder what would happen if I went 1 to 3s. And then you're able to look at your journal, look back and go, okay, 1 to 2 is great. I'm closing a bit early, so I'm costing myself a bit of profit. 1 to 2 is that's what I should be getting, and my testing is 1 to 3. My journal is telling me that 1 to 3 isn't actually optimal. So therefore, you can then scrap that. Or maybe your 1 to 3s is even better than your 1 to 2s. And now you can look at it and be like, wow, actually, I've got what I have got, what I could have got, and what I potentially can get. Journaling is absolutely amazing, and it's awesome to see that you've actually been able to identify where you're going wrong. Now, what you're able to do now is the best thing is, depending on how you trade, like Rich said, set and forget. That saved me a fortune and earned me a fortune when it came to my early days of psychology. It was God's gift to trading, or to me when it comes to trading, was the ability to mechanically trade, enter a trade, and just walk away. Yes, I was checking my phone every now and then, because look, if you're going to have psychological tilt maybe, or if you're going to have some form of psychology in your head, you're going to keep checking. But if you can tell yourself, no, I'm going to set and forget, or I'm going to delete MetaTrader, I'm going to place on my computer and walk away, or shut my computer down, or do whatever the process you're doing is, then yeah, you're going to start finding a little bit more alignment.
I'll add this. The reason why people say I should have is because they looked at the information in hindsight. You're looking at the outcome and you're saying, oh, I should have. But in the moment, while the trade is open, you're seeing your P&L move up and down. You're seeing your price either being in profit or in drawdown. And then you attach a psychological, emotional reaction to that. So you're allowing the movement of that little indicator at the bottom, like right now, Will's is showing blue, which means in profit. You're allowing that to dictate your emotions while trading. Whereas if you set and forget, you're removing the visual aspect of it. So you're not seeing the price move up and down. Ergo, you're not going to have the emotional attachment because it's not visual anymore. You're looking away. But what if you're in the same boat that you and I are in, Will, where we have to be in front of the screen, even if we are in a trade? Then you need to start looking at whether or not you can find an alternative method to alleviate that feeling of I need to interact with this trade. I need to lock up profit. I need to ensure it doesn't go into stop loss, that kind of like stuff. That's the difficult part. It's being forced to be at the screen and not react.
Yeah, that's
the difficult thing. And I think in this case with Mixie, sorry that we're going so long on this topic, but this is generally a difficult one for a lot of people. It's that idea of being okay with a loss and being okay with it being in profit. And the only thing that you can ever look at and feel happy about is if you followed your process. If I've taken a trade and it goes to stop loss, that's a part of the process, because it's impossible for every strategy, or for any strategy for that matter, to have 100% win rate. It's just not possible. Well, it's not impossible. It's highly improbable. Like the likelihood of that happening is
I don't like the word impossible either, but it's highly improbable.
It's just so improbable that is something that's going to happen. So that then states the following then. If it's highly improbable that I'm going to win every trade, why am I concerned with when I don't win a trade? And the other thing is, it's how much emphasis you're putting onto the right now. So how you're feeling right now, the P&L right now, what this one trade would mean to me right now. The right now doesn't matter when it comes to trading. It's the further down the road that makes all the difference. It's if I continue doing what I'm doing right now, am I going to be profitable in the next 6 months? If I keep doing what I'm doing right now, am I going to have longevity in trading? That is what should matter. And you should ask yourself that question. So if I'm taking a trade and I'm like, if I close the trade right now, how am I going to feel? Instead of closing the trade and then saying afterwards, I should have kept it open. I was stupid to have closed it. Would you rather feel that, or would you rather be like, okay, you know what? I'm just going to let my trade go. I'm not going to pay attention. I'll watch a movie. I'll go touch grass. I'll mow the lawn, whatever the hell it is that I need to do. I'll do something that's going to distract me from this. And I'll come back and I'll just be okay with the result. If it was a loss, so what? If it was a win, great. But so what? That's kind of like the difficult thing. But that's the thing that's going to set you apart.
I'm going to agree with you, but I'm also going to disagree with you at the same time. When you say about trying to become profitable and asking yourself, am I going to be profitable in 6 months' time? Is this going to allow me to be consistently profitable in 6 months' time? I agree with everything you say, but that one specific quote, and I think you shouldn't care.
Okay, fair enough.
The reason
How do you not care? That's the question.
Exactly. And this is the difficult thing. The reason I'm going to give you the reason you shouldn't care first, and then we'll go into how. The reason you shouldn't care if you are going to be profitable in 6 months' time, because the minute you have to care, or the minute you want to care about profitability, doesn't matter whether it's 10K a month or £10 a month or $10 a month, doesn't matter. Profitability under consistency will be determined by the consistency of your strategy, or the ability to consistently execute your plan and your strategy. If you say, can I be profitable, or can I be consistently profitable in 6 months' time, or is this going to allow me to be profitable in 6 months' time, already you're subconsciously, you're not even subconscious, you're even just in that niggly back of your brain, you're asking yourself, you're caring about the P&L. Instead, I change, am I going to be consistently profitable, to am I going to be consistent? Stop. Just stop at that. You'll find out if you're profitable in 6 months' time. You'll find out if you're consistently profitable.
Fair enough.
That's
fair enough.
Only,
However,
other than that, I fully agree with you.
So here's the problem with that, in what you're saying. Being consistently unprofitable is also consistent.
True. Very true.
The sake of consistency.
How will you find out? And this is what sucks about trading. It's such a long game. And okay, the backtesting kicks in, of course, but backtesting can only do so much because it's past data. You've also got to look at present and future, so this is what sucks about trading, is, like you said, consistently unprofitable is still consistency, but you're not going to know until you've had consistency. And
that's the thing. It's and I think Shane said it very nicely. You should care, but you shouldn't worry. So you should care about where you're going, but you shouldn't be worrying about the outcome of it. Like, it's saying I have a goal, and my goal is all the way over there. What am I going to do in order to achieve that goal? So you should care about how you get there.
Yeah.
But you shouldn't worry about getting there. That's the thing.
Exactly.
I care about the process, and I care about my input into the process. I don't care about the result. So I'm not going to worry about whether or not I'm going to lose an account or lose a trade, or I'm not going to be impacted by it emotionally, or at least I'm trying not to be impacted. But you should be caring about where you're going.
Of course, 110%.
That's important.
And already, just by saying that, and you've agreed with me already, because what I was saying is, you don't care. Yes, you need to care, but by saying you care, if you care about your friend and something bad happens to him, you're going to feel emotional. If I care about the P&L, and something bad happens to it, I'm going to be emotional over it.
But you should be caring about the process and not worry about the P&L.
Exactly.
That's kind of like that's where we're looking at. Yeah.
We all want to be profitable. We all care about being consistently profitable, but we shouldn't. Or we should want to, but we shouldn't care about being consistently profitable. We'll find out at the end. We'll find out within a certain time frame whether or not we are profitable. And if we're not, that's fine. We need to adjust. But we should care and have emotion and care about our process. That we should care about. That we should be emotional about.
And a part of that is you asking yourself the question, if what I'm doing right now is the right thing. And if it isn't, if it's against, that's what I meant by my earlier statement, is you need to ask yourself, if this that I'm doing right now, me closing this trade early, is this going to help or harm my process?
100%. 100%.
Henry saying change care to focus. You shouldn't be focusing on the outcome, but you should be focusing on the process.
Exactly. I think you should care. I think you should care. I think you should just change the subject you're caring about.
But once again, that's the difficult part. It sounds so nice. It sounds so nice when we talk about this. But the reality is that it's difficult because
100%. It's so difficult.
it's when you're seeing something that you innately feel like it's going to provide you with something,
Yeah.
and then it doesn't.
Yeah, of course. No, yeah, literally
We
that.
have a certain expectancy when it comes to trading. I expect to have a certain amount of take profit when I follow my my strategy, and it doesn't work. We get dejected and we feel like, oh, I'm doing this for nothing or whatnot. We naturally want to attach an emotional reaction to an experience. In this case, trading, and there's a lot of people that disagree with us about this, but the strategy in trading doesn't matter. It is the approach of that strategy that matters.
I
It's
couldn't
your
agree more.
risk management, it's your psychology, and it's your willingness to accept when the market is not in line with your strategy, or your strategy is not in line with what the market's currently doing. The strategy itself doesn't really matter all that much. If you step back and look at everything holistically, then the strategy is way down at the bottom in terms of its importance. Everything else above that is, in my opinion, significantly more important for longevity, consistency, and profitability in trading.
Yeah.
Perspective, point of view, motive, process-driven versus outcome-driven. 100% agreed with this.
Yeah. Also,
Aberdolf-Linkler trading is easy.
I'm going to touch on this just real quick with Aberdolf-Linkler. Trading is easy. Rich, if I told you something is super easy, but to achieve that super easiness is going to be super difficult, does that make sense? Would you call that thing easy? So if I told you becoming an Olympic high jumper is super easy, but to become that Olympic high jumper is super difficult. Once you're there, it's easy because you're good at it already. You already know how to do it. You're super good at it, and so to you now, once you're there, is easy. However, to get there is difficult. No different to, let's say, for example, a gas engineer or a bricklayer or a scaffolder. Once you are or let's call it a doctor. Let's say once you're a GP. Once you're a GP. No, well, I'm joking. No, but hear me out. This is going to be the magic of it. Once you're a GP, being a GP is easy. I'm not saying it is. I'm not a GP. I don't know. But let's say that being a GP is super easy. However, to become a GP is super difficult. Is being a GP easy if becoming a GP is difficult? Because Aberdolf-Linkler.
It's two different factors that you're comparing.
Exactly.
You're comparing one thing, like for argument's sake, running. I'm a runner. I'm good at running. Am I the best? No. Is running easy for me? Yes, it is. Is it easy for me to become Olympian level runner? No, it's not easy. It's freaking difficult.
Yeah.
It's comparing apples to oranges. It's, in this case, the GP one is a little bit, because I don't think being a GP is easy.
I fully agree. But a GP may think being a GP is easy. Like my brother,
I honestly believe that the more you do something, the more you would find ways to make it easier. But easy, I don't think anything is easy. I don't think anything on earth is easy. I feel like there is a level of sacrifice, and I feel like there's a level of input that you need for certain levels of achievement. Myself, with my current level of input at the gym, I'm never going to be an Olympian. But going to the gym for me is easy. I can go to the gym, I can do my sets and whatnot. It's not particularly hard. How hard I drive it is going to depend on how easy it's going to be. But if I'm going to have to compare myself to my level of input versus someone that's trying to become the strongest man on earth, me doing what he's doing is going to be super hard. But for him, it's just like, well, I'm used to it now.
Easy, exactly.
That's kind of like what I mean.
For him, it's easy. It's not easy. It's hard, but it's easy. So trading for me, personally speaking, it's easy, but I've had 8 years at it. So to me now, it's super easy. I show up, I put in my processes, I walk away. I show up, I put in my processes, I journal, I walk away. To me, trading is super, super easy. Not saying that it's super easy to make millions. Not saying that whatsoever. because it's still difficult. No different to how it would be in a GP. It's super easy to him because I couldn't be a GP. I couldn't fathom it. My brother is super smart when it comes to maths and chemistry. I couldn't fathom, I couldn't comprehend maths and chemistry. It just doesn't. But to Ewan, it's easy. For him, it's easy. But to be able to do that, it was difficult for him, and he went through the struggle to become good at it, so it then becomes easy. Trading is that. Trading for me now is easy. However, 8 years of hard, bloody work, it wasn't easy. That was difficult. So yes, trading is one of the most difficult things you will ever do, in my opinion. It was super, super difficult to me. However, now it's easy because it's second nature. So therefore, is trading easy? Yes.
No.
But
No, it's not. It's not. Like, just straight up, because you're confusing your input to the average experience. So your input was 8 years, was very hard. Trading was hard. It became easier based on the amount of input that you put into it. On average, trading is still hard because there's so many concepts about trading that requires a lot of growth, and it takes time. It's always going to be hard until it's not. So trading is hard. Trading is hard.
It's easy.
It's what, like I'm saying again, it's your
easy?
experience. It's your experience versus the average experience. You've put in the time, and it was 6 years of difficulty and 2 years of, oh, I'm starting to get it. That's kind of like what I'm saying.
Yeah, yeah. I'm just playing devil's advocate here. I'm just creating a bit of a debate here. So yeah, no, I absolutely. Like you said, trading is super, super difficult. No one will ever take that away. It's so, so difficult. But once you get there,
I like this. There are some things that we naturally take in our stride, whereas other people's experience those same things as huge problems. If we lead into those, we find it easy. That's the thing. It's just like
100%.
It's the perspective. Once again, like Henry said earlier, it's the perspective around it. It's
of course,
and the same as Cam as well. Trading is the hardest easy money you can make.
Yeah,
try poker. Try poker. I'll fight you on that one a little bit. It's a hard way to make an easy living. That is what poker is.
Trading is one of those jobs, and because it's so easy, it's so hard. It's so easy to fire up a computer, to download an app, to deposit some money, and to press a couple of buttons. That's one of some of the simplest things you'll ever do. But it is so difficult. You forgot to mention geography, Will. Shut up, MGN. Yeah. My geography.
Gaza is asking us to get back to it, so get back to the charts. I see
we've had to get back to. I'm just waiting for GU to hopefully hit TP.
You're currently sitting in it.
Yeah, gold's finally starting to find some momentum to the upside, but we'll see.
GU climbing,
it's okay
UJ
on the 5-minute. So the 15-minute consolidation is beautiful. The 5-minute breakout is nice, but it's not the most valid entry in the world. If this 15-minute close was on the 15, I would have taken this on my 100k account, but nonetheless, it didn't close on the 15. So I thought, I'm just going to play about on this play account and see if it takes. However, it's not strong enough to take on a funded account. Same with GU. GU's nice. I would have liked to have traded GU down here. However, this was at 7 in the morning, not like 9, or half 8. So couldn't trade that, unfortunately. So we're going to see if we can get in on like a really late leg.
A really late leg, you say?
Yes. Going to see if I can get on the toe of the leg instead of the thigh.
So we did not get as deep of a pullback into NASDAQ I would have wanted. Good morning, Marvin Chetty. So we did have this little area of interest where we broke through now multiple times. We've retested it. That was effectively the pullback that we had, and then a nice bullish close. Now, unfortunately, I did not get in on this. So the problem is that I I think that we're getting a little too close now to this upper segment that I marked out earlier. And with this pullback not being as deep as I expected, I'm a little hesitant to get in. If I'm going to get in, I would probably wait for the hourly to potentially come into this area, test it, and see whether or not we can kind of get some downward action there. So we have 7 minutes before this hourly candle closes. On the 15-minute, it's 7 minutes as well. So all of them is going to align except for the 5-minute. I want to see whether or not we can actually reach this base area and then slow down, start reacting, maybe pushing lower, or potentially just breaking through. And then I will decide. So missed the opportunity to get in based on this reaction here. If I had gotten in on the close of that one, TP4 would have been way above that zone, which makes it less likely because it was an area where we had already a singular reaction off of. And if I go onto the daily, we've been having a bit of a pullback now. Maybe I can zoom in like this. Yeah, we've had a bit of a pullback. Friday. Sorry. So the week itself opened up and we closed the week out bearish. So if you go to the weekly, you'll see that we had a bearish candle. And I want to see whether or not this is actually a singular bearish beginning. Obviously, it's going to take a few days with the weekly. But on the daily, I can see today it's a little bit slow. We do have the whole high of yesterday. Well, let me just go back here. We have the whole high of Friday that we can come and test after we've already swept the low of last week Friday. So we have quite a bit to come and test already. But I just want to see if we're going to carry on pushing up. Long way of saying I'm cautiously looking at the price, thinking there's a potential for us to continue lower, because we've already tested the low of last week Friday. So, and it's very bearish since last week Friday. So I kind of want to see us break in there and then continue lower again.
Yeah. Nice.
MGN saying, have a look at the current area on GU on the hourly, Will.
I'm on the hourly on TradingView, and I'd love to see price take 133,941. Yeah, that box that you've marked out there, mate. The low of that box is like the high of that bull candle.
So very, very bearish Friday. Thursday, sorry. Very bearish Thursday. Little bit of a struggle during the Tokyo session last week, Thursday, and then a strong New York session. Rollover onto Friday was a little bit weak. A strong continuation of the bearish price action. London came back and retested that base. This is a base, by the way, because it is a drop 1-2 candles opposite direction and then a continuation drop. Price came back into it and then continued pushing lower. So right now we're getting a strong reaction initially. So this might be a breakthrough with a potential push higher. To where can we go and test? First and foremost, obviously, we have this bullish order block that we can come and test. If we continue pushing bullishly, we also have this area of interest right over here. We had multiple tests of it as well. So if we do break through, these are the two areas that we can come and test, potentially pushing higher. I think this might just be a short form. Let's take it from there all the way down here. There, 0618 is roughly just below this area of this order block. So we can potentially come and test in this area and then start pushing lower again. But by that point, wouldn't you say that we're a little bit more bullish in any way? Or are we just continuing the daily downward push?
Yeah, I don't know. I'd like to see price move a little bit higher first. I think we can move up into that area that area that you just marked out on the hourly. I think we can move up into that. I think that would be a nice little zone for us to move up into. And then we'll have to see what happens from there if we react from that.
Yeah. Benjamin, guys, can you please address the payout delays? I'm waiting for 10 days for mine. For any payout delay issues or any payout queries, please contact help@the5ers.com. We've addressed the payout delays every single day for the last month and a half. Please reach out to the5ers.com, help@the5ers.com, and they will give you a what do you call it? An estimated time of arrival.
ETA.
Patel asking for gold view. Gold.
Gold's okay.
Yeah.
I'm hoping for a stronger close on the 15.
We've slowed down significantly with this downward push that we had last week. I mean, we had consolidation for the majority of the week, Wednesday, Thursday, and then eventually Thursday evening we had the breakout, and then with rollover we had the retest, and then a sharp drop on Friday on gold. And then the rest of Friday just ended up being a slow downward march. So a little bit of a slow movement.
Yes.
Good morning.
Guten Morgen.
Good
How is
morrow to Dirk.
Buddy, how are you guys doing? All good?
Not too shabby.
Not too shabby. Not too shabby.
No, not too shabby at all.
It's like the new motto for the 5ers. We are not too shabby.
I don't know if that is a good thing.
Yeah, I don't know if that would be a good marketing.
I want to run that by marketing first for you.
Yeah.
Yeah, I was about to say, we should go and talk to them
We're
first.
not too shabby.
Yeah. Join the 5ers. We're not too shabby.
Oh, I mean, that's something.
I mean, the British might like pick up on that. They'll be like,
Yeah, to be
yes, they are not too shabby.
us Brits would be like, huh, they're not too shabby. Right.
Everybody else is probably like, not too shabby doesn't sound great.
that's
Brits are like, this is fantastic.
it's fantastic. It's like the typical British understatement.
Yeah. Yeah, literally.
The only thought when I think about not too shabby is an old CTM. CTM was a tile, or is a tile company in South Africa that had an advert, and the advert was two people. One bought from CTM, and the other one didn't. The one who did not buy from CTM, his name was Nigel, and his neighbor who did buy from CTM was asked by Nigel, how's it going today, as his new tiles are being brought into his home. Him standing on his steps of his home, looking at the tiles and saying, not too shabby, no? Hey Nige, not too shabby. And that's the advert.
Is that where that comes from? Is that where you get your not too shabby night from?
Yeah, that's exactly where it's from. Like, I don't know why this particular advert is ingrained in my brain, but it is.
No, but you know, I think I preferred like this rather than what the typical American response would be, which always is like, "Oh my God, amazing, man, amazing, great, the best ever."
The best ever. I can just imagine Dirk as an American.
Well, I spent a year of my life living in America, so.
And then you decided to leave, which is pretty much everybody else's experience, I would think.
To my defense, I was 17 back then, so staying there was not really an option yet. So.
That's true. That's true. Did you enjoy being a cowboy?
I did. I enjoyed being a cowboy in Minneapolis, yeah, and St. Paul.
Minneapolis. St. Paul, Minneapolis. Nice cold weather. You're saying America, like Minneapolis is more Canada, I would say.
Oh, don't tell them that, man. But in a nutshell, you're probably right, yeah.
You brave man.
They're
saying
more
that.
north than a majority of like the Canadian like southern border. Like
True,
they kind of like push into Canada, basically.
True. And yeah, it's like super cold in the winter with like minus 25 degrees. I think I mentioned this
Wow,
before. Yeah,
fun.
also
You did,
I would
yeah.
like wait for the school bus, breathing through the nose, and I could feel the liquids in my nose like freezing. It's like a very odd feeling, really.
Yeah, and when you blow your nose, it's like, why is it so solid?
Yeah, exactly. Why do I have? No, I'm not going to continue down with it.
Yeah. We'll leave the imagination do the rest of that one.
We've been telling everybody in chat that Dirk is absolutely hilarious.
Yeah, but nobody's going to
I'm
believe him.
I'm glad that Elvin has finally, came to the same realization after we've been saying it for a while.
Well, thank you, Elvin. I'm very happy that finally I can, fight the cliche on my fellow Germans. Deary, hello, Abradolf Linkler. How are you doing, my friend?
Abradolf Linkler. If anybody has ever watched Rick and Morty, they will understand what Abradolf Linkler is about.
Yeah, absolutely.
like
The dichotomy of morality.
Yeah.
By the way, they have this other show also called Solar Opposites, which also is really quite
Yes.
funny. I quite like that one as well.
Yeah, it's the same creator,
Yeah.
Dan Harmon.
Yeah, exactly. In the first, what is like 3 or 4 seasons, they also have the same voices. And when they fired his partner, they changed like to an obnoxious British voice for the main character, which I also found quite hilarious. Hilarious.
It's obnoxious, but I find it funny.
Yeah.
I mean,
Dirk, if we carried on talking, I'm pretty sure that Will is going to
I'll just leave.
panties at this point in time. He's just like, screw you guys, I'm just leaving.
You're
I'm
going
just
to be
gonna-
back in 2 hours anyway, so.
Yeah,
Yes,
exactly.
yes.
I'll
Speaking
just
of which-
slither out the back door and just be like, bye, guys.
It's kind of like, would they notice?
Yeah, do you reckon they'd notice?
Would they notice? I don't think they'd notice. I'm just
Disappeared right now.
going to disappear.
We will
Well,
notice,
let's do this.
and we will miss you. Don't do like the stuff where you accidentally leave your camera on and then you come back like half naked or something.
Out of the shower, still lathered up in.
And suddenly we
crap.
have a not PG rated live stream anymore.
It's for adults, but it's PG adults, guys. Come on.
Just seen CC Cat Lady. Your red hat looks like one of those "Make America Great Again."
Make England. It's
make
mega.
England
Make England
great
great again.
Can you, how
Make
how
Wales great.
controversial would that be if I came up with a "Make England Great Again"? Make Britain Britain again.
Well, as a British gentleman, you could still wear this. Imagine I wear this as a German. Make Germany great again.
Fair, yeah, true that.
Yeah.
Anyway, on that bombshell, guys, I'll see you in 2 hours.
Peace. See you then. Bye-bye.
Yeah, let's not walk down that road.
That's not better.
Yes, because the question would then be, which time frame of German history was the greatness of Germany? Anyway,
Anyway.
shut up, Will.
Anyway.
Yes. Anyway, we move on.
Yeah, let's move on. Have you been trading anything already today? After
Yes, I
your
did.
extremely successful last week, no?
Yes, I did. I will show very quickly. This was one that I was just showing. Like it's too high up into the leg movement already for me to want to participate.
Yeah.
So I still need this hourly candle to kind of like show me what it wants to do. I am overall bearish on NAS. So I would prefer if we were to come back into this little base area that we had, continuing this downward movement. However, if we don't, I'll just buy up higher. Anyway, I did get a 5-minute... I did get a buy this morning. We were struggling to move past this area over here during the Tokyo session. It did look like it was really slowed this morning, considering that we had a relatively bearish end to last week as well. I was considering this to be a continuation pushing lower. Didn't really give me what I wanted, but then it started having a little bit more bullish conviction pushing up higher. a singular pullback, and then a strong continuation. But before we had the strong continuation, we basically tested the 50 EMA, which I was like, this is good enough for me. We've created a zone down here. We've reacted off of it multiple times, indicating it is a strong area of support, at least for the time being. We started reacting volumetrically out of it, which to me is great. Establishment, reaction off of an establishment, and then a rally-based rally. In this case, it doesn't look like it, but this is a bit of a bearish candle. At least it opened up ever so slightly higher. And the fact that we had a long wick rejection off of the 50 EMA just solidified it to me. Got in, it reached TP1 relatively quickly, reached TP2, and then went all the way back after my stop loss had already moved to break even and then knocked me out, and then continued up higher. So
I actually like to see something like what you just called. I always call them pin bars, the rejection.
This one, yes.
And I quite like those. There was a time in my life as a trader where I was solely trading off of these, and it worked beautifully until it didn't anymore. Like how it is, with trading strategies always. But it's funny, like I kind of was trading the same pattern on the Aussie this morning. And I was seeing exactly this, by the way, on the NASDAQ as well. Let me switch over to mine quickly. Here we go. So I kind of, when I arrived in office, I was looking at the Aussie because Aussie has been quite good to me last week, especially on those really scalped kind of trades. And I kind of thought like, well, we are quite nicely support in this case. We are like bouncing off the 21 moving average here all over again. So once we saw that, let me zoom in a bit, like a little bit like a stronger, almost exactly at 8 a.m. my time, a stronger candle to the upside. I thought like, okay, that looks like, London session starting. Maybe it wants to go a little bit higher. I thought it's invalidated when we, go on underneath 71.25. So really narrow stop loss, put in a 2.5 R, which was at that time as the +2 sigma. Well, not quite as the +2 sigma. Of course, the channel looked different at this time. And then I just let it sit and play out, and it worked beautiful. The beautiful first trade to start into a week. And I saw kind of the pattern you just showed me on the NASDAQ as well. The reason I didn't take it actually is because I didn't want to be too much exposed into one direction. Yeah. With Aussie dollar going up, NASDAQ going up, probably as the NASDAQ futures were driving the Aussie dollar, in my opinion, as well. And it's actually also something I like to see, because I thought this morning to myself, if I want to take a trade in the US dollar or in US indices, it'd rather be in the early session, because I don't really know how things are going to be later when New York comes in.
We'll see.
Especially again with everything Trump has tweeted, like the usual threats of bombing Iran into oblivion and into the Stone Age. Then he posts a picture of him walking with an alien. It's just like, what the hell? It's madness.
I was going to say, I don't think that Trump is an enigma anymore. I think I completely understand him. He's just batshit crazy.
Yeah, absolutely. Absolutely.
He is cuckoo, cuckoo, cuckoo.
I mean, to my surprise, he didn't do too many wild things when he was in China.
Because they lock his ass up.
Yeah,
that's what they do.
Like, first of all, that
someone else's country.
Second of all, he also didn't understand like what she was telling him between the lines, like this reference of that the USA is a declining power. He absolutely didn't get that metaphor, which I thought quite funny. Nope. The next thing I found quite funny was when this scene of Elon Musk, sitting on this. On the table, everybody's like chatting with each other. Elon Musk is not, because he's very introvert. That's okay. And then all of the time, the Chinese officials coming to him wanting to take selfies with him, until he at one point was like, give me a break, guys. Yeah.
It's funny when Elon Musk, the richest man on earth, is more popular than the president of the United States.
Really. And I super liked, I must say, the Jensen Huang from NVIDIA, the CEO. He was just like basically eating his way through Shanghai or where
Yeah.
they Beijing. It's like so fun. I super much like this guy.
He's
It's like,
gonna take
"Oh,
over.
you
He's
know,
gonna
I'm in
take
my
over
hometown
Shanghai
again. I
one
can,
plate at a time.
yeah. I need to eat.
Yes. I see that we have a Mr. Bart Steenhorst in the background.
Bart is back. Nice.
Bart is back. Give us a thumbs up if you are ready to hop in, sir. He is ready. And
Yes.
there we go.
Welcome back, Bart.
Yes.
Good to see you again.
Perfect.
Goeiemorgen, Bart. Hoe gaat het?
Goedemorgen. Yes, thank you.
Goedemorgen.
Yeah, it's going great. It's nice to see Dirk again, and
Thank you.
now with Richard. That's nice. I've been looking to the stream like for 30 minutes, so it's looking good.
That's good. That's good.
Sure.
Happy to have you.
Absolutely.
Yes.
With Bart and Dirk here, I see LJ is in, but he's running a little bit late. I am going to hop out because I need
Too bad.
to head to town, and I've only got an hour and a little bit to get back. All right,
Go
Bart,
Bart.
have fun, and we'll chat to you guys soon. I'll hop in the next 2 hours anyway, so I'll see you guys soon. All right, guys, have a great day. Enjoy, and we'll speak soon. Bye.
Bye.
Yes. Bye, Richard.
That was Richard. How are you doing, Bart?
Yeah, good. It's Monday again, so we need to work again, but it's also very fun to do it. And
You're not too
yeah, last
disappointed that Max Verstappen didn't finish the 24-hour of the Nürburgring.
yeah, a little bit disappointed. I
Were you
think
actually
you're
watching
more. What did you say?
Did you actually watch it a bit, or?
Yeah, I watched a bit, and like the end, I saw it. But I think you watched it more than me because
Yeah, I
think
probably
you're
watched
more.
like 14 out of the 24 hours. Pretty neat. I like actually GT3 a lot, but I mean, that whole thing was mayhem. But anyway, we can later, when LJ joins, talk about this again. Question for me is, of course, with to you, because I know you're very active in trading gold, like you kindly showed us last week. What do you make of this decision? Is anything going on in your EAs regarding gold? Probably not, no, because I remember you have like a long only EA running on gold.
Yes, that's right. Yeah, if I look to you chart now, it's a bit difficult. The only thing I did today for a buy order is from the S&P 500. So that's yeah, interesting. Let's see.
Oh, you
I
you
can
along the
do-
S&P. Nice.
Yeah, so if you see my screen, I can put this away. I have him now on the 1 hour, the S&P, and what I see are two things. The first is that we're still making a higher low. So we're still an uptrend, so that's good to know. I think if we break like this level here, then I'm not sure what we're gonna do, but if we break this, I think we will go far lower, but you will never know. And for now, why I did a buy order, I have it now on my chart, but I use the IBS. So yeah, I think Dirk, you know what the IBS is?
I have no idea.
It's like a bit the same of the RSI. So it's when the market is high, the RSI is also like very high, like 80, 90. And when we drop very low, then the RSI is also very low. And I want to buy in if the RSI is on the daily, like under 20 or something. And like Friday when we closed the market, it was like under 20. So what I did is I did make a buy order here, and now I'm just letting it yeah, just roll and just watch how we go up, I hope. But yeah,
So you
we
based
never
on the
know.
RSI or on what did you say before, IBS? Or?
Yeah, IBS. Yeah, it's almost the same like the RSI. So it's also like a line. Maybe I can.
An oscillator, so to say, that that works in mean reverting market. Yeah, okay.
So
It looks
now it's a
almost like
bit.
the RSI actually. Yeah.
Yeah. So you
Bit
see
more
here
reactive.
sometimes
Yeah. It's
now
funny.
we're on the 1 hour.
Funny that you mention actually the RSI, because I'm working right now like on a modernized version of the RSI, because I think the classic RSI is really super outdated in the way, you know, it picks its smoothing period, in the way it like this RSI length of 14 is somehow always the standard, which doesn't make any sense. So I can show you guys that later. Actually, I'm actually working on a more modernized version of it that kind of adapts to the current market regime always. But more on that later. Please continue first.
Yeah. So you see here we did close under the the 0.20, and I did not buy the Friday, but I did it today. So my entry is a little bit lower. So it's here now. Yeah, and now I'm just letting it go. So for a few days, I hope to get it back. But yeah, we will see. And if you look to the past, you see here we go under, and if we close above, that's the only time I close. So sometimes you can have really big losses if don't close above it. And you see here just like little wins. So here just a little, here a little. So this is one of my best strategies. I would say it really picks up when we got a little bit down and then we got in. So this period of the market, it goes really well. So that's nice to see. And also if you see here, I also use always like data from the past, and here you can see it slowly goes up. And you also can see the other line, that's the blue line, that is just the buy and hold line. And you see that buy and hold is doing the same or even better, but that's with trading, you can't just buy and hold. So
Yeah.
most of my strategies are almost the same like buy and hold, but the thing is now I can trade and go in and out, and that is far better if you want to trade with the 5ers like a prop firm.
Does IBS stand for internal bar strength?
Yeah.
Okay.
Yes.
Then I know
I
what
just
this is. Basically, just you do. If I'm not mistaken, that is like close minus low divided by high minus low, and basically like this, you can see where is basically the close sitting in terms of the whole body of the candle. If I'm not mistaken, I think this is like a quite well documented strategy, especially when it comes to trading the NASDAQ and S&P 500. Very, very simple, a bit like Heikin Ashi. Also, not quite, but it can show you. It measures basically mean reversion. No, if you see like you have an uptrend and then you suddenly have a candle that closes very low in terms of the overall which we had on Friday, thus your system probably made an entry there. Then this gives you a trend confirming long signal, so to say.
yes, it really is like a mean reversion strategy. So that works really well
Jay is
for
in
me.
the house.
Morning, guys.
And
How we doing? Sorry, I've been in the
Not
background
not too shabby.
no worries.
punching out some work. So I wasn't here over the weekend, so I had some time-sensitive stuff to get back to. Just got home. So how we doing, Bart? Good to see you. Welcome back.
I'm good.
I'm so happy you're back
It's
again.
nice. Yeah, and nice to see you. It's like on the Monday, so I didn't know you were also today. So that is nice to see each other again.
Yeah, brilliant.
Brilliant.
How you doing as well, Dan?
And
You good?
Not too shabby, not too shabby. A little bit tired still because I was watching a lot of 24 hours of Nürburgring.
Oh, yeah.
I watched like 15 out of the 24, I think. So didn't get that much
Nice.
sleep. Tried to catch up a little bit there. Tried to get into the office early this morning because markets were moving, and I wanted to get some trading done before the USA comes in, because I kind of have a feeling we are going to see some a bit like crazy moves this afternoon, especially after what Mr. Trump has been tweeting in terms of total destruction of Iran, or weird pictures of him accompanying an alien in handcuffs. So yeah, the usual crazy.
Yeah, it's almost gotten to the point where that did tend to signal like something's coming.
Yeah.
And now it's almost like he just does it just all the time.
For the
just
sake of
does.
it, yeah.
Yeah, and now I'm also kind of, do you even bother to try and place for this? Like it's so odd, honestly. Like the whole the boys thing, right? Where they wrote the scripts way before all this happened, and it's all sort of come through.
True.
It's now it's just too much of a very weird eeriness.
It's like,
Yeah.
come on, wake up.
So yeah, I don't know. I agree with you though. I think FX vols and stuff have been pretty low, that kind of thing. So I think we are very much sensitive to some kind of move, even with last week's moves where it was just kind of one direction, just basically dollar buying, which came into that positioning for potential US hikes being further priced in, and kind of that rewind of Kevin Walsh potentially not being as dovish and Trump favorable as people previously thought. So, or might have not thought, but leaned towards, because obviously his past is that way, but he's spoken in the past couple of years sort of back and forth. It's going to be tough, but yeah, I hear you took an Aussie trade.
I did.
morning.
Yeah, I thought
Yes.
I'll make you
Okay,
proud again.
nice.
So I had the excuse me, Bart, just really quickly switching back to my chart, just to show off to LJ, of course. So I had the choice actually this morning between going long NASDAQ or going long the Aussie. The Aussie triggered a little bit earlier because we kind of had this zone of support here. Obviously, the standard deviation bands look different when the trade triggered. But I thought like we got at London Open deflected quite nicely on the 5-minute, again from the 21 moving average. So I thought, this is a tight stop, either it goes or doesn't go. Put in a 2.5 R for this trade, and it triggered basically within like half hour here. So that was very nice. I just told Richard I was also looking at the NASDAQ, but I didn't want, too much directional bet in the same direction at least. So for me, it was like, well, Aussie moved first. So I'm going to take this trade later on when NASDAQ started moving. Actually, that was a bit of a confirmation. Of course, again, in hindsight, I could have worked here with take profit zones. But for now, I'm just happy, that I seem to, I shouldn't be saying this because I'm going to jinx it, but that I seem to get a better understanding on the shorter time frames, when Aussie is going to make a move or not. Thanks to you, my friend.
Yeah, good. I love it because I saw the other majors were also moving this morning. I didn't take any trades this morning. I was busy with other stuff, like I said, over the weekend. I was away, I was coming back, that kind of thing. But I did check in. I didn't want to monitor it though, because we did have that downdraft through the morning, and obviously last week we were very, very persistent downside across the board for the majors. Any of these lifts that we did have were pretty quickly kind of stalled partway to the top targets and then just gradually came off. So I was like, okay, I'm not going to be able to sit on this. But yeah, I like it because I did cross-check that with, I think the only thing with the NASDAQ, I think that kind of the correlation is somewhat disconnected.
Yep.
Now, recently, obviously. So I think stocks have disconnected in general from everything.
Yep.
Right, across the board, even bond market as well.
Yeah.
They're just doing their own dance for now. So yeah, I like it. Very good trade.
That's
Very
the
good.
other. Thank you. That's the other thing. I think later on we should talk about. Dollar yen, obviously, and
Yeah,
what's going
that's an
on with
interesting
the. I mean, look at the yields for this is just the 10-year picture. Same at the lower majority yields, like side by side, USA and Japan like jumping up, and that tells you obviously a lot about what the expectancy when it comes to inflation also is. So the expectancy, especially in the USA right now, is no, rate cuts are off the table for the moment. Inflation needs to come down, and probably it's going to at least temporarily go higher first before it comes down. So the longer we see the conflict with Iran going on, the longer we'll see these elevated rate levels because we're going to see elevated energy prices. Now, I read a piece which I very much agree with when it comes to Iran. Probably, Trump might be placing China as the how to say that in English, as the country leading negotiations between the USA and Iran. So the role that Pakistan did up to now, and then Trump is going to pull a piece like, let China take care of it. Strait of Hormuz is open. It's a total win for us. To kind of get out of a situation with still keeping his face. I mean. Trump being Trump, they probably could explode a nuclear bomb in New York, and he still would declare a total victory. But
Yeah, it was like, look, it was our bomb. We did it ourselves, so it was our choice. We won, right? That's just the
it was
people's
Joe
choice.
Biden's fault. Joe Biden.
That's right. Yeah, it was Joe Biden's fault. Sleepy Joe. He fell asleep on the button, and it just happened.
Thank you, Henry. Mediator was the word I was.
Mediator, yes, that's the one. Yeah, I agree. I think they. I don't know. It's tough because I mean, we've talked about this before. Obviously, the longer it goes on, yes, players like China will eventually get dragged in. If there is this kind of stalemate grind where there's just kind of no one's really winning, no one's really losing as far as US and Iran. They're just in this locked period. So you do need someone else to shift the ground. And obviously China is going to be the major player to actually do that really has legs. Other people can comment. Even if they try dragging like the EU or the UK, Iran will be like, all right, go away, right? So I do agree with that. And then hence I think there might be some sort of trade like tariff concessions. Like we've already seen a bunch of those talks kind of coming back in line. And the US kind of goes like, well, we'll cut a couple % here and we'll do agreement here and rah. We just need you to, push Iran along and get us across the line, right? We get our win, you get your win.
Yeah.
The Iran thing being over is also a win for you. There you go. So I definitely agree with that. I don't think it's much that we'll actually hear about it. I think it'll be very behind closed doors.
Of course.
Even like we saw with the talks, it was very vague. Everything they talked about it was very just top the line, top brow type stuff, no depth. So I think we'll see more of that overall. I saw Henry before you said I need some German engineers to fix my elevator. Honestly,
you don't want an elevator built by me.
If you've got someone
to be death trap.
the elevator, that would be great because we've still only got one. We've had one for a couple of weeks, and then I've been away for the weekend, so I was concerned coming home that because it's been raining over here for the past couple of days straight, that even coming home, like I wouldn't be able to actually get in the door, right? Fortunately, I did. So yeah, it wasn't that. I just got swamped with a bunch of things I had to.
But you know what? I had to think of you this morning when I arrived in office. The elevator was not working as well, so I had to climb up like 10 stories. And it's like, I'm getting too old for this.
Yeah.
And but I had to think of your situation there. Yeah. One question I have for you actually. What do you think of or did you have time to go through the RBA meetings that came out?
So I think the minutes,
Yeah.
that kind of thing.
I didn't have the time to go through them.
I think it's pretty by the by. I think the other big portion is that we had last week. We had the Australian budget, right? This is going to change a bunch of things. There's probably going to be a lot of back and forth. I think as far as the RBA itself, if we just try and isolate that, they did communicate that for now they're probably more leaning to a bit more of a hold situation rather than just another rate increase. Doesn't mean the rate increase is off the table. It just means we're probably not going to get it at the next meeting. There might 1 or 2 meetings later, and then if things are still progressing the same way, then we'll push forward. One of the big things dominating Australia right now or the Australian sphere of chat, is the changes to taxation. So they've gotten rid of a lot of the, not a lot of, they've just gotten rid of altogether the capital gains tax discount.
What?
They used to get a 50% discount after holding something for a year, right? So if you're at the top marginal tax rate, sorry, if I keep pulling up my hair right now, it's pouring down here. I'm kind of soaked. I'm a bit drenched right now, so it's irritating. I can feel water droplets.
So, oh my God, your aircon also not working.
But hey,
your aircon not working also? Or?
No, well, I mean, it's cool right now. It's just very humid, but no, it won't work because it's too humid.
Yeah.
But back to the topic, basically. So yeah, they've scrapped that. So if you're at the top marginal tax rate, which would end up being 45%, then there's like 2.5% for Medicare, health stuff. Discount that by 50. Basically, you pay 22.5% to 23.5%, depending on a couple other fees and that kind of thing. Now it's going to be a minimum of 30%, and then you only get a discount based on inflation.
Okay.
Going forward, which is what they used to do, and they got rid of it. It's also an accounting nightmare.
Yeah, that was my initial thought just now. Yeah, how do you account this, or how do you reflect it in accounting?
Yeah, because one of the biggest things, like obviously, if you've got certain assets like housing or something held over certain periods, like you're going to be holding that. You can basically, except for the first year you buy it, whatever month, you can go the divided months of that year. That's the CPI, and then every subsequent year, it's just you take the yearly CPI. The trouble becomes when you have things like, say, if you're dollar cost averaging, you got to go and figure out the date you bought every single share, every single ETF, every single whatever, and figure out that date and the inflation indexing from that period to whenever. And especially if you jumped out in between or this and that, or it becomes an absolute headache. And they've done it for companies, it's across the board. So if you build a company, sell the company, you're now getting killed on tax. Like, say if you $50 million company, probably raised a bunch of money. You've got some founders, maybe you and a friend or yourself, or you've brought in other people. You have to give equity. You get some fundraising. You've got legal fees, accounting, all this kind of stuff. You sell your company for 50 mil. You spent 10, 15 years doing that. You can walk out with like 1 to 5 mil now on like a good day. And if you divide that up by the number of years, it comes out to 150, 200K a year.
This is like the typical thing that is going on in the Western world. It's like the risk for an entrepreneurial adventure is on your shoulders. And so the loss is individualized, but winnings, profits from it are socialized, And I don't understand this. And it's like, the governments are trying to dig into as many sources, of taxation as they can instead of reducing bureaucracy. And I'm quite happy we have Bart with us. I think the Netherlands are a good or rather bad example of this. With you guys, now initiating something like that, you have to pay tax on unrealized profits. Meaning like you buy a stock and let's say it's up 20% on the 31st of December. then you need to pay tax on these 20% unrealized gains. They don't care about that maybe 2 days later, the stock is like at minus 50%. Extreme example right now, but it's like incentivizing people to not go into risk on assets by the end of the day. It doesn't make any sense.
Or not even assets, just
Or
risk
assets
on in
at
general.
all, yeah,
Like
yeah.
starting a business. Why would anyone start a business? And then where are people going to get jobs?
Yeah.
Right?
Right now, and it's the same
it's-
here. I mean,
it's nuts.
for stocks
insane.
like realized profits, it used to be here that if you held a stock like for 1 year, all your winnings would be tax-free from that. They got rid of that many years ago, so now you pay like 25% in tax office, which I think is okay, but when Bitcoin used to be or is still tax-free, if you buy Bitcoin, you hold it for a year, it's tax-free. And which was nice. Now they see that, oh, wow, crypto has become popular, let's put taxes on this also. And in the same breath, they do like changes to health insurance. Oh, well, you are married, your wife is stereotypical staying at home, taking care of the kids. She cannot be underinsured under your health insurance more. She has to pay €250 per month out of her own pocket to be insured. So if you have this, and this is especially bad, like for classic families, where you have like a single household income, and let's say like somebody's earning like net like 2,500 or 3,000 euros, which is like somewhere the median income, net income here in Germany per month. And for these people, paying another 200 to 250 on top of that, like really matters to them, That's like 8 to 10% of the income sometimes every month that's just disappearing. And instead of this, like people who are jobless, they get like insurance paid by the state and everything. So you can feel here in Germany, people are becoming angry about this, and righteous so, because they feel like, hey, us small guys, you're taking more and more out of our pockets. Why not tax the rich a little bit more, to be fair? Which they don't.
Exactly.
Do the same thing like in America. And I'm so concerned about this, honestly speaking, because it's not going to result into people, going onto the street and protesting against this and doing something about this. It's resulting in people being driven to right-wing parties, like the AfD,
Yes.
Alternative for Germany, Alternative für Deutschland, here in Germany, which is in many aspects a very right-wing party. So I already told my wife, if they have, according to people running around getting quotas, what would you vote for at the moment? They are ahead of everybody else, of all the classic parties in Germany right now. For me, there would be a reason to actually leave Germany, because my wife is Indonesian. My daughter is half German, half Indonesian, has 2 passports. And we already encountered, things like that she gets like certain comments when she's by herself walking down the road. And it feels like once that happens, that these right-wing parties really get elected, it's only going to get worse. And what they don't understand is that, first of all, those parties, they are all about promise, promise, promise. They're not going to change anything, really, because they cannot. They're not willing to do that. They want to be re-elected as well, or they are changing the wrong things because they think it's all the foreigners' fault. But what by the end of the day is going to happen, and I see the same for Australia with what you just told us, they are going to drive the capital that matters out of Australia. Why should I found a company in Germany? Why should I found a company in Australia if I know like I'm going to get pennies on the dollar but I have to take the full risk of bankruptcy? And we like 8 out of 10 startups, 9 out of 10 startups are failing. It's normal. It's a process. We've all been there. I had several businesses that failed. It's part of the progress, and it's just unfair.
That's the point of the incentives, is to curb some of that risk so that you don't hit that, so that it's reasonable enough that you can take just enough risk, because you sacrifice so much for your life, like family, kids, relationships, all that kind of stuff. You're pumping everything in. You're probably sacrificing, living standards, that kind of thing. You eat differently. You don't go out. You don't do this. You don't travel, whatever. You're pumping everything in there. And eventually you employ people. And often then when you start to expand and grow and employing people, these founders often take less than what they're employing
Yeah.
their employees for, in the hope that eventually you get that gain. It all pays off in the long run. And so, you're getting now, there's no incentive to do any of this. So, there's a whole bunch. I feel like we can talk about it after in the next hour. I know
Yeah.
Bart's only here until the end of the hour. So, because I was going to bring it up in general because I've had a number of you guys from the Discord actually DM me about this stuff. Bunch of you Aussies out there, which it's always funny where there are a few of us, but more spring up all the time. Like, damn, there's actually quite a few of us around here. So,
Nice.
I basically said like, look, we'll chat about it later on. So, but for now, we can hammer back into the charts. We can have a little rundown of that later on.
And just, I know we sometimes get taken away on stuff like this, because it's irrelevant for us, obviously. A right question to ask, how is this helping with our trading? It does, because one of your tasks as a trader is you need to be aware of the overall sentiment. And if somebody like LJ, who is a businessman and I humbly call myself a businessman as well, is talking about, I see this and this problem, then this probably translates even more to like bigger companies when both of us run in our areas. And if we see the same picture in Australia and in, for example, Germany or Europe, so at different ends of the world, we can safely probably say, this seems to be an overall trend, and this is for sure going to reflect also sooner or later what we're going to see in currency rates. And not now, not for scalping, not for day trading, but since our part here at the 5ers also is to incorporate macro and fundamentals into trading, it's something that's not of immediate concern to your trading right now, but something you need to keep in the back of your head to understand, trends, like long-term trends, which then are going to affect your trading as well. But fair enough.
And it does. And
get back to the charts.
Same with Australia. Basically, just on what you're saying, how this helps you trading is there is a currency influence with this because obviously it's potential repatriation of funds. Like people have a certain time frame to get the discount now, and then after that, it's gone and it rolls over. A lot of Australian investing, yes, there's a big portion in Australia, but again, because of liquidity and because we have our superannuation funds, which are massive and they've been world leading, everyone is trying to copy us now. But even because they are so big, a lot of those funds have to go overseas. And this changes the whole dynamic of everything where people are going to shift assets around, money coming back, this, that, blah, blah, blah. And also goes further into the whole interest rates aspect as well, which is now driving the Aussie. Yeah. And a lot of that has come from, we've got these inflation inputs. One, there's been the discounts on energy, which have been pulled back. And then there's a huge portion that is coming from government spending, that kind of fiscal dominance thing, which we've seen globally, which is pushing up inflation. Right. And now, hence, they're obviously trying to reap more tax to push more of this stuff and spend more. So it does actually have an effect on this and potentially does actually keep inflation elevated and then hence push rates higher or keep them higher. So then you've got the question of, for instance, with Aussie right now, do we sit around this 71, 72 kind of area, pull back towards 69, 68 without that? Or with this going forward, you start to push towards 73, 74. That then changes the entire complex as well for the commodities, right? Because we are a massive seller of commodities, which then affects global markets altogether. So these small differentials in like the Aussie rate does actually have this larger kick-on effect. And especially once we're in this situation with Strait of Hormuz in the Middle East, where commodities are already pressured in general, plus energy inputs to produce commodities themselves have been on a rip. You could see it go further because of that. And then that kicks on across the board globally. So it seems like a small minor thing over in this random corner of the world where we're out of the way, but it has this larger impact what goes into China and then goes into the US and all this kind of thing. So that would be the broad thing of how it does affect stuff.
No, I think you're right. Sorry, Bart. Also, we got carried away a little bit.
Yeah, sorry, mate. Yeah, we do
Yeah,
that sometimes. Yeah,
we do that
apologies.
sometimes, but I like that. You know, it's
Yeah.
I think really fair to say a part of the game. Of course, if you're not so much in fundamentals, it might be a little bit boring to you. But I really you should get into fundamentals, everybody out there more, because it will help you also with your day-to-day trading decisions to kind of see, you know, where's the bias coming from, especially in currencies that are commodity driven like the Aussie. And yeah, but anything
Yeah.
you're specifically looking at today where you are kind of waiting for an entry or that kind of looks interesting for you?
Yeah. First about that, what you all talked about, for me is just the same. Also in the Netherlands, and also with the taxes, it's getting more and more. Also Netherlands, and I think it's important for the people also to know about it, if because you're also getting a lot of payouts, and what you're gonna do with it, how many taxes do you need to pay. I also have a business, so then you need to know what goes around in the world. So I think it's really important to just sometimes just look at it and what's important for you. But I think we can talk, you guys, hours about it, because
Yeah.
it's
But I think like your
important.
perspective on it, you know, is really important too, because you know you are in the beginning of your 20s, so you are very much the future generation of what we are doing here, and you are the exemption of this. But what I get from a lot of young people is that they feel like, you know, like lost. They kind of ask themselves the question, you know, what is it worth, you know, to invest a lot of energy if by the end of the day I'm left with nothing? I don't want to go into that again. You know, we should do that on a future date. Right now, rightfully, since you are here only for another 12 minutes, you know, I really would be interested in, is there something specific, like chart-wise, you're looking at right now? If not, of course, also okay. You know, I'm
Yeah,
basically fishing for ideas for some trades here.
make a use. Yeah. So for now, I'm a little bit in the waiting mode. So I already said I was in the US 500 trade now. And for gold, because I know a lot of people like gold. Now, you also like the 200 moving average. So that is on like now 4,350. And I'm just waiting to move price to the 200 moving averages, because you see in the past it doesn't get hit for a very long time. Last month, in March, it hit one time and it just bounced right away. So if I want to enter a trade, I'm really waiting before we are gonna hit like the 200 moving average. And now it's just waiting for me, or we need to break like the other high. So, or I want to go to the low or the high, but for me now we're just sitting in the middle, and I don't want to trade then for gold. So, and I was also looking at Bitcoin, but I think it's not looking too good for it. So again, I used the 200 moving average, and I see it's just bounced every time away from it. So that's a sign for me that's very bearish. So that happens. And the second thing I also use is like the 40 moving average, SMA. And if we're gonna close today below this blue line, so if we close now, then I'm just going to look for some big shorts. But that's just what I think about it. So everyone has its own meaning about it. But if we close today, tomorrow I will just look for like a bigger short on B2C. So are you guys think it's also we're gonna go down, or you think we'll go back up?
Well, I personally think you're very much on spot there. Really,
Yeah.
it's first of all, the overall segment at the moment, naturally in this 4-year cycle of Bitcoin, we are in the bear market here. Right now, I've said that many, many times over here in the stream. I expect the low to be incoming somewhere between October and November. If not, then I have to rethink the cycle theory of Bitcoin. What? Oh, he needs to go off. And I mean, just even if you don't believe in the cycle things, for Bitcoin, just a look at the chart, we see we're basically, in a regime where we see lower highs. We bounced off beautifully off a 200-day moving average. We see lower lows. So naturally, if we see continuation of this, we could see something like not immediately. I don't know. We could bounce back many times. Something like going down to maybe 56 or 57,000 US dollar as the next goal. However long this will take, but this is what the chart is telling me at the moment, which is very much in line with what should be happening in terms of overall sentiment for Bitcoin within the cycle. If you want to scalp this, you probably don't want to do that on the 5ers anyway. I don't think the 5ers, are a platform specializing necessarily in crypto trading, but something, to keep in the back of your head if you think of, when should I start building up Bitcoin again? But the trade is very much to the downside. I also see that on social media, everybody's getting a type of FOMO again after we went all the way up from 60,000 to over 80,000. Suddenly I saw posts popping up about like, Bitcoin going now to 150,000 again, end of the bull mark, we're never going to see 70,000 again. And this usually is the time where sooner or later the opposite is going to happen. So I'm completely on your side there. If I would swing trade this, if I would scalp this, I wouldn't necessarily look for long entries. I would prefer the short side. Still, independent from this, if you look like for reasons to long-term invest in Bitcoin, I see nothing wrong to build up a little bit of position. You shouldn't really care if your entry is now at 78,000 or 60 or 80 or 90,000, because if this cycle pattern continues, we're probably 2.5 years down the road going to see prices at $200,000 to $300,000.
Yeah, I agree. And what you said about we go very low again, so like the 50 area, and if that's gonna happen, I think it's getting really painful for a lot of investors.
Yeah.
Because some just like bite on the 90 or just 100, and it's just getting lower and lower. And I think a lot of people need to leave the market if we go. I would say if we go from here to like the 50s or 57, I think that's really a thing what can happen. And a lot of good traders I know, they're also saying like one leg down. We never know, but I think it's like 70% chance that's gonna happen. And also for me, I also have a little bit of Bitcoin already. I buy it here on 69, and I'm also don't know if I want to sell now, because if we're going back to like the 50s, it's gonna be really painful. So it's just waiting, and I also need to make the decision if I want to take my profit and maybe short. But for now, just looking at few things, and that is just the close here with the blue line. And other thing I was looking at, if we're going up again, I want to look a little bit from the 79 area. So from my perspective, I was seeing more like sort of double top or triple, and we go down, and I want to see this level to get hit again, and then I want to open just a position for the 5ers for like a short-term position, and then I can look if we bounce away from it, we can just open like a big position. But I don't know if we're getting to the 79 area because it's looking very bearish. There's not so very good news now. Still the wars are going with America and with Iran. So I think if we're going up, I want to take here a short position. But if we're not gonna do that, I just need to make a decision if I still want to get in or just wait if we're getting an entry, because you don't always have to be in a trade.
Yeah.
And short trading is also different and harder, because on the long term the market's always going up. So if you're trading short, you have like a few percent disadvantage, because in the long term, you always go up. So it's interesting. I think we need to wait a few days to see how it goes, and then everybody needs his own decision to make. But for today, I'm just waiting for price to move.
That's right. I think the fact we got capped by that 200-day moving average, multiple times, like it basically rode that down and then came right off. I still want to see that 55k or a touch below. Like I'm still in on that. And just like you were saying, Dirk, same deal. I've seen recently all of a sudden, we didn't see that after the previous dip and the run higher. But this recent sort of correction higher, I'll say, I've seen a bunch of people calling like 90k, 95k, all of a sudden going just like where we didn't have that after the dip down towards 60 or whatever. And everyone's like, nah. So I agree. I still want to see that correction a bit deeper, lower, below that kind of 60k that we got, 59.5, depending what exchange you might be on and the pricing. 55 and then ideally down to 40. Right, that's what I'd love to see. But I don't know. So I think we got to tackle basically 68 first. That's the main drawdown target.
Yeah, and did you guys also already bought Bitcoin or just still waiting for lower positions?
I did at 60. I got exactly tapped in from that 60, which I had a long limit buy from that from a while ago. So that was very good, but I want to see a bit further.
Well, I have always to differentiate. I have my long-term stack, which 75% of it I sold last year when we were around $93,000. Didn't catch quite the top there. Or like on average, because I scaled out of it. And I started buying again at 79,000, and parts bought it all the way down to 65,000. Parts of that actually I sold again at 81,000, just due to the fact, that my expectation is, we are going to see lower prices, which I will then use to build up a long-term position again.
Yeah, I think it's important every time to buy a little bit in, because I think crypto and Bitcoin is also good for the long term. So if we're going like for the 70 or 60, I would say just buy 20% of what you want to invest in Bitcoin. If you go like 10k lower, just buy a little bit in, and every time until we don't get any lower. So I think that's really good for people to do, and not only FOMO in if they're going up, because I think a lot of people just buy it in this uptrend here because they think, oh, now we're going up, and then they get wrecked again.
We're back.
The natural cycle, It's, not only in Bitcoin, we see that, I think, in any asset class. It's just the human nature, to this fear of missing out and being too late to the game, not daring to buy when the blood is on the street. But in crypto, for sure, it's like exaggerated to the max of what human emotions and thus bad trading decisions can resemble. And I think also, it's like people are going to expect again, oh, it's crypto, I'm going to make 10x. These times are over, at least for asset classes like Bitcoin, like Ethereum. I said it when you were away just now, LJ. If the next top is going to be 200 or 300,000 dollars, 2.5 years down or 3 years down the road, it's still going to be an amazing return of investment. If you earn something like 50% per year, that's amazing. You cannot ask for more. That is like every hedge fund would kill for this type of performance. But
Yeah,
you need to be willing to sit that out. And one thing that we see, we in my opinion, we see kind of a capitulation event already when it comes to retail investors, because we had very large outflows out of the Bitcoin spot ETFs in May specifically. I think one of them was like almost a record day with like 700 million or something flowing out of them. So you can see there the grandmas and grandpas and people usually not getting in touch with crypto that thought like, oh, I should add crypto too, that they cannot tolerate, their max pain threshold has been probably overwritten a number of times, because they are used to investing in stocks, they are used to investing into treasury bonds. So something going down by 40% or 50% is something they cannot tolerate anymore. And it's, if you see things like this, like super large outflows out of an asset that structurally is still intact, it's something else, if we talk about something, or Bitcoin is in the danger of being hacked, or there's something fundamentally wrong with the algorithm, and it's a different story. But it's doing the same thing that it did 8 years ago, or 4 years ago, or 10 years ago. It's mining a new block, roughly every 10 minutes. And the difficult level adjusts to what the current hash rate is. If the hash rate is going down, it's going to get easier to mine a new block. If it's up, it's going to get harder. And so there's nothing fundamentally wrong with it. And also all this quantum computing thing, it's like that becomes reality. There are other things we need to worry about. We need to worry about our bank accounts not getting hacked, which is the greater incentive, than hacking a blockchain. And so as long as that doesn't change, it's like a good asset to buy.
I agree. I think it's still in play. I definitely have slightly less confidence in Bitcoin overall than I perhaps used to. Like, it's slightly degrading over time.
The alpha is degrading.
Yeah, the alpha is degrading. I think the enthusiasm around Bitcoin in general is degrading. Like, I think what it really needs to play out is somehow wherever AI goes, and if somehow, depending where the legislation, like legal infrastructure for AI entities, if it becomes some weird thing where they can actually operate kind of as entities, as people per se, just like a company can, then obviously it's their prime infrastructure would be on-chain, crypto.
There are research papers on that, actually. Like that AI systems that operate independently, not talking about vibe coding or something, but independently, they usually, when it comes to payments, they flock to cryptocurrency as a payment. It's the natural choice, obviously.
Of course. Yeah, because they're not a natural person, and they can't get a typical bank account, obviously. So yes, they go to crypto, and then it depends how much those two things bleed together. If we kind of have certain rules, restrictions, that kind of thing. I think the other portion, like you were saying with Bitcoin right now, as far as liquidations, it's or selling, I guess, if you want to call it that. It's at the same time as things like NASDAQ, the S&P ripping, where we've seen all-time buys. So the thing with retail investors, they're not very committed, right? They're very floozy. They'll easily just dump that thing and go over here, right? The next shiniest thing that appears. So I think there's also a portion of that, obviously, when you have stocks ripping to the degree that they are. And Bitcoin has, at certain points, come up, and the crypto sphere in general at certain points has come up, but it's not quite as solid. It's not as in the headlines. It doesn't have the backing of all this other bits and pieces going on, like the NASDAQ or the S&P. So that's the only portion where I still think traditional assets somewhat overperform I think Bitcoin's good to have in there. Almost like, portion the portfolio, much like if you had to pick like 20 stocks and make them 5% each per se.
Yeah.
Like I would have Bitcoin at 5%, or potentially even make it 10% and forgo another stock or something else and just have that extra exposure just in case. Because I think the others will obviously run. Comes back to currency debasement, how this stuff all plays out, whatever. Definitely a key piece to have in there. But there's more to come. I think the quantum stuff, though, like you're saying, is silly. Like
I think if we want to talk about immediate dangers or near-term dangers for Bitcoin, we should probably talk more about the fact that a lot of the large Bitcoin mining facilities were turned off their mining rigs at the moment, because the cost of mining one Bitcoin is somewhere between 78 and 85,000 US dollars, depending on the source you want to believe. And right now we are trading under this, so they are mining at a loss. Some of them said, we're not going to turn on our mining rigs again. We are going to offer our facilities as to support AI infrastructure. So that might be the danger. I don't see that much of a danger, because it naturally means, we're going to be more diversified when it comes to mining Bitcoin, which is a good thing. It's like it gives less of an attack angle, or one mining cloud taking over 50 or 51% of the whole hashing network. But those are like long-term effects. Again, I think the next 4 years are going to be very interesting in the whole AI and crypto kind of narrative, how this is going to play out. Big chance, of course, also big dangers, because the way we see AI progressing right now, the latest ChatGPT model is very strong. The one that coming out from Anthropic, the Mythos one, is like, actually, if you want to believe the researchers, it's ahead of the curve. We already have an exponential curve in what these models are capable of, and this one is ahead of the curve, and is so much ahead of the curve that they refuse at the moment to give ordinary people like you and me access to it, because it can exploit non yet known
vulnerabilities
with large companies very, very easy. So that's very interesting, and that amazes me, that we seem to be ahead of the most optimistic projections of where we're going with AI. Bart, I believe you need to leave, or we don't want to keep you. Don't be shy in saying like I need to attend to something else.
Yeah, no worry. No, I will leave.
RJ and I are, of course.
We'll just rattle on. So
you guys just keep going. But no, I think we talked about Bitcoin, the most important thing. So for now, I just leave, and then I will see you guys next Monday, and you will continue. I will just watch by myself, just on the background then.
We are going to continue to blah 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 your ear off.
Next Monday we'll question you heavily, and like we'll have a full thing. We won't deviate like we did today.
We'll question you about everything you learned today, so you better go back and study. No, just
I
kidding.
want to use all my strategies to make money.
Very true.
But no, it's okay.
Cheers,
I
man.
will see you guys the next time then.
Take care, man.
Beautiful.
Bye.
Good that you were on with us again. Leave us a like if for Bart, please, and subscribe to the channel. I don't even know how many subscribers do we have. I haven't looked for quite some time onto the channel anymore. Do you know?
I don't know, 106.
Here we go. We are approaching
like 1.6
million. 106,000 subscribers. Nice.
1.6k. Right. Wait, no, 100. Okay, sorry, my YouTube is showing. Oh, that's the videos. Oh, that was very confusing. I was like, hang on, 1.6k thousand, because it's like what? Okay, There we go.
Nice.
106,000.
106,000.
Yeah.
Not bad. So let's push to 110,000, and maybe we can convince Richard then to, you know, do a little bit of a giveaway again. For that to happen, you need to
Indeed.
like, you need to subscribe, and leave a little comment here in order, you know, to attract more viewers.
Absolutely. Okay. So first and foremost, like we'll jump into a bunch of stuff.
Sorry, give me 5 minutes. I'll be back when you.
Okay, sure. No worries. All right. In that case, whilst Dirk's gone, I'll go back through comments. Just in general, we've got a bunch that we were going to chat on after the fact once Dirk's gotten back. You guys just now, what are we saying? 106K. Yes, that is the right number. Very good. I can't read, apparently. Exactly this. What is it? Real soft. YouTube income paying for payouts. That would be nice. I don't think we have any YouTube income. We have no ads, no nothing on here. So otherwise, I'll take some, please. Elliot, yes, we can do Euro NZD, definitely. Wow. Okay. Euro NZD. So this is a very interesting one because I've actually had some friends talk to me about Euro Aussie in general. So Euro NZD can be a little bit different. Actually, let's double check on the odd euro first as well for comparison. So the Aussie euro, the main picture here, obviously that ride higher. We've had a very much momentum to the upside. We've had the increase in rates from the Aussie. However, we are now seeing that kind of priced in. So if you want to run this through here, kind of drop to the underside of this general uptrend that we've had in the Aussie euro, right? So I got to say, this kind of feels like we come up a bit and then come off. And now, why are we looking at this? If we go back to Euro NZD, it's going to be very much a similar picture. So Euro NZD, we've had that downdraft. This is going to be inverse to Aussie Euro, like we were saying. So this pickup through here, we've had the recovery today. Euro definitely last week got smashed across the board. I'm actually surprised through here we didn't go a bit deeper. However, if you look at the NZD itself versus the US dollar, it didn't do too well either. The Aussie definitely held up much better. That does come back into that rate picture. We do have commodities running higher for the Aussie. Why this is relevant, touched on it a few times. Australia and New Zealand, even though they've got their own idiosyncratic kind of economies and functioning, Australia's obviously much, much, much larger than New Zealand. Day to day, the Aussie and New Zealand dollar tend to be very highly correlated. And when we don't have major news or something particular going on, they will tend to track in sync, which then skews the entire broader chart, right? I would like to see some kind of pullback into these tops. So you got the bottoms through here that we cracked through. We came up, tested the underside, dipped down, created a higher low through here. We've broken up, smashed through that neckline, come up into here, right by the top side resistance. This is very technical right now. So I'd love to see either the halfway dip to the 50 moving average right here on the 1 hour, or the full dip to, you'll see the 100-hour moving average coming up here, and the 200-hour moving average sort of going like that. So it might be a couple of days until this actually pulls back into here, and then I would see us driving higher on Euro NZD. I think the euro is probably better positioned overall rather than New Zealand dollar. Australia still do quite well. I think New Zealand dollar is going to kind of suffer in general across the board. New Zealand dollar is also going to get hit and further get hit from that Aussie New Zealand dollar comparison, where even the odd NZD Aussie will be running, New Zealand dollar is going to get smacked. That then bleeds over into NZD USD itself, which comes lower, which then bleeds into the other cross pairs. It's much like when we don't have a huge amount of major news or things going on, and the euro pound often then influences euro dollar and the pound dollar. So if euro pound is rising, euro dollar end up rising, pound dollar ends up coming off. Whereas normally you'd often look at euro dollar and pound dollar as highly correlated, but you'll see them going in different directions because of that euro pound influence. So you can see that very much same deal in the Aussie NZD right here. So yeah, any of these pullbacks through here, I'd say you got support. You might enter a partial through here. It depends how long you want to hold it, but a touch more downside, I'd be entering longs through here, longs through there, and then seeking a drive higher overall. So welcome back, Dirk.
Thank you. Euro NCD you were talking about right now.
Yes,
Yeah,
yes, indeed.
I saw somebody asking about it.
Yeah, Elliot was asking
Nice.
about before.
Nice.
So yeah, I think euro will fare a bit better. Obviously, we still have the spectre of the ECB potentially raising rates as well. Like obviously, that's more been on the guise of the whole Middle East type situation. But we're now getting general consensus starting to bleed into the market that even after Middle East is sort of sorted out, the Strait is opened, the US might move towards hikes regardless, and then hence that gives further input towards ECB, Bank of England, to potentially raise, even if it's only just a little bit.
I was actually this morning.
Whereas New Zealand's a bit different.
Yeah, absolutely. Yeah, absolutely.
Yeah.
I was actually looking into a bit cable this morning also, but I haven't decided yet if I want to risk doing a trade on this, because I think it's a little bit exaggerating, like doing on steroids what we're seeing for euro dollar at the moment. Not too sure about it. I mean, we've seen euro dollar coming down by quite a bit, obviously, but I'm not so sure, if I should front run a potential upside to that, like I'm talking about a long cable position here at the moment, or if I would be too early with this one, because we are a little bit in nowhere's land, in my opinion. Still, I'm seeing like some of my indicators slowly turning green again for cable, and sometimes cable likes to front run euro dollar, sometimes vice versa also. So it's a trading pair I don't like to trade specifically. Usually I stick to euro dollar, but there's like.
Yeah, I do agree with you, Dirk. So basically, I mean, last week we had this sort of channel forming through here. We had this neckline through here, dropped down through there, came back down into support, slightly overshot that. I was looking for a retrace up into that neckline, which we did get, and then stalled out through there. This was the possible downside overall target for GU. It did hit that, obviously fell right through it, came down to the next neck of support, which are some of these old sort of just general head levels. It's not like a very specific or great support, but there's general cluster in there. And you got some of these like round numbers just above 133 and 133.50. So there's around some of those round numbers, options levels, that kind of thing. Now, the funny thing is with the pound is this time it's been different to the past leaders like Liz Truss and that kind of thing, where the markets, the bond market went skits over her being in and what she was going to do. Now, the markets are basically saying, we don't want more changes, right? Like, stop this. It's actually going the other way. They're saying, you guys need to chill out, just pick someone and do your best, right? We don't need someone else coming in, don't know what they're going to do. It's going to change. If you keep doing this all the time, like, what are you doing? It's just full uncertainty. No one has any clarity, that kind of stuff. Liz Truss, obviously, not great. But everyone since, there's been massive pressure. And obviously, yes, any politician that comes in right now, that's a hard job. Like,
Yeah.
you are inheriting some of the worst stuff and you're basically going to lose. I gotta say hats off to anyone that does that, because you're a public figure. Your entire family, your kids, whatever, you're going to get slammed for the rest of to forever over this. It is very tough, to be fair.
Reminds me a
But
bit,
yeah,
like back then when Margaret Thatcher died and people were dancing on the street.
yeah, yeah. I would say that there is the prospect that potentially, at least if they just figure out, okay, Starmer's out, have whoever else in, can we try and formulate some kind of like cohesive government, at least for the time being? That or else go to some kind of proper election later, and there's kind of more of like a structured per se direction. Then we could get some kind of a more aggressive bounce, and then I think as well that would draw the other majors much higher as well. So same with euro dollar. We've got basically this level up through here, which is just under 117. It's about 116.94. And I think we'd actually get a pretty straight shot running back up there. Similar deal with the Aussie. I think we come down through here, go a bit higher, come touch the underside of this kind of break level there, and then potentially go lower. But near term, just like with the pound, I think we could get up through here in this general original target that I had. After that, I think we do have some downside. That further downside is going to depend on Kevin Walsh and his kind of commentary / the surrounding Fed members as we come through going forward. So, but I don't mind this. I think, especially given the downdraft that we've had, which is a couple hundred pips.
Yeah, I think I want to
risk-reward.
trade this with an option. So I was thinking of like selling 131, 130, 50 put actually there, but you know, at the money volatilities are very low still. 7.5 for 3 months. It's not worth the risk in my opinion.
I was going to say, it very much depends on the time frame. That's very tough to configure right now, especially with Jerome Powell obviously stepping out.
Yeah, that's the thing, you know, that's the denominator. Nobody knows like what is Kevin Walsh really going to do, you know. It's like, is he going to follow Trump? By the looks of it right now, it's a bit more no, you know, he's going to take his job seriously and decide on the facts, or his vote within the whole committee is going to decide on the facts that, you know, in Fed member should decide on. Of course, when he's going to immediately clash with Donald Trump. But I kind of like, you know, if he has the backbone of saying like, no, you know, this is not the time to lower interest rates. This is maybe the time of discussing should we increase interest rates, especially as, you know, we can always discuss, of course, you know, does it make sense? Doesn't it make sense with the whole US debt problem right now? But for the markets, honestly speaking, long term, that would be a good sign, because it would indicate, you know, the Fed is still independent. They are not another instrument of Trump where that he can, like, you know, hire and fire as he wishes to, depending on what his current mood is and what is best for him short term personally.
Agreed. And I think for you guys trading in general, that means that potentially we see a massive reversal in the dollar.
Yeah.
So one, just on that sentiment basis that yes, the Fed has been confirmed as independent, that'll boost the dollar in general.
Absolutely.
Two, plus the directional aspect, we see dollar running higher. We're now seeing the dollar yen intervention starting to waver a bit. Like, they've had a few chops at it, and it's not they really needed to stick around that 156 kind of lower zone. We're now pushing that 158 kind of area. So what this means for you guys going forward, that we could potentially see, basically we've kept this channel. We didn't even get to the bottom of the channel, right? We struggled to get that 200-day moving average within this, even with intervention, right? So now we're pushing up towards the 50-day moving average. If we start to see more of that, we start to push towards the top end of the channel, which is back up around that 161, and then potentially break through. And if that's the case, I would say that they would probably kill the intervention altogether, because now they're against such a tidal wave that there's no chance it's going to work. Now, if they do try it, good luck. This becomes very much the kind of break the Bank of England type thing,
Yeah.
where they're going to be against such a tidal wave of flows that, good luck. So they'll probably can it for now. That said, obviously, the US is very much in talks with Japan. Scott Bessent has had like 54 flights over there since coming in. And he echoed last time that, they don't want to see this volatility. They're very much backing Japan. So I don't know how there's some kind of cross coordination with this in that measure, but it might be a situation of, say we go back out to the daily on the dollar here. You can see this larger trading zone that we had right by the absolute highs of the dollar at peak inflation back in 2022. Come right down, we're oscillating around that 100. We've sat below it. We haven't quite kicked on down to this base area at about 90 per the Dixie. What we're now seeing is that, like what Dirk was saying, if we see this actually push up and then push this 100 spot 50, some of these prior highs, we could then run much beyond that, even just through stops, just printing. And that's a big deal. That means euro dollar back down towards 110 or below.
Which
so
is something I would like personally to see, of course, because most of my flows are in US dollar,
Yes.
but my bills are in euro, same like you. But with
and the Aussie lower. Let's go.
However, like what it means, like for dollar yen, for example, is you can see my last two trades, and this one I still had here. Luckily, I was thinking about shorting it here. I didn't put the trade actually in. Lucky for me, but. One might think, of course, now, it would make sense that I would do something like this again. Last time, this was a good area to kind of short. So I'm going to play the same game again. Nice risk-reward ratio. However, I see the danger right now in us seeing something like this here, for example. Like, we go higher, go lower, and when we see what LJ and I have been, discussing for, I think, in a number of months now, that once we pass this region between 160 and 160 and 161 and a half, we really see it higher, because we carry trade at this level with, US yields trending higher again makes sense again. So why deviate from it? And like LJ just said, I don't see the central banks, especially the Bank of Japan, intervening that much, because they are all afraid of something like, back then, what was his name? George Soros did. It's not going to happen again. There's too much money around. No individual hedge fund can pull this kind of stunt off again.
Banking regulations, that kind of thing.
Yeah, exactly. Yeah, but we saw this happening also back in, when was it, 2015, I think, to the Swiss National Bank. So the central bank of when they had this floor of euro versus the Swissy at 120, and then they basically had to give it up because they were building up too much losses. They couldn't absorb the liquidity anymore from the market, and we saw euro Swissy dropping within 5 seconds from 120 to 0.95. A lot of brokers died that day. A lot of retail traders died that day. The family office I worked for died that day because the client was exposed so much in puts Euro Swissy. So on that day, that gentleman lost $30 million within really just seconds. And I think they want to avoid something like this. So at one point, intervention here or there, you cannot stem yourself against the dollar flows, or especially the dollar flows that is anymore. So my lean right now in this whole circumstance would be more like to see, are we really going to push up here? Are we going to come down maybe to 160 or 159.80 and maybe even, flirt with a little bit of a long position there instead of a short position?
Yeah. Now, we got to cover the counter to that, right? What things are we seeing to say
Exactly,
go the opposite way? Now, Japanese yields are definitely rising.
Massively.
However, recently we've had US yields also rising. We've had global bond markets yields rising in general. So hence it's kept that carry trade kind of in play, even though it's not quite as favorable because Japanese yields are rising a bit faster. It's still very favorable, right? It's the best you can get out there. The other portions, which are very interesting, I thought. Now, we had a while ago, starting first and foremost, the interesting stuff comes after. First and foremost is how Berkshire Hathaway took out a bunch of debt in yen, issued bonds, right? And they did that at the perfect right time. Very low yield, back down 1 and a bit %, and now it's more than double. So they got in perfect timing. The recent thing in this past 2 weeks, is that Apple, for the first time as well, has taken out debt, bond issuance in Japan. And then Meta, the same, but in Swiss francs. So since we've had the yen fall out of favor as like a safe haven currency, and we've seen dollar yen rise higher, so therefore yen go down, we've seen the Swiss franc strengthen because they become the only one in that basket. You used to have a split between the two of Swiss franc and the yen as that kind of like staple go-to safe haven. And then basically the dollar would be the third, which was very dependent on the situation, right? So it definitely seems, that's my only concern, is that the massive tech players are trying to inverse this trade essentially as well. And this is the first time they've done that ever. And obviously you've got all the lobbyists, all these kind of connections, that kind of thing. They're not doing this just because they're speculating on, maybe this looks kind of good. It tends to be that they know whatever. At the same time, currency markets, just like we've always, like we were saying, even like the George Soros thing, Bank of England stuff, like currency markets are incredibly difficult to, one, push in a certain direction, manage. Central banks can't do it, governments can't do it, hence they don't bother. That's why we have free floating currencies, and they're just like, we don't talk about the currency because it's a lost cause. Intervention is very tough. But I wonder and speculate somehow, in some interesting way, almost like with the Kevin Walsh stuff now, where we're seeing he's more hawkish and not going to be a Trump favorite. What if that actually is the case and it flips? It's just, it's very weird how much, how friendly the certain big corps have been to the Trump administration. We've seen Trump do certain things. We had certain things leaked the past couple of weeks as far as his stock buying as well, just before he's tweeted certain things about XYZ company. And now how the whole settlement he's got with the, the DOJ, where he's basically like sued himself, and now he's like the plaintiff and the right. That's where it weirds me out. And these other players are normally like Meta. I'd probably scrapped off because they'll, like, Zucks will do whatever. But when Apple does something, it's more,
the more
Right.
solid, sane companies, that
Yeah.
I agree with that. It's
Yeah.
and it makes a lot of sense. If you are so close to the administration, you probably, even if you don't know that by wording, you're probably going to pick up, what is the plan, of a central banks there, or we need to get interest rates, we need to get yields under control to a more normalized level. So of course, for a company like for large corporations, it for any corporation to that sense, but not everybody. If you're like having a smaller size company, you don't get access to a place like this. Your bank, your local bank is not going to give you a credit line in Japanese yen, for example, simply because they cannot, or they can only do at very elevated prices. You need to be big in order to do that, because you need investment bank as your partner and be basically tell them, I need like 2, 4, 5, 10, 20 billions in credit line in Japanese yen. And by the way, our security, here you have $20 million or $20 billion because we have it lying around in cash. But it doesn't make sense to invest that cash if they can get basically a free loan. Because if what you just said happens to be true, it basically means like, we are getting free money. If at these levels, we're taking out the loan and dollar yen in Japanese yen or Swiss francs, and then we see dollar yen going higher, going lower, of course, makes like a lot of, again, the carry trade going higher, of course, here. In that case, it makes a lot of sense because eventually the gains you'll have made by just by the currency changing in your favor are going to offset the interest payments you have, meaning you have free money.
It becomes like a trade.
Yeah, it
Basically,
is
that's
a
what
trade.
it
It's
is.
a directional
It's a
trade.
It is a trade. It's a directional trade,
If-
which is
If
when
you're
someone like
sitting-
Apple does that,
yeah,
and
And
they
it-
don't have to go to debt, right?
yeah, exactly. If
They
you're
have
sitting on
so
like
much cap. So
billions
hence,
of
if they're deciding to do that, it tends to tell me that they know something down the line. They don't, even with developing products, right? They're not always trying to be the first and the best and that kind of stuff. They wait for everyone. They're very slow, but then when they do it the best.
yeah.
And so hence, that's the part that irks me as far as us running higher, breaking that 161, getting a breakaway, or potentially we do, but then we collapse very quickly after. Hence where we get the flip from Kevin Walsh that potentially, he's going to reduce the balance sheet, but at the same time also reduce rates. And so in his mind with that, and that aligns with his prior thinking, where it tightens financial conditions per se, but also loosens them with the interest rates coming down. Other Fed members have already also been commenting on pushback around reducing the balance sheet, saying that would end up with the Fed having to intervene more overall. And obviously the other thing with Kevin Walsh, he said that he doesn't like everyone communicating so in depth. He wants to have things a bit more vague, a bit more opaque overall, which hence some of these Fed meetings could be much more like a non-farm payroll event.
Yeah.
Whereas recently sometimes occasionally when we actually get a big move, like there is a big move and a bit of a sustained thing, but obviously it's normally telegraphed like a couple of weeks before that we kind of know, and then it's just like a few technical details where we still get the push, but now we'll have this big whippy snap.
I remember
not
back
even
then
like
when-
non-farm payrolls we've had recently, which have been very tame.
Yeah.
It's like non-farm payrolls from a year and a half ago, where they
Yeah, true. But I remember back when Greenspan, Alan Greenspan was still the head of the Fed, you'll have more of these, exciting events where you didn't know, are they going to raise? Are they going to keep stable? Or maybe they are going to lower interest rates? There was this indicator called the suitcase indicator for Alan Greenspan. So people would like see what type of suitcase is he going to carry to the press conference, because by that they could tell like, are they going to lower interest rate or hike interest rate, or is it going to stay the same? We don't have that anymore. It's pretty much set in stone nowadays.
Well, no, we did have that with Jerome Powell, right?
We did?
It depends
Really?
how he starts, yeah, because you go, good afternoon, right? And then depending if it's good afternoon or good morning, right? It'd
Okay.
be, yeah, there's so many memes of that, yeah. Yeah,
I
so
was not aware of
typically,
that.
if it was good afternoon, we're going down. Good morning, we're whiffing higher, yeah.
My God. Trillions of dollars relying
Which
on 2 words.
which was literally just a mistaken thing, but on average, how that balanced out did actually play, right? He obviously wasn't doing it intentionally, but it turned out that way. But yeah, I mean, Jerome Powell also always wore purple ties,
Yeah.
which most people don't
And
realize. Which
I
he actually just likes purple. Like he's talked about this before,
think so, yeah.
and so he used to wear them. And then once it got more political, that kind of thing, he realized like, oh, I want to put it on a red tie or a blue tie. He's like, I can't because if I do, it's
Get on.
gonna signal something. So it just became like purple being his thing.
But that being said, you know, as an investor, I have to say I extremely like Jerome Powell. I think he really, really did.
Oh,
a good
definitely.
job.
I think it's been.
It's big shoes, you know, Kevin Walsh has to step into.
I agree. I think he's been. I mean, obviously, I wasn't around pre 2K and all that kind of thing, right? But even from, you know, history, that kind of thing, research, that kind of stuff, I got to say, he's probably the best
Yeah.
Fed
Yeah.
chair
I
we've had.
would agree with that.
He's, if you think about all the things he's combated, especially with the discrete change in government going to Trump, managing that, staying very neutral, things like COVID, that kind of thing, and people go like, transitory, like you're I was like, no, dude, that was the whole world, right? I hate when people do this stuff when it's like, no, that happened to the whole world, yeah, right. That was definitely the move. Because if you went the other way and tightened too quick and that didn't happen, you would have sourced everything.
Absolutely.
So you might as well have a run up in assets. Yeah, you get a bit of inflation, but you don't get people being unemployed. It's much harder to re-employ people after you have businesses collapse because of tightening, rather than just getting a little bit too much expansion, that kind of thing. So yeah, I think it's been great. I think it's been one of the best chairs ever. Curious to see how Walsh is. I think Walsh should be pretty good. Both of them different to past chairmans in general. Like they both definitely have market experience, like kind of trading, investment banking, that kind of thing. I think that's definitely advantageous. I think that I quite like Janet Yellen as well. But I think she was lacking that portion, that pizzazz, and it was a bit boring. She didn't really act with something. I can't say she's bad, but just very like.
Well, I mean,
lack, you know,
for the past 25 years, nobody who took that position could have been defined as really bad, in my opinion, at least. You know, it's like you are there for a reason, and usually you have people there that are not very political, as they should be. Jerome Powell, you know, was like the most unpolitical person in existence, probably, that ran the Fed chair. He didn't give two Fs, you know, about what was going on, especially like in the last months or the past year where he was under investigation initiated by Trump of supposedly, you know, overspending on some real estate project of a Fed, you know. Of course, that was just looking for reasons, you know, but he handled that so well. But let's get back maybe to a little bit more discussion on the charts. I see some questions here.
Yeah, of course. Sorry, I was trying to bring that up as well.
Absolutely nothing to be sorry about. Which indicator has several moving averages in one? Well, I think the indicator you're looking for is something like a moving average ribbon, for example. You know, because you cannot have a single moving average that has like several moving averages in one. Well, you could, but then it would be weighted one. And I would look maybe for something like a moving average ribbon. You usually can find these for free on TradingView. So here we go, moving average ribbon. For example, where you can adjust that. to whatever you want those moving averages to be. My suggestion would be do something like, I like the 21 EMA usually, 50 SMA completely okay, 100 not something I'm usually looking at, but maybe something like a 200 simple moving average. If you're scalping, you might think about a 200 EMA also. Then you just apply this to the chart, and whatever you're looking for, it's basically there. Then if you want moving average, I prefer to attach those individually to the chart, because sometimes, depending on market regime, I like to switch. There are sometimes market phases where, for example, 50 EMA or 50 SMA might feel a little bit too much lagging, especially if we are in like an area where we are moving very much sideways. A regime, by the way, where I wouldn't use moving averages anyway. Then, what is that? What was that about Trump stock buying manipulation?
Yeah, so this is where he's okay. We'll run over this very quickly. It's basically where he's been suing basically himself, the government, as far as looks into Trump, where like he has to go through compliance stuff, that kind of thing, right? And he's it got leaked that he bought, I think it was 700 mil of various stocks that he's then gone on to tweet about, like Palantir, Intel, that kind of stuff. And now he's suing the DOJ around that from them leaking it, that he might also settle because he is the whole thing is so dumb, right? He's the president, so he can settle the thing from the DOJ, suing himself, saying just pay him out. And apparently right now the suit would pay him out about 10 billion. So basically he's been buying certain stocks, tweeting about it later, making huge gains. And it's a really
so it's Nancy Pelosi on steroids, basically.
Yeah, on steroids. Like everyone's known the whole Trump doing stuff and giving tidbits to his friends and that kind of thing, or other people controlling certain trading entities that might then invest in that, where he gives the like nudge of the shoulder. But now it's been a bit more direct. I don't know. We'll see how that goes. I can't say that the people really like that. I think as well, even though he talks about doing this like third term thing, I think he knows he's not getting that, obviously. So I think there will be more of this stuff where he'll just play that. I wouldn't be surprised if by the end of Trump's term, we see that everyone hates the Republicans and we actually do go back to a Democrat.
If the Democrats get a good candidate, that is. I mean, hearing like, oh, we are going to run Kamala Harris again, I don't know if this is the right solution.
No, no, that's not going to work. Franz Hermann, I see you got your name change active on YouTube.
I like it. I love it.
Do you know who this is, Dirk?
Yeah, of course. This is Max Verstappen in his
this is Max.
Under his German secret identity.
Yeah. Okay, guys. Okay, first of all, where's Bart? So Bart was here until the end of the hour, the prior hour. He will be back next week, I believe. So save your questions for that. I don't think he's coming on Wednesday, is he?
I don't know.
After
last Wednesday? No, he wasn't there. Yeah.
I think it's every Monday for the first hour of our stream. We do it together as a triple. So yeah, waiting for
next
Bart.
week. We definitely have to like let him talk a bit more. That poor guy, he's like coming under the wheels when we get into our monologue mode here.
Yeah. All right. I don't know if you want to bring anything up, Dirk. I'm just going to scroll through a couple of these.
That's what I'm doing right now.
In general, to catch up on what you guys are actually saying. Sorry if we've missed anything. Let me go through it. What was I saying? Hang on. Hi team, KYC is stuck for a week. It says fix my name, but I can't edit it. Already emailed a week ago with no reply. Can you check it or just reset my KYC so I can re-upload? So for us here, we don't deal with any of this stuff. So you guys will have to talk to support. I have no idea how the current KYC setup or having any problem with that works. When I submitted my KYC back in the day, just straight through, bang, done. License, all that kind of stuff, easy. If you've got a problem with the name, it says to fix it. I assume they say send in an email with the new name, your actual name. You'll have to send that in, I would assume, with like an actual ID, and then you've got to have typically multiple points of ID. So not just like a license, you'll have to have something else, potentially a birth certificate, bank statements, that kind of thing, like multiples of these to actually confirm your stuff. Because that goes down to, this is like global AML, CTF stuff, which if you guys don't know what that is, that's anti-money laundering, counter-terrorism financing regulations. This is a very global thing. So if you've got that and you've got like your main ID, that kind of stuff, and you've got each of the iterations of that, send it through. Shouldn't be an issue. Trump is a crook in a powerful place. Enjoy it while it lasts. Yes, he is. He's definitely a crook and definitely in a very powerful place right now. That's for sure. Let me go through here. All right, Trader Caro, I can see this right here. In the comment, not giving. Mate, okay. If you got a problem with payouts, whatever, once again, go to support. You guys can talk to us here. If we have any further information, we'll relay it to you. But we don't deal with any of that stuff. We're not privy to it. Nothing. So you guys will have to go through support. Obviously, you can go through the Discord, talk to live chat support, that, or send an email. See if you can get like a time frame of when things might come through. We know that there was some disruptions with the payout provider, like the servicer. Then there's been a massive backlog, right, of people. So if you're still going through that, see where that might be. But yeah, contact them. We can't do anything from our end, unfortunately. Sorry, bro.
Sorry that I was away for a minute. I had to let my Amazon delivery guy in.
That's right. That's
New
good.
super large monitor arrived today. I'm pumped to
Oh, really?
installing this
Yeah?
after. Yeah.
Nice.
So
I will probably set up my new office thing.
Oh, yeah, right. You have an extra room now, no?
Yeah, probably next week or the week after. I
Nice.
think I gotta figure out how I want to set it up. I'm trying to think around the desk size. Do we get a standing desk? Do we just a front one, L-shaped one?
Go for
Trying to think
standing
around
desk, man. It's a
background
game
I have.
changer.
Yeah,
really.
I think I definitely want one.
I used to have like this big, super big desk, that like went on to the right and turned around me. So I had like 10 monitors set up. But since then, I've slimmed down to 3 monitors, 2 and 1 super large one now, in about an hour from now. And it's so much nicer, And I have my treadmill underneath my desk here, so I can work for 15 hours without being in the position that I just sit around.
Yeah, well, because the other room there has it's like the room. There's like a walk-in wardrobe, bathroom, whatever, and then there's also another portion that goes out to the I don't know, what do you call it, like balcony kind of thing.
Patio.
Yeah, it's more of a patio because
Patio.
on the lower floor it goes right around. So I was wanting to set this up, have a full like standing desk where I can walk around, have my ideas, have headphones in, just thinking about things, take trades, whatever. Have a nice little background, that kind of stuff. Maybe like a fridge with a bunch of energy drinks, that kind of stuff, and just
What
like
I have
make this
here down here as
kind of
well.
like chill little room. And then the outside as well, build that into somewhat of like a kind of mini gym type thing, and just have this like good space, which is my workout, just doing stuff space, and then this will just be like a pure bedroom kind of thing. So yeah, definitely keen. I've got a bunch of ideas. I've been trying to.
So guys out
scope
there,
it out.
within the next week, you're going to see an LJ My Crib type of episode, where he's going to walk us through his new office.
Yeah, we'll probably 2.5, maybe 3 weeks, because I got to get everything ordered, and that'll take a while to actually deliver. Like I think, and they'll be set up, and then I'll shift everything over. It'll be good.
Nice.
So
I'm still dreaming of expanding my office as well, so I have a corner for sim racing, and where I'm going to build up a rack, when I can drive 24 hours of Nürburgring ring as well, alongside Max Verstappen.
Exactly, that's another big one where I wanted to set up that kind of stuff in the corner to do that as well. So
But it takes so much.
We'll see how we go.
It's insane, really. It's like you can spend like hours and hours and hours without making any progress.
Yeah, I mean, I've never done it, so that's why I'm curious. Like, honestly, like,
fun, and it gets you so addicted. Man, it's like crazy. I started iRacing. I'm not playing it anymore right now, but when I started iRacing, I first, thought like, I'm going to begin at the very start. Doesn't make sense, to start with a AMG or a Ferrari or something. So I was participating in the Mazda MX-5 Cup always, and these cars are ridiculously difficult to drive around the corners because the downforce is all from the tire grip. So it's once you nailed those down, and you can get around without crashing or at a decent speed, driving a GT3 or GT4 cars actually becomes easier because they have the downforce.
Yeah, they're a really great car, very lightweight, good amount of power per the weight. But yeah, just like you were saying, rear-wheel drive, they kick out. Hence, they're the perfect drift car. So you don't have that downforce. So on a track, it's a bit difficult. But yeah, just like you were saying, if you nail that and then you have the downforce to stick you, you've got it. So
don't get me started on something like trail braking. Like not braking in a straight line, but easing off and using your pedals basically to make turns for you as well. It's so ridiculously difficult, and I gave up on it because if you want to do it properly, and being the insane obsessed guy that I am with everything, I want to be doing it at a decent level, like where I can actually compete. It's like picking up like 5, 6, 7, 8 hours per day in order to get there. So I thought like, whatever, just don't do it anymore at all. You're just going to get frustrated if you can do like just 2 or 3 hours per week. It's maybe if I retire someday, I'll find this time for that.
Yeah, definitely. You guys, anything you have in chat, hit us with it. Market's pretty just creepy right now. Just proven higher. We basically get an inverse of the drive from Asia into early London. Now slightly retracing that overall. Zilal Mendal, how can we identify LJ natural retracement? I assume you're saying how can we identify a natural retracement in general for markets is what I'm assuming from that. What I typically use, and let me know what you think, Dirk, as well after. Normally I'll look for moving averages. This is where so the 50, 100, 200 moving average, and you tend to then cluster that with some kind of other coalescence, right? So this is the dollar index right here. So we had the open through today. We come up through here, and you look for this wick below here, this kind of section that we had from the prior drives as well, where we got a low, high, low, high, low. We got these drives, and we had this, this was the point of contention, where we got a higher high, but a higher low as well. So now we're in the like question mark period. We did drive higher. Once we established that higher portion, we did get high lows the whole way through. Then we got a high, low, drove higher again, another high, high. Came up to these highs, dribbled down lower. Coming into this week, come right off, bounce back into that support, came back up. This is in this cluster here of candle body closes. Came back down, pushed up. Now the question was, with this, like we have this arrow through here, do we stall here, come down, or drive higher? This is obviously the open of the Monday today, and we saw us drive higher. So hence you can see is on the 5-minute here, you've got this little gap, right? Push higher, bang, up, bang, up. So now I'd look to see if we actually come up to this 200. So a further push on the Dixie, and then see how we contend in there. If we push back down and then potentially come up, or if it's just a straight drive higher for the dollar overall. So I tend to use the moving averages as that reverse cluster. On top of that, you can use things like a stochastic oscillator on various timeframes, higher timeframes, sometimes accompanied with an RSI. These are very old school stuff. They're a bit lagging. It's very priced in, but they can, with confluence of other structure and whatever else is going on, they can be helpful just to give that
Sounded like you
points of confirmation.
sounded like you said sarcastic oscillator instead of stochastic just now.
Stochastic, yeah. Stochastic.
Yeah, I mean, I pretty much agree with you. The difficult thing always is it always boils down everything to market regime. Like, what are we looking at the moment? Because, like, if we are seeing like choppy markets, ranging markets, it makes totally sense to even use something simple like an RSI or slow stochastic. It will help you, will give you good entries there. But you don't know, the thing that breaks something like this is always regime changes, because you can only see, it's a catalyst, and you can always just see like, oh, a regime changes with a certain lag to it. And this is like these transition periods between a certain regime playing out and the regime changing are extremely difficult to get and to see. So this is where the maybe discretion comes into place as well. When you've done this for a long time, kind of like, looks like things are changing. I want to be a little bit more careful at the moment. I tried many, many times to capture this in a more technical, in a more standardized way, but it's extremely, extremely difficult. As a matter of fact, I'm right now working, for example, on something where I say like, how can we use a simple tool like the RSI that was like invented 50 years ago, 1978, so 48 years ago, almost 50 years ago, and adapt that, to the modern world, because it was not designed in markets like this. It was designed in markets that were basically just trading for a couple of hours every day, institutional traders. You didn't have these super swings like we have right now. And yet, every trading platform you go on gives you an RSI with a bar length of 14. It doesn't make any sense. It needs to adapt to what is actually going on right now. So what I'm trying to do right now is to build an RSI that kind of like it takes you along the journey and lets you see what regime are we actually in. If we look at for example, last 300 candles, what regime are we in? And what does that mean in terms of how we need to adjust for RSI? And does that actually mean right now an RSI is the tool we should use? Because if we were in a trending markets, we shouldn't use an RSI. You're going to kill your account with this. You want to go back to what LJ just said, using moving averages, as support, to get confluent entries maybe into the trend direction. Are we in a choppy market right now? Like we are in gold, for example, right now, well, then an RSI makes sense, But you'll always have this lag, these transitional periods between regime changes, where the potential of you having a couple of trades in a row at the wrong side is very, very high. And you cannot offset. You're never going to be able to measure regime changes in real time. You can do that to a certain extent with discretion. When you are experienced enough, when you have looked at charts enough, when you know kind of like, oh, this is going on a geopolitical landscape, this is what the market itself is looking right now. Like 3 years ago, everybody always was looking at inflation. Right now, nobody cares really that much about inflation. They care about what Trump is tweeting right now. And you cannot automate this. So judging what the regime currently is, and is my indicator or trading setup suitable for that regime, that lies on your shoulders. And this is, apart from risk management also, where I think if you nail this down, or if you get a hang of it, nobody's ever going to nail that down. But if you get a little bit of hang of it, of this discretionary part of trading, I think really you are approaching, or you have a chance of approaching to become a profitable trader more than just relying on, I want to find this holy grail indicator, or, I want to find this automated system that automatically makes me rich overnight or over the next over the next 6 months without me putting in any effort or understanding. That being said, Richard, William, welcome back, mates.
Well, hello there.
Hello.
How you doing?
How are you doing?
Not too shabby, not too shabby.
Good.
You're a man after my own heart.
Nige.
Huh?
I'm saying, Dirk, you're a man after my own heart.
Oh, well, thank you very much, sir. Means a lot coming from you. That makes me feel not too shabby.
See? Brotherly love. Brotherly love.
Yeah, as two bassists, we have to be joined forces.
We do. There's too many guitarists in this world.
Exactly.
Everybody wants to be the lead guitarist.
Mm-hmm.
Nobody wants to be the rhythm, the one that holds down the foundation of the music.
Nobody wants to be the person who doesn't get the girls.
That is also true. However, I have found that bassists make better partners.
Oh, yeah? Tell that to my wife, please.
Okay. I'd love to hear how.
I'm gonna have to relay this to a private conversation.
Oh, it's about
it's gonna have.
I see.
It's about the picking technique. It's about the picking technique.
Oh my god.
What about those acoustic players? Those acoustic are raw finger in the.
Those don't count. They are on a complete different level.
Yes. Yes.
Until you find an electric guitar.
So they have odd time signatures for their finger picking when they're using all of their fingers. That's all I'm saying.
Is this like a scientific paper, Rich?
Yes.
What was the name of it?
Was it is mind your own damn business, lj.org.
I thought waterfall was better, but
oh my god. Guys, please. No.
Dirk, you're German. You should be.
Oh damn!
Why are you not laughing at
used
this?
to this?
I am
used to this. Yeah.
I am. We are a very liberal country, but it's.
Dirk's
I'm thinking in terms of attracting a certain viewership to these live streams, which could be mistaken to, that we might not be talking about trading.
That's fine. I think in that case it'll be lost in translation.
Lost in translation. It's just
going
going to go
completely.
What are you talking about?
Great movie, by the way, with Bill Murray and Scarlett Johansson.
Lost in translation. Lost in translation. Abrados, Abdos, sorry, I was thinking of Abradolf Linkler there for a second. Hi, Richard and Will.
Hello there.
You did get your account this morning, I see. So yourself, Azrael, and is it Sabio? Yes, the three of you got your accounts, so treat them with respect, and they will treat you very well. So enjoy them.
And once you got into funded territory, you join us on our live streams here.
100%.
You first join
I mean,
Will
yeah, fair.
for an interview, and then you join us for the live stream. Why not?
Yeah.
Nice. No.
Indeed, 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 indeed.
Indeed,
Hell yeah.
indeed, indeed.
Hell yeah.
Hell yeah.
You get to be interrogated by me.
It's a lot more fun.
Where are the rebel bases?
Sorry.
Oh,
You're on the floor in the Death Star.
Maybe I should do the interviews. We ask
No.
questions.
we ask the questions.
We will ask the questions.
I like how Dirk was like, "Oh, we don't want to attract these kind of viewers before," and now he's just going
Straight out with the
Full-fledged Nazi again here. Oh, man.
He's like, "Nah, yeah, it's fine."
Anyway, we'll carry on.
Just kidding.
Can't beat him, join him.
Yeah.
Look, Inglourious Bastards is a great movie.
It is.
Dude, it's
You're in
one
that,
of my
weren't you,
all-time
Dirk?
favorites.
Yeah,
it's
it
one
was
of my
mine.
all-time favorites.
Yeah.
I loved Inglourious Bastards.
It was
So
me
good.
back when actually the role of Christoph Maria Waltz, that was me when I still had hair.
When you had hair, yeah.
Really?
And then
I
you
believe
changed your
that.
name. That's your
Yeah.
Hollywood name, right?
That's my Hollywood name, yeah.
Yeah,
Yes.
yeah, of course.
My butt,
Such a good
Quentin, he said, like, Dirk Harding is not going to really resonate within Hollywood.
I will do
Christoph.
this. I will do this, but not as Dirk. I will do it as Christoph.
I mean, Christoph is an Austrian,
Yeah.
Like every,
Does it
good
does it
German.
really matter? I mean, does it really matter?
Oh, yeah, it does a lot, really.
I mean, back then it didn't.
Yeah, but not to me being a German that much, but don't tell Austrians they are basically Germans. Don't make that mistake, please.
No, well,
You're
it's
going to
literally
get
like
chewed
telling
up
a
alive
Canadian that they're
For
American.
good reason.
Yep.
Yeah. Yeah.
You don't do it.
That's like telling William, well, he's actually from England.
Yeah, yeah.
Eva Drenik. Sorry, guys. Let me just hit this.
In 1 second.
You talk saying, well, not this one. This one. I'm waiting 10 days. So Drenik, you were in earlier. We did see your comment, and we did tell you to reach out to help@the5ers.com, and we have addressed it multiple times, pretty much in every single stream for the last 4 to 5 weeks. Every single stream we've addressed it. The CEO of the 5ers has come in and addressed it. We had a Discord call that was recorded live as well, where it was also addressed. So you can't come in here and saying nobody's addressing the issue. We are addressing it. We have addressed it. However, the hosts that are sitting here cannot impact the outcome. The only thing that we can do is we can literally just tell you to reach out to help@the5ers.com, which is our support team. We are not support. So I have no impact on whether or not you're going to get your payout or not. So I understand you guys are frustrated. However, we've explained multiple times that there's a backlog. That the payment issue from the payment supplier, or in this case the distributor, was the problem. But yeah, you guys don't want to listen to us.
Facts.
Guys, that being said, I think I need to take my lunch. And
Probably-
Where are you taking your lunch?
I'm taking my lunch here in office. Because
Oh,
my
I was
beautiful
thought you were going to
wife...
say you're going to take your lunch home.
No.
Take it to the park.
I'm
Yes.
going to take it here at my desk while looking at charts, as always. And yeah, I'm going to be back on today's Monday, right? Yeah, on Wednesday. And see you
But
then.
you're gonna-
And, huh?
Before you leave, Dirk,
What's this? What?
What? I can see Dirk dressed as a German general driving a tank using his calculation. Auf geht's! Oh my God. I shouldn't be feeding always into this stereotype. It's my own fault, really, that I do this type of things.
it
You
is
guys
funny
are-
though.
Yeah, it's funny, but I think sometimes people are getting, isolated impression of us Germans.
Are you being
I-
sarcastic or serious now? I can't
Well,
tell.
I'm serious right now.
I was going to say,
Oh, okay.
no, I think anyone else doesn't
he-
take it that
but
way at
he-
all.
he could
I think
also
it
be
might
joking,
just be
you know.
Germans being too literal. No one else thinks so.
Yeah, well, I hope so,
Come
yeah.
on. So, Dirk, you're going to Berghain now.
I'm going
Is
to
that right?
put on my leather uniforms, my
So you'll be back on
piercings,
Wednesday.
my nipple
Is that
piercings,
why?
and then I'm going to head out to Berghain and dance for a
Yeah,
few
so-
days.
Yeah, exactly.
Dance.
So, hence back on Wednesday, right?
Yeah, hands back
Yeah,
on
fair
Wednesday.
enough. Yeah.
Guys, I'm not going to comment on this. I'm just going to leave you and let you rock. Take care, everybody.
Goodbye,
See you,
Dirk. Have a
Dirk.
good one.
Cheers, mate. Appreciate it.
Yo, LJ,
Oh,
what
boy.
what have you been looking at in the market? Dirk is still talking to us in the background.
yeah.
Go on, Dirk,
I
man.
embarrassed him. Sorry, Dirk. Sure, we'll listen to. He's probably got the stream in the background as well. So, I will say, okay. So, what am I looking at today? I think we've got a further rebound in the Dixie, right? After we had our recoveries today on all the majors, we seem to be trailing off. So, I think right now we've got a couple scribbles on here. I think we're heading up towards the 50 moving average on the 15. And this is the underside of this higher cluster that we sort of broke through, couldn't really hold through, smashed back down. I think that's basically what we've got. That's also the 200 moving average on the 5 minute. So I think from there, we then start to take a move lower. And it's the question if we continue lower on the dollar index from there, or if this becomes a bounce point, potentially with not a full retrace to this level, but like a higher low. So we get to somewhere around here and then just come back up. That's kind of what I'm looking at. The NASDAQ, which I'm sure is what you're mostly concerned about. This is what we mapped out last week, last Friday. This is what I was looking for, some kind of push up into this level. I guess we obviously did get that, and we came right down to that base area looking for. So that's basically being completed. From here, I think the NASDAQ's a bit more questionable, but I would say somewhat similar. Positive momentum as this 200 starts to come down through here. And then potentially a bit
So
of a
buys.
deeper retrace. Buys for now, yes.
Oh, okay.
How much they hold ongoing is another question. But I think buys for now, near term, I think we could get a break of these relative highs, but not quite as high as Friday. So you'll see down the bottom, this says Saturday for me, but that's because it's basically late New York
Yeah.
on Friday.
Eight-hour difference.
Yeah.
Yeah.
So I think we'll get
I-
a potential partial push higher into some differential up there, but then I think we do gradually come off. I think we're starting to lose momentum overall.
Okay. So
the extreme
we
momentum,
lose upward
at least
momentum.
near term. Yeah, upward momentum.
Okay. All right. Yeah. I'm in agreement with you there. I am, however, in a sell at the moment.
Okay. What construction?
I mean, oh, I haven't shared my screen yet.
Yeah, sorry, I meant like
Right.
entry.
No. I'm bringing it up.
Exit, that kind of stuff.
So I'm just busy marking it up. I took it
Yeah,
already,
sorry.
but I didn't mark it up yet. I just wanted to make sure that I am aligned. There we go. 55. So I've already taken TP1 and TP2. My stop loss is already at break even. So I'll show you now what I mean by this. So I should be hitting stop loss now very soon. So I'm not going to bother with TP3 because it's most probably just going to hit stop loss. Anyway, the idea was as such. So we had the lows of Friday of the Tokyo session. We kind of like played around this segment a little while. It's a little bit lower. We came to this area of interest that I had marked up, which ended up being the highs of the Tokyo session of today. We had some small rejections off of this area here that I thought we could potentially come to. I initially thought that we were going to get all the way up into this base area where we had these reactions off of, but we did not make it. We basically just wicked into this area, and then we started to dip a little bit lower. And as we were dipping a little bit lower, we started gathering some momentum with these candles. Dipping below the 50 EMA, we did try to retrace again, and then based on that I was like, okay, it does seem as though the MACD was showing we're a little bit more bearish, a little bit more volume in the direction of the bears. We also had this reaction here, which we didn't really follow up with, so I was like, okay, I'm willing to take a sell here. Took a sell, got pretty much on the close of the candle, but I got wicked not wicked, I got the spread moved me a little bit lower. Entered, took TP1, went back to break even, pushed lower, took TP2 barely, like 1 pipette difference, and it took me. I took TP2, moved it to break even. I'm actually just going to check here if I'm still in. Yes, I'm still in the move. So it did not take me out just yet. So hoping to see a little bit more price action down to the low of the day. That would be ideal. First and foremost for my setup. That would be ideal. However, if this ends up just taking me out now, then I at least have one trade this morning of 0.75, and this one's already locked up another 0.75, so I'm already 1.5% up for today. So I'm happy if this were to just knock me out there. Then I'm done for today. Then I've had my 2 trades. They've both gone to TP2 and then stop loss. So I'm happy with that.
Beauty.
So just trading intraday.
I like
This one of earlier, I got in, took TP1, TP2 very quickly, and then it just came back to break even, knocked me out, and then eventually made its way up to pretty much TP4. So I don't know if it would have swept TP4, to be dead honest with you, but it would have taken TP3, which would have pretty much brought me to a 1.5% trade, the first one, and then this extra 0.75 would have brought me up to 2.25% for today. But yeah, it didn't. So happy with the 2 trades. Just going to see where it goes now, basically. So
Yeah.
But I agree with
I'd
you.
say-
If I look at the 4 hourly, it did look like it wanted to start pushing
Hang on.
lower.
If
Oh,
I
no,
jump over here, basically,
It's
I
exactly
was
that.
just going to say, the 1 hour, like we're riding the 200 now. Like we've had wicks below. We kind of keep, oscillating around that 200 hour moving average. Trying to push above. We pulled back into it again. We've wicked through it. Then we've got the body close through here, which we're waiting for the next 35 minutes. And then I'd like to see a push up to the 100 hour moving average, the 50, which is the bottom side of this cluster, the prior high when we had that temporary top formed, and then see if we come into there and then come right down. Because then that would also form a bit of a head and shoulders type thing where we go right lower, right, potentially. So that would be ideal. I think this has had massive momentum the whole way. Like, look at this. Like, this is ridiculous, right? So I think we're definitely due for a bit of just a pause. This is not, it's not like we're declining or anything. Just bit of a pause break, re-enter from lower. So I think it's definitely sells from tops going forward. Outside of pullbacks into, say, just like you took Rich, into this lower cluster where you are going to get that rebound intraday, where you can take advantage of that. But yeah, that would be my next massive point of call right now, to see if that actually holds and then see us go much lower.
Yeah, I'm very keen to see whether or not this is going to be a short-term retracement or the beginning of a long-term. Well, I'm saying long-term, but you know what I mean, like a longer duration downward push. But yeah, we'll see. We'll see. It's gonna.
Fair.
Once again, I'm always just concerned with the intraday. I do use the higher time frames, the 1 hour and the 4 hour, to kind of like gauge. If I just remove these to gauge, I mean, here it did have a nice hourly base, which I didn't mark up, but that's basically the reaction that we've had. I would love for this to continue going lower. Love. If it doesn't, so what? It is not the end of the world. It does look like it's rejecting very nicely, though. I do hope that this candle over here can continue pushing bearishly, dropping. That would be very nice.
I definitely think we could. It's not out of the question, because that's still in the same pocket that we can then rebound higher after, and then come up and then come down. So I think this is pretty fair. I think right now we definitely got that downside intact in general.
Okay.
Yeah.
That's not the word.
Yeah, just like a loose, not impetus. I wouldn't say impetus. Like, that's more of a slightly more conviction. I think this is more stochastic, more like waft. I say.
Little bit.
Yeah. So.
Here's a good question. Sorry, Alger, did you want to?
I was just going to say, while you guys do that, I might restart my stream, because I saw the thing was lagging. Cool. I'll still hang around for a bit, so I'll come back. I'll just reset. And then
okay, cool. Then I'll leave this question for when you're back, because I know that this question is pretty good. Because I think all three of us have different things, so I think it's a pretty good one.
Yeah, sure. All right, I'll be back in literally like 2 minutes. All right, be right back.
Schmidt beans. Lewis saying, what broker on TradingView has the closest spread to the 5ers? I have found that for the Forex pairs, so EU, GU, and such, it is a wonder. So I'll bring up this one. This is the play account that we're playing with. I did take this one as I came onto stream. So if you have a look at GU as an example, maybe you can't see the price action here pretty well, but maybe I can. So right now, the price on GU, according to the 5ers chart, is 133.557. And if I go to the GU chart on a wonder, it's 135.556. 135.556. 135.556. So the Owanda chart on MetaTrader is very, very close. Now, take that with a grain of salt, okay? Because it's not always going to be that way. The 5ers doesn't take its data feed from Owanda, but Owanda has its, or MetaTrader has its own like connection to Owanda or whatever. But you'll get some spread differences from time to time, especially if you have rollover or high volatility. There might be differences. That's for the currencies. For NASDAQ, I've found that the US Tech 100 on the IC markets has the closest price information. So right now it's 28,996, 997-ish. If I go to NASDAQ, it is 28,999, almost. So it's hopping around a little bit. So 28,997. 28,998, 28,999, 28,998-ish. So it's very close with the IC markets data feed for NASDAQ. Whereas US 30, this one's a wonder, so 29 or 49 to 16. And this one is 49,202. I don't think I've actually moved this one. 29,2. Yeah, no, I haven't moved the US one, the US 31, because I don't trade US 30. I haven't checked this one, but that's the ones that I have found that's the closest. Currency and NASDAQ. Yourself, Will, which ones have you checked? Because you trade gold. I can't hear Will.
Apologies. I was
there we go.
I was muted. Yeah. I trade with Owanda on gold, or my trading view on gold. However, you will see me use Vantage a lot. It's because my personal broker, I use Vantage. So sometimes I will go over and you'll see me using a Vantage chart. That's not through design. That's just because I use Vantage with my personal broker on one of my other accounts. Whereas I like the Owanda feed. I find that that's pretty similar on gold.
Yeah, because right now, gold is, according to the 5ers, 45.39-ish. And according to the Owanda chart on MetaTrader, it's 45.39-ish.
Yeah,
so relatively close.
Yeah, 0.500, and it's 0.500. Yeah, so it's as close can get.
Yeah, it's relatively close. But once again, caveat: once you start getting some volatility in price action, like let's say news events, rollover, that kind of like stuff, you might see discrepancies. You might see it drift away from it.
Yeah.
Henry saying, I use IC markets now because my indicator requires me to use the same source as the broker. Is it because you've set up your indicator with a specific data feed in mind, Henry?
So IC markets, I've had a lot of people say to me, IC markets have gone garbage. I stopped using IC markets a long time ago.
Gone garbage? What do you mean?
Yeah, apparently their spreads and all were absolutely diabolical. I don't know. I don't use IC markets, but
I have a personal account with IC markets.
I thought IC markets were one of the best.
Yeah, you got ECN. You got an ECN network, so it's basically zero or at worst like 0.1.
Like I said,
very, very close.
I don't use IC
like
markets.
80% of the time 0, 20% of the time 0.1 during active hours. During inactive hours of rollover, you get that normal spread expansion, which is everyone.
Getting a bit of volatility now.
But yeah, that's it. Then you've just got commission after that. That's it.
So they're potentially full of absolute garbage, and IC markets are fine.
Yes, yeah. That's why it becomes one of the anchors where it's very like reliable, right? Because it's going to be the same whatever thing. They do have other like accounts where you can get different tiers where it does have spread,
maybe they're using
that
a
kind of thing.
Account, and I don't know.
Yeah, or some kind of combination.
Thing,
but the standard is the
I've just been knocked out of my position.
You weren't knocked out; you jumped out, right? Because
it was the stop loss was to break even, so it just took me out now.
Exit.
Oh, you brought it back, right?
Yeah. So
I'm finally getting a bit of movement in GU, but nothing exciting. Yeah, I would have exited this a long time ago, but after our conversation earlier,
1.5%,
because it's our play account, on gold I wouldn't have even taken this trade, but because it's our play account, I said, you know what, I'm going to hold this to TP or stop loss, even if I'm in it all day for several days. I'm going to see how it goes. So that's what I'm doing.
Yeah, the play account did the same thing. It took TP1 and then it just knocked out now. But this one was entered quite a bit later than than my other account. So.
Oh, Rich, can you send me a thing for play account?
Oh yeah, let me talk to the manager.
All right.
The big people upstairs.
We'll pump it. We did just get a bit of a jump
Yeah.
on all the majors. So
Well, I'm
dollar
hoping
down.
we'll get a bit more of a jump.
US is trying to modify a long-standing agreement to ensure American troops can stay in Greenland indefinitely, even if Greenland becomes independent.
For God's sake, standard, typical. Yeah, of course.
Yeah, that's what's probably caused this little bit of
Yeah,
volatility now.
Yeah, that's the only thing I can see recently. I mean, that was like 7 minutes ago, though. I don't think that would really actually move markets. Like it's a very general comment. I feel like that's very baked in. It's like we've talked about before. Like everything the US is doing right now is all very it's all around trade lines, maritime trade lines, that kind of thing. What's this? Takaichi endorses supplemental budget. Trump escalates rhetoric towards Iran and markets spooked.
Yeah, this was, according to what Forex Factory was showing, this was 2 minutes ago. So I don't know if this potentially.
I think that's just a normal.
It's just a, I don't know, like a news
like
piece.
a general outfit. Yeah, that's all. Yeah, a news piece. Yeah, because that's old information. I think that's like it's just general market movements. Already on the incline before, so.
I mean, there was a bit of a something, but it was a bit of a something very little.
Yeah, it's hard to tell because the thing is, we've had the past probably like 2.5, 3 weeks now. When we do get some kind of headline, we don't actually move that much.
No,
It tends to be like 5 pips, like in like an aggressive, 5 pips up, which it was a headline. But in the past, we were moving like 50. Right?
Yeah.
Now it's just okay. So
it's like, okay, thank you for the 5 pips. I guess you gave me hope. That's all you did.
And I will say that's actually one of the troubles with technical stuff. Like you'd see right here where we've broken part of the neckline. Where we might snap up. You might have got triggered on that, and then we've pulled back, and we're now below that neckline once again, right?
It's weird.
So hence we don't get that follow through, and then we've often seen where we just get that, and then it actually drills lower once again. So I think today we still will go higher. That's what I'm looking for. That's mainly on the back of last week's activity that we're getting kind of just a general recovery.
So I can actually remove the drawings because it's becoming, my screen is becoming a little bit crowded.
You reckon? I think your screen's pretty tame. I think it's pretty tame, right?
Yeah, but it's comparative, isn't it? It's like when I compare it to yours,
relative.
it's like, wow, mine is so clean and pretty, and yours is like chaos.
Told you, it's organized chaos.
It's how we like it. So.
Okay, so let me just do this one as well.
Delete.
There we go. Schmidt. All right, so I can go ahead and remove all of these now.
I was okay. Dollar yen is dumping.
Kind of bit
Dollar yen
just dropped like 20 pips. So maybe there is.
There's movement now.
Yeah, getting a bit of movement.
There must.
I want more movement though. I need
okay,
this.
Here we go. US proposed temporary waiver on Iran oil sanctions.
I mean, is this a how can I put this? Is this a gesture of good faith?
God damn! Look at you.
It's a gesture of good faith. I'd also say it's kind of the general direction that the U.S. administration actually wants. Like, same with Russia. Ultimately, they want Iran and Russia to come back into the general sphere of trade. accept them more, stop everyone being so radical and being crazy. It's like, guys, if you just join trade, you'll chill out. Like China and US have very different ideologies, but China doesn't do anything. The US doesn't do anything to China. And yes, there is that backlog of if they did do something to each other, they'd destroy each other. But more so, it's just, okay, we agree to disagree. We're going to live in our little bubbles. You stay over there, I stay over here. We still communicate in trade. We do have to have some kind of broad trade direction as far as like commerce and that kind of thing. So same deal with getting Iran and Russia back on the table. Obviously, the one big thing with the Middle East situation ending and the Hormuz Strait opening, do we go back to the sanctions being put on Iran and Russia, potentially? Right, so this comes into okay, you're going to allow us to trade oil. We can rebuild our country if you allow us to do that, because now we're getting money from the oil. You'll have more oil in circulation. Hence, the oil price also goes down, reduces costs for your people there. You get that as a win. We get it as a win for us. We can rebuild, join the general economy. Potentially then goes to Russia saying, okay, we're no longer sanctioned. That's been lifted. Maybe we'll be a bit more calm around what we want from Ukraine. Maybe then the EU goes, okay, look, Russia, we're bringing you back in the thing. We'll buy some of your energy on the condition that you chill out, right? You take this portion of Ukraine, we'll just call it a day. You agree not to invade any further, and that's it. That seems to be kind of the general.
If you really promise not to do this again, don't be bad. Don't be bad.
Yes, and that's one thing. But I think it will hence be setting them up in such a position where they're winning so much that, and this is a very Trump. One, it's just smart in general. Plus, it's also very Trump aligned that we're going to make them actually win so much that they won't want to deviate from that, because they know that they will lose everything that they've been gaining. Right? He definitely pushes from the point of incentive, right? Trying to move things up and forward and say like, hey, you guys can have a better day-to-day way of life, bigger bank balance, all that kind of stuff, rather than trying to restrict so much. Right? He likes to say, we're going to give you all this stuff and it'll be amazing. And if you don't adhere to it, you'll lose all the amazing stuff. Rather than other outlets saying, we're going to restrict you because you've been naughty and you're already not really winning that much, but we're going to restrict you further. Which you can argue that if you're already kind of losing, it's not that bad losing a little bit worse. Like you're already, right?
I mean, consider the alternative, let's say, as, let's say, China, Russia. Let's look at the BRICS countries. Considering the dollar being the currency of trade and the reliance on being a part of this global economy, the BRICS nations are looking at creating their own currency of trade among each other, and then eventually kind of like take over the big player, which is dollar. In the dollar doing this, saying, look, we'll give you a little taste. We've sanctioned you because you were naughty. So we're going to remove said sanctions, and you get a taste of the sweet, sweet fruit on the other side of the fence. We would like you to, A, not have, I don't know, B, naughtiness again, but also B, don't be a competitor in terms of creating a new currency, but rather integrate into the fold, ensuring that the dollar remains, I don't know, the currency of trade. I don't know if that could be a potential thing. This is hypothetical on my point of view. Just...
Yeah.
not a now kind of thing, but like in future, like generations.
Yeah,
going
this
on.
is decades. This is like 3 decades out. Like, I agree
Yeah.
with that. I think it's more of a calling them to the table, that they're challenging things enough. They know they can't quite win. I agree, even with China, like, they can't quite win. Like, you have to give up your whole production outfit. Then who is there to produce things? What you're gonna? India's too far developed that you turn India into China. Obviously, they've got. It's a very broad thing where they've got massive rich and very poor people. The only thing left would be Africa. And then at that point, if you got that, like, no one's going to stand for that politically as far as developed nations as well. They say, like, no, this is not right. We should actually bring them up, blah, blah. It won't work materially. So I think it's more of a calling them to the table and say, we want to renegotiate, and then we'll have a general competition at the top, but we're kind of now both playing the chess game, and then best man wins. So it becomes more of a like, where the UK is after like, UK used to be the dominant player in the world before the US, like pre-World War II, that kind of thing, right?
Yeah.
Now the US is. But the UK hasn't like thrown up their hands. They're just like, yep, this is where we are now. Fair enough. We spent a lot of resources and we did get kind of messed up and this and that, but we made it out, and the US is our ally. And on the same team, fair enough, we can still do our own thing. Now the US is the main leader, but whatever. It doesn't change that much. So I think it's kind of like that, where these other countries are in that like third tier. If you have US, UK as like second, and then China plus as like the third basket. They're not even invited to the chess table, put it that way, to lose against the US. Like, at least invite us to the game. We might lose, but we can now come in second, and we're in that sphere of the top players, right? Kind of thing. Ultimately, obviously, they would still like to sneak ahead and take over entirely.
Because it is a competition, after all.
But they have to at least crawl their way into the invite, like the invitational, to even be in the game first and foremost.
Yeah.
But I think they're also very much of the thing of, if we can get the right mix, that even if they do not overall take over, somehow they can get enough influence that we get like a mixed sphere between the two, that they're happy being kind of second place, where it's not really second place. It's just like everyone's kind of doing their own thing, but we've just got a centralized entity.
It's just like
like the UK. Like, the UK doesn't complain that like, oh, the US is beating it. It's kind of like, no, that's just where stuff happens now. It used to be London.
like us.
London's still a massive player. We're not out the game, but we're not the same as New York anymore. And just, it is what it is.
And the thing is, like, it's also realizing that this is like the cyclical nature of trade as well. Like, you have dominance that eventually fades, and there's a new dominance that takes over that will eventually fade, and a new dominance will take over. It's just a cyclical thing. Like you said, like before the before the pound, obviously, you had like gold. Gold was like the big woo. That faded. Not into obscurity, but enough so that there was a new dominant, like, world currency, quote unquote, of trade, and so on and so forth. And it just kind of carries on to the next one, the next one, the next one. In this case, it's the dollar that's like desperately trying to hold on to the top dog position. They're like, there's so many competitors now. Because back then, when we were going over from the pound onto the dollar, who else was there? There was nobody out there. We had just been ravaged by a world war. The whole world was in incredible debt at the time. And you had this one group that said, look, how about we do this? It's to the betterment of all. And they were like, okay, fair enough, we'll do that.
Exactly. That's where the US played that fringe part, where they're not quite involved, but they're just putting the fingers out, and they did the
Yeah.
financing and like give us your gold because we
Yes.
don't know what's going to happen. So, and then they ended up with all the gold, and they're like, okay, now we're the big winners.
Exactly.
That's it, and that's why we had to go off the gold standard back in the day, because gold would keep going up, and then prices would keep going down. So it's like how in recent times people talk about even Bitcoin when that was very hype and talking about you need decentralization, that kind of stuff. It doesn't quite work because then there's no incentive to actually be active in the market, in
Then it's just buy and hold.
the economy. Yeah, because the same thing as what we've seen with Japan. Because, like, okay, if I do this thing today, I can do it in 3 years from now for 15% cheaper. And so
Why
you got to
would I do
say,
it today?
if I make 15%, I'm net, plus I've taken the risk. So I need to then make more than that, plus minus tax. So you're going to make ridiculous returns just to do anything. So everyone's like, why would I bother?
Yeah.
And the more people don't bother, the quicker it goes down, which means you can actually buy. And yeah, that's why every central bank or every government has tried to curb that whole deflation type thing. So they prefer inflation overall. That's why we did QE during GFC and beyond. So
Yeah, and then now you have more players on the chessboard, or at least let's say on the black backgammon board, or whatever like strategy-based board game you want to think of. Risk, you can do Risk, Catan, any one of them. The amount of players on the board now that actually have ability to sway the whole broader economy of the world. There's just more players now. Where back then it's just you were kind of like limited in your options, and it was like this is the devil we do know kind of like thing with the dollar. But now you actually have players that are, though not immediately, but has the potential to become a bigger threat in terms of its dominance, or a fight for dominance, let's rather say, of the dollar.
yeah.
Nice. Oh yeah, I was still gonna. I'm looking at your trades now, Will. How are they going? I just quickly need to message.
Quite interesting, actually. I was going to wait for you guys to finish. I was going to talk about these trades because there's a lot that happened over these trades now. Now, obviously, guys, like I said to you on gold, I'll bring my trading view up in just a second. But on gold, this whole trade wouldn't be valid to me. I didn't want to enter this trade, but I thought, it's a play about account, so let's see what we can do on it. And then it comes down. We didn't get a close, which was garbage. We did on the 5, on the 15, it looked crap. We came down, broken close under a lot of all this. So I kind of thought to myself, why isn't it going up? There we go. And I kind of thought to myself, right, okay, there's reasons here that potentially I don't want to be entering. What are you doing? We got a break and close above this. I thought to myself, if we get a break and close above this, then perhaps we can get some bullish movement in gold. Now, because we got a fundamental bullish movement, potentially all this may be invalidated and it may continue to drop. However, I started to look at gold and think this is bearish. This is heading down. I kind of wanted to actually be in shorts. Same goes on GU. GU, I kind of wanted to be in shorts as well. We came down here, and then this was the area of interest for me on the 5-minute. And as we moved down, yes, we did slowly move down, but then when we got this candle here, this was the invalidation. We got this big bearish close here, and then it didn't quite come down below this point. However, it dropped enough for me because I was looking at this area here as a consolidation. It dropped enough for me to be like, I really don't know if I like this. We then got this consolidation. Again, I will clear this up. It'll be a little bit neater on my trading view. We got this area of consolidation here that I thought if we can come into this zone, then I will take out of the trade for around break even. Now, I haven't. I've held, and the reason I've held is we discussed a little bit earlier regarding holding trades until you hit TP or stop loss. You guys know that I have a discretionary way of trading, and I thought, you know what? Let's just see what a complete hold to a TP or stop loss would be. And that's what I'm doing now. Luckily, and I'm going to say luckily because it's fundamental news, we got that fundamental that pushed price bullish. However, I was about $140 up on this account. Now I'm around $85 up. If we can fully hit TP, I think I'd be closing for about 4% profit. But we'll see how it goes. No, we'll see how. I'm going to leave this up here. We're floating anything from 70 to 150. But the GU was a good trade, turned invalid, but nonetheless, like I said, I'm gonna hold this until the death of the account or the pass of the account. But just to let you guys know, just to have a bit of transparency, I wouldn't be in this if this was my live account.
Interesting.
I wanted to get to this question because I marked it earlier, but I didn't.
I think I can see the one you're looking at, Rich.
Well, it was the one that I wanted to get to before LJ dropped off and then came back. It's this one. It's guys, as I can see so far, all of you all of us are price action traders. What are your 5 main focus points in deciding where to take the trade?
Okay, yeah. That was okay. Yeah, I see why you're waiting for me because this is differential. I'll let you guys go first, and then I'll probably go after.
So, Will, while your chart is up, we can have a very quick 5 points of how to determine where price is going, or let's say 5 things that you look for that gives you conviction of a directional move.
Let me get my trading view up. Okay.
I'll just bring it up once again.
Right, guys, as I can see so far, all of you are price action traders. What are your 5 main focus points in deciding where to take the trade? Okay, so 5. I can give you 3 to 4 strong ones, and then anything above is on the money. So first things first, I want to find trend. I want to be along with the trend, and simplest way of doing that is literally grabbing my arrow line here, going from the low, and literally just following up the order flow of the market. So number 1, order flow, simple as that. It's the trend of the market. Number 2, I want to mark out my areas of interest. Usually these are either 1 hour or 15-minute. I can do it on the lower time frames, but I like to make sure that they're nice areas of interest. And that would be, consolidation zones or highs. Usually they're swing high, swing lows, but more times than not, I'll actually go to pre-session. So Tokyo high, Tokyo lows. If we get a nice, so that's 2. I like to see a fib retracement. So I like to see a nice impulsive move. And then I do like to watch a follow back or a pull back on that. So a nice fib retracement. I do like to use imbalances. So I do like to use the fair value gap as a bit of a confluence as well. So imbalance, fair value gap, trend, consolidation zone or point of interest, and maybe a break and close above consolidation with an impulsive move. So they're my main 4 points that I like to. That and time, I suppose. I won't trade the lunch crossover. So like now, for example, 12 till 1 p.m. I find that difficult time for me to trade. That's super quick.
That's fair.
Go on.
I was going to, keep going. I was going to say you go next, Rich, after.
Yeah, if you want, guys, if that was too quick, that was pretty quickly. If you want, I'm more than happy to break it down on what it would look like on a chart. So if you guys want to see that, I'm more than happy to break it down bit by bit and really go in depth on it. But it may take some time, and I don't want to go diving too much into it because we're all going to give an answer.
I would say I have 4. basic price action. So higher highs, higher lows, lower highs, reactions of established areas, trend direction, and candle momentum. Those are the 5 things that I would say I use to determine the validity of a directional move, the confluence, the confidence that I'm going to have in that directional move, and just overall viewing a direction. So higher high, higher low, very simple. You choose a time frame, like for argument's sake, in this case, I'll take the 5 minute. I look for small little swing points. So because I'm going to be trading the 5 minute, I would be looking for price action on the 5 minute to break something. So if this is the low and this is a high, this would be a lower low, a higher low, my apologies, higher low. And then we're breaking the high. So this to me indicates directional movements. Established areas is a very simple. I want to look at an area where multiple times price has either reacted strongly off of or struggled to break through. So if it has broken through and moved strongly out of it, then that is a good thing, because then that means that there's momentum in that area. It's gained momentum, so it's a decision point. And if it is rejecting off of an area, it indicates that there's resistance or it's supported in that area. Obviously, support being down low and resistance being up high. Though, look for those two. So that's reactions off of established areas. Trend direction is very simple. You can use an EMA or you can use the higher highs, higher lows. But the higher highs, higher lows can bite you in the backside. Because sometimes it shows that it's making a higher high and then immediately flips and starts making a lower high, that kind of like thing. And then you think, okay, we're reversing now, but it's not always the same. And then the candle momentum, so the characteristics of the candle. How momentous is a candle movement in relation to a previous candle? That also gives me more conviction into a directional move. Here, obviously, this was a news event, but if I considered price action over here, and compare that to what price action looks over here, there's a distinct difference. So it is the slowing of price in an area. It is the speeding up of price out of an area. So that's basically the things that I would be looking at in order to find a directional bias or an expectancy of a directional move.
Nice. I think I missed part of what you said, but that's fine. I will say, okay, so what I do as far as things is that. That's it. So yeah, definitely not sort of direct price action trader. Like typically I'll formulate some kind of idea prior, which is typically macro driven in general. Like we'll get the general sentiment, what kind of momentum we have overall for the dollar, for interest rates. Interest rates will be the Fed, ECB, all the majors, Bank of England, Reserve Bank of Australia, Bank of Canada, New Zealand, that kind of thing. Like all the big players. Try and formulate that. Look at the financial conditions where inflation, jobs market, that kind of thing is, which is obviously going to have that back and forth between the actual central bank tendency. So you're basically measuring like a tightness or a loosening of financial conditions for each country, and then basically comparing them towards each other. That will tend to reflect in the bond market, which changes rate differentials, and then will change or move the currency in sympathy with that. So on top of that, I'll then look at stocks, financial conditions. Say we have like the US is like the NASDAQ. I'll look at things like options markets, options levels. I often use the 0 DTE mid pricing to see where we get like an aggregate daily level that we pull back to, and flip below, flip above, and then choose a direction. Go away, Akram. Go back to the Nürburgring, right? Complete your 24 hours, right? Do another 24 hours. Do 48. Do
Actually completed this time.
yeah. But yeah, so that'll be my general thing. And then obviously, as far as taking positions, yes, I will use that price action standpoint. Typically, it's break of structure, change of character type thing, if you want to call it that, where you've got to the left shoulder of the chart, highs, lows, wick bottoms, support, resistance, very simple like that. Do actually break that, and then you have to have follow-up candles with momentum. So then I'll go down to entry points on the 1 and 5 minute, but you have to be followed up and closed on the 15, and then looking at the 1 hour and 4 hour that you actually have conviction that this is actually a sustained move that we're going to push in a certain direction. But typically will be on the basis of that kind of macro outlook in general. Then I'll use cross correlation. So if we have euro dollar, I'll go look at what's happening. Okay, this is a major, the majority of the dollar index. I'll then go look individually at the other big players, Aussie dollar, which has a risk component and commodities component baked in. Where are we going there? The pound, obviously big trade partner with the EU, very much part of the dollar complex as well. I'll look at those top three, then go to the Dixie. Obviously, the Dixie has its own construct with the sort of 6 favorable outfits. Now, if all this lines up, I'm like, okay, now we've got something. If everything's moving in a different kind of idiosyncratic way, then I'll try and look at like the VIX, look at the NASDAQ, gauge the overall risk on, risk off sentiment, and then readjust. So yeah, mine is definitely not price action based, as you can see. Like that sound, it's very selective.
If you didn't understand what LJ was on about, that's okay. Not many people do.
There's a lot of components. It's a big machine that goes in like this, and then you cross calculate all of it together.
Yeah, this is very true.
Oh, dude, I got more. I'm trying to simplify right now, right? So we can go deeper.
This was English. You should hear him when he starts doing this. All of this.
Yeah, literally. You should hear him when he's trying to complicate it.
Yeah. But to the base question is that no, we're not all just price action traders. I would say Rich and Will, yourselves are definitely more that way oriented, whereas myself more macro, more momentum, that kind of thing. But at the same time, I will immediately snap on something, go the other way.
Yeah.
But that
you
that's
are a
also
jack
where I
of
think
all
we get.
trades and a master of all. We're jacks, just jacks. That's we're just jacks.
Yeah, with the jack of Forex, the jack of day trading.
It can be any jack: jack white, jack black, jack sparrow, jack any one of them.
There's
Jack
only
in a
one,
box.
There's only one
Jack Skellington.
Jack
Jackaboy.
Sparrow.
But that's also where it's good, where we get a mix of like raw stuff. I bring more in-depth stuff, try and condense it into stuff that you guys in chat as well can consolidate to a degree, but also give more of that depth, sometimes more or less. And you get a mix between that. Like we all level off each other. And the same thing with you guys in chat with different approaches, strategies, ideas. And you might have a certain strat or approach or a certain style, but then there might be a heavy macro dominant play. So it looks good on the charts, but given that backdrop, you might pull back, right? And so that's where we, obviously like presenting that whole picture is very favorable to everyone.
Real GC. The dumb version sounds alien to us.
Yep. Don't worry, we're in the same boat, and we spend a lot of time with LJ, like a lot of time. And it's just like,
Even
man.
outside of work hours, should we call it? We spend a lot of time with LJ. And we've now requested that LJ, wherever he goes, comes with like subtitles
And a
or
thesaurus.
Well, I was thinking about writing that like macro kind of book as far as like general stuff. Maybe I can still do that and see what people think. And if they're like, oh, nah, never mind. Right? We're like, oh yeah, this is cool.
Oh yeah,
We'll see.
nah.
Yeah, no, yeah,
Oh
no,
yeah,
no,
nah.
no.
Oh
Yeah,
yeah,
no,
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 yeah.
Oh,
no,
yeah,
no,
nah,
no,
yeah,
no,
nah.
no, no, yeah.
Nah, yeah, nah, mate. Yeah.
Okay, so this leads us into a little bit more of a. Let's call this a serious question. Hello, Richard and the gang from Gozira. When is a good time to quit trading? The market has been cooking me lately.
Fair question.
Yes, because this industry isn't for everybody. And it is.
Yes.
It's not to say that everybody is going to become successful if they just keep on pushing. You know, it's not one of those industries where hard work is going to certainly pay off, because from my experience, no industry is like that where hard work will certainly pay off. Because if hard work was the way for you to become the richest people on earth, then your blue collar workers would be the richest people.
Yeah.
Oh, dude, I've got a whole mathematical thing I can do about this that I'm not going to net out. But yes, once again, dude, I got some. Anyway, never mind.
Let's not get too complicated there, LJ.
Yeah.
Give everybody an opportunity just to catch up.
Yeah.
Will and LJ, whichever one of you two wants to go first. Let's say, have you ever thought about like closing up shop for trading? And what was on the one side the factors that made you not close up shop, and what are the factors that would have made you close up shop?
Dude, I hate this.
I think we'll go first.
You want me to go first?
Well, yeah, I would say yes, definitely across the board. But yeah, I think we'll go first as like
Okay.
Yeah.
Let's bring that comment back up again, just so I can go back and reference it, keep it relevant. Okay, so when's a good time to quit trading? Do one awful thing to ask, man. I'm so sorry that you have to ask that, because that means that you've gotten to a point of you feel mentally just beaten. So defeated. And that's a crap feeling for anyone, man. Yes, I have 100%. Even now, I still get days where I'm like, why am I doing this? You know, I could have had a cushy little number working on my family business, you know, and just being not rich, but made, you know, secure. So like, what, you know, when you have an alternative, but you decide to go down this absolute chaotic industry instead, then yeah, no, 100%. Why? Yeah, no, yeah, mate. You know, why wouldn't you consider it? You know, why wouldn't you consider quitting? But like, when would I say to someone, and I said it recently, actually, I said, quit. Only twice, 2 people have I ever told to quit. When would I actually quit is when your life is at risk. And what I mean by your life, I don't mean life and death. I mean relationships, future, like crippling debt, you know, like, I mean real rock bottom sort of situations where the point of no return is near. You know, when it's cases like that and it's almost to the point where you've lost your head, quit. Because there's nothing worse than going at something that you are no longer logical against. So if you're getting to the stage where logic has flown out the window and almost hope and addiction keeps you alive in the industry, I hate to admit it, and I'm sure Rich will be able to sort of divulge on this as well, coming from an actual gambling background as well, being a professional gambler. I'm sure, Rich, you've seen it with poker players. You know, when the idea of hope and, you know, hope and dreams and just gambling addiction sort of side of things kicks in, and that's what keeps you going in the markets, unfortunately, that's the time you got to consider giving up, because you are no longer logical. You're no longer data driven. You're no longer, able to perform at your best ability. So that's probably when I'd consider quitting. Either that, or when something comes up that's too obviously better. And again, this is completely down to the person. If you get offered a job, it's financially stable, it's secure, it's great money, and you would have had to have been 20 years deep into your industry, into the trading industry, before you even consider scaling to that sort of money, and it's a job that you love, and you know that you're going to be happy in the job, and you're at a stage now where potentially you've got a family to look after, then you need to weigh up the pros and cons of trading. Because then you need to look at, right, okay, I'm here in my trading, but this job is a job that I love. It may not be a dream job, or it may be slightly stressful, or there may be areas in this job that, you've got to work long hours, but it's still a job you love. And it's in an industry that you love. And it's good money. And then you've got other people depending and relying on you. But then you've also got, for example, that you're starting to become profitable with trading, or perhaps that you're struggling with trading still. And then you look at the industry and you're like, for me to earn that sort of money and be this financially secure and have people depending on me, it would take me years and years and years and years and years and scaling to get to that stage. And I'm not at a place now where, I can afford to just throw caution to the wind. At that point, that's another example where I'd say that's time to consider quitting. But the biggest one is the first point that I make. The first point I made is when your life is at risk. And again, just to reiterate, not life or death. Life as in relationships, financial worries, like pure rock bottom, stuff like that. When logic goes out the window and gambling takes over and addiction takes over, that's when I'd quit.
Yeah, I will have to agree to that, because I've seen this way too many times. Coming from a poker background, knowing you see people rock up and they have to go and loan money to enter a tournament. That's the signs. It's this person is no longer capable of managing themselves, and the idea of just one more attempt, just one more account, just one more card flip, just one more tournament. You can call it whatever. For me, it is the point. Everything that you've said, 100% agree to all of it. It's the point where your emotional health, your mental health, and your physical health starts deteriorating to a point where you, as a trader or whatever industry that you're going into, where it deteriorates to a point where it is now no longer healthy for you to participate in this field. It's going to be personal to each individual. And at the end of the day, it's going to be a question of, what am I willing to offer up? What am I willing to sacrifice in order to continue this journey? That's kind of like the question. But from a logical standpoint, it is probably going to be that point where you are destitute, emotionally, physically, financially, and it does more harm than good for you to attempt to continue this process. So in your case, if you feel like it's best for you to quit, then I would suggest that you consider taking a step back. Bring yourself up to a point again where you won't be reliant on this becoming a success or being a success, and rather come back to it when you can enjoy it again, when you can look at the market freely, where you can feel like, you know what, even if I do lose an account, it's not going to crush me emotionally, physically, and mentally. So it's just an add-on to everything that Willa said. Yourself, LJ, what is your point of view in this?
Yeah, so I think this is a very personal question in general. I think ultimately, if you're thinking that it's, have you tried to jump into trading full time, potentially ahead of when you what might have been warranted. So you've kind of jumped the skis, per se. I would say continue working in whatever area you're in, even if it's just like if you actually have gone to uni, you've got like a more professional job, that kind of thing, or if you're just working your general job at like retail or I don't know, Apple or like some service store nearby, that's fine, doesn't matter. Keep doing trading in the background. Don't jump the gun too early just because you had a good like 3 months. You want a good year plus, right? And people are very eager because they're like, oh, this is so much better. I just want to quit my job. I've got a couple dollars. Yeah, I could make it work for a bit. Rah, rah. Go a full year plus and then do it. Now, beyond that, if somehow you did that and you had a bit of a good time and then it become really bad and you think you need to quit for some reason. Now, obviously, the question is why? Are you just failing in general? It's just kind of very mediocre, like because there's different degrees of failing. Like you're burning the chalice, kind of like what Rich was saying, where you're digging into every kind of dollar you can find, borrowing money from people, that kind of stuff. But there's no prospect of return on the other end. You've not structured this as some kind of business agreement or whatever, where you're being sort of more professional and you're trying to expand your capital, that kind of thing. You're just trying to like got this hunger to like keep doing it or something. Or you've just scorned your kind of current savings that you had. Maybe you quit your job too early. You can always get another job, go back to it, go again. Or you still have your job, you're trading, but it's not going as hot as you thought. There's a very broad spectrum of this stuff. But overall, if we try to nail it down to the key portions of should you do it, should you not, when should you quit, I think first and foremost, like what you were saying, Rich, before, is yes, the main thing is if you're starting to cause harm to other people, pretty clear thing to at least reconvene at the very least, and potentially quit if that goes on. Like sometimes that happens. It's just like people starting a business. Always going to be very messy. Your first business probably fails, maybe even 1, 2, 3, 4. Just like we know, like the average person who's started a business and created that 1 to 10 mil kind of bracket, they've been bankrupt twice. It's 2.5 times on average. Now, you can assume a lot of collateral damage and other stuff around that. Are businesses bad? Should you not do it? No, you should encourage that. That's how people get employed. But there are certain personal accountancies that you do have to consider. Trading is a little bit different to that, where you do have somewhat more control. You have less control and also more control. Business is up to the degree of the business, the idea, the funding, how much you can scale that, these kind of things. Like trading, you can also just like stop trading. Just don't trade the charts for a bit. Maybe it's cooked. Maybe now you're hurting people. You're like, okay, I don't want to quit this thing, but I need to reevaluate. You can do that with trading. You can just walk away for a bit. A business has to keep somehow going or else you go bankrupt, that kind of stuff. Trading, if you lose the money in there, you don't have to go bankrupt. You just stop trading. Like that's a benefit it has. So I'd say if you're in that position where you're actually questioning that, do you really have some kind of shtick for this to go forward? Why would you think that? Why would you need to quit? And rather than looking as to why to quit, you can also look as to how can I succeed? And you just have to do it in a, rather than why should I quit? Why is it that I should succeed? With the caveat that you don't hurt other people. Right? So if you can do that, keep going. Now, if you can't find that, then you might go, I need to pause for now. It doesn't necessarily mean quit. I need to pause until I can find out why I'm not succeeding, because I don't have a reason why me going forward would succeed. you can probably find a bunch of reasons why you might fail, because obviously you probably had them in front of you. That's why you have these considerations. So until you figure that out, back to the drawing board and then press on after that.
Yeah, there's nothing wrong with failing. You know, you never truly fail until you quit. And like LJ just said, you know, the luxury of trading is, and this is one of the reasons I got into trading as an entrepreneur, being a young kid as well, trying to have a service-based business. People didn't give two shitteroonies about trying to take up or pay for the services of a like 16, 17-year-old kid. You know, they just weren't interested. Whereas trading is you against you against you, or it's you against the markets. So therefore, you're not paying anyone. There's no outgoings that you need to run a company. There's no jobs. There's no, long-term expenditure. It's literally just a case of shit hits the fan, you stop. You have the ability to just completely walk away. And then when you walk away, you regain yourself, you rebalance, you regather, you come back. You have that ability.
Yeah, I think before you go on, Rich, I think one of the main things is literally treating it like a business. It is a business. You're like a sole trader, that kind of thing. You're a person of one initially. Potentially later, you raise funds, potentially start a company, manage other people's funds, that kind of thing. That's a whole different matter when you're actually in the position that you can get there. And also pay for it, because it's very expensive legally and all this kind of stuff. You will be making money, so there's no question whether you get there or not, right? You'll be there. So I think in between, if you're thinking about quitting, you got to think about, like, if this was a normal business, would it be functioning? Would it be running well? Would you think yourself a competent, prominent business operator? Because typically, just like I was using the business analogy before, when you hit the wall, it tends to, it just fails. You go belly up, goes bankrupt, you go under. Trading, both with that benefit where you can pause and come back to it later, means also that instead of it just getting flawed and you're done, it can also be a forced pause and then you come back to it later, which can be bad because you're still in that bad habit kind of cycle. So yeah, I think if you're operating, start to try and operate your trading like a business. And that means the same thing where a lot of people aren't used to putting that kind of pressure on them to work, right? Where someone's not telling you to work, they're not directing you. You have to work yourself. You have to come up with the ideas. You have to orchestrate everything. You have to be your own boss, that kind of stuff, and actually go forward and do all that. Which a lot of people struggle with. They think they're just going to turn up to the market, press some buttons, make some money, and then go away.
Yeah. They think minimal input equals maximum output, which is just not true.
Also, guys, just to let you know real quick, I'm just going to bring up my... No, I'm not going to bring up my chat. I'm going to bring up my other chat. Bear with me.
Bring it up.
Because I have closed, and the reason I've closed is I'm actually away from the office for the remainder of today. So, guys, I am out with 157 bucks up on this 5K account, meaning I was 2% down. Now I'm just over 1% up, meaning I've just bagged 3% in those trades I was telling you about a little bit earlier. So, big thank you for Trump and the fundamental help. A little bit earlier on. Yeah, that's me done for the day. So I just wanted to show you just before I left stream the results of the trades.
Taking a trade and just letting it run.
Yeah. This is pretty much taking the trade and just letting it run. Other than gold, we were literally fractional from TP on GU. So I was happy just not having the extra 10 bucks it would have been. So I took early on GU. And I took out completely, if you can see, it's pretty much break even over the course of hours. So, yeah, this is pretty much allowing the trade to just let it do its thing.
Yeah. Are you gonna
Beautiful.
head out now, Will, or soon?
Yes, I am going to scuba daddle. And guys, I shall see you all tomorrow. And let's see what we can do on this little account again. So, guys, thank you very much. Awesome questions as well. I just saw the person who actually asked that question did leave a comment just now as well. So I'm glad your case isn't that bad as well. And to anyone else out there as well, all seriousness, look, we have a joke, we have a laugh. We do know what we're doing. I know we joke about it, and I know we take stupid trades on what we call play accounts, but we do know what we're doing. We've been in it a long time, and we have had situations where we've either cried ourselves to sleep or had to sell things or had to we've been in situations of hardship as well. We've also experienced crap times, and we've not given up. So guys, look, just a bit of inspiration out there for you guys if you need it. We've also been in really crappy situations, but we have also pulled through because we understand what smart work takes. But guys, big shout out to every single one of you out there who has commented and interacted today. Big thank you for those of you sharing your journey with us as well. Make sure that you smash the like button, subscribe to the channel, click that bell notification, and make sure you interact with these two absolute geniuses as well. But for now, peace.
Thanks,
See you.
Will.
Cheers, mate. Cheers,
Cheers,
mate. Thank
mate.
you very much. Thank you
Have
very
yourself
much,
a nice
brother.
day.
Yeah, nice. Very good there, mate.
So, yeah, there we go. There we go. That's done. That's done.
Yeah, nice. Yeah, there it is, mate. Yeah, that's it. That's the one.
Oh, yeah.
Oh, look at that bad boy. Dude.
Wait, never mind. I thought it hit TP. And then went against you, probably, didn't it?
Yeah, that was Akron before. I was like,
Yeah.
what have you been trading, mate? What was that about?
Do Sonelic saying, great explained. I wrote some notes. My biggest problem is still being at break-even stage, trying to trade on the 5-minute time frame using 1-hour zones and market structure, but getting liquidated a lot, trying to take only A+ setups.
Interesting thing. I don't know if have you got something to say right away, Rich?
Nope.
I was going to say, first and foremost, if you're going like 50-50, 1-to-1, and you've sort of just starting trading the markets in general, whether it's FX, commodities, NASDAQ, stocks, anything like that, that's good. Like, that actually means you're keeping up, right? Because you got to
Being
realize the
break-even,
market is, it's an auction system. It's buyers and sellers. Like, for you to buy something and it go higher and someone else sell at a worse position, that means someone else lost money. So for you to make money, someone else has to lose money. So if you're 50-50 and you're just coming into market, that's very good. That means you're kind of on measure with the gradual thing. So then from there, that's where you have to find your edge, which gives you that alpha over and above that 50-50 kind of market auction element, where it's buyers and sellers on both sides, right? So that's actually quite good. Most people obviously either make a bunch of money very quick or lose everything very quick. And then there's a small selection that keep it very 50-50. The fact that you did that off the bat tells me that you probably have the discipline to go and figure out that alpha, figure out that edge, and then actually purport that further and take advantage. So the further position from that is, again, it's just one of those education things like that, training experience, that kind of thing over time, where you figure out how the market moves, how certain assets move individually, and what kind of positioning that you can take given the times that you can trade, how you want to trade, whether it's like you automate things, you want to trade mechanically, be it the charts for this hour or that hour, what bracket, what's the current trading session during that period, what pairs are most active during that period, where the flow is coming from, that kind of thing. Then you can figure out how to generate that alpha from there. But 50-50 is actually
It's pretty good.
very good. Yeah.
Considering.
Yes.
I will add as well that it's realizing very much that this is a fight against yourself, in like the simplest terms. You realizing, Dusan Alec, that you are at the break-even stage and you're getting liquidated, it means that you're paying attention. And if you're paying attention, it means that you're learning something about yourself while you're in the market. In your case, I would say definitely, like LJ just suggested, it's kind of like finding your edge. It's finding that understanding that you have with the market, that you have with yourself. And try not to overcomplicate it. You can make this as complicated as you want. You can add all kinds of confluences and layers as much as you want. But at the end of the day, you are going to have to execute on that plan that you've created. And you can make it as complicated as you want, but I would suggest that you make the actionable step, the action of clicking a button like I had just done here now, make that as easy as you can make it. And you will find slowly that you either become a little bit more comfortable with taking certain positions, or you feel a little bit more comfortable taking that action instead of sitting and wondering, oh, should I have, shouldn't I have, that kind of like question. Like the all of those why questions. Oh, why should I, what if, like all of that. That kind of like starts dissipating, starts slowly disappearing as you get more experience in the market. So yeah, I like what LJ has said. Unbiased trader, I do love this comment as well. No offense, none taken whatsoever. But all those who want pure masterclass learning, get into Victor and Richard Wells' Discord hourly coffees.
Nah, that's offense. That's offense, Rich.
Unbiased trader, you are here henceforth.
banned.
Let it be known,
You're banned.
banned from Poker Night. You will no longer be. No, I'm joking, dude. You're not banned. Yeah. Trader together strong. Reminds me of Cesar
Ape
from
strong.
Planet of the Apes.
Yeah.
It's great to see 3 traders all successful in trading with completely different approaches. Trading is a wonderful job. It can be, but it can also be the reason why you have stress. So understand that there's a balance, and you need to find your own balance within it as well. There was another one here. Yes, this one. Garden design pictures. I'm finally quitting trading to pursue my real passion, sleeping past 4 a.m. and not having my physical health dictated by a headline about a microchip factory in Taiwan. Not going to lie, days like that, they have caused my sphincters to tighten up quite a bit. So my face goes, this is going to hurt. But if you have good risk management, it should not hurt all that much.
I would say as well, though, like just like we were talking about potentially quitting, like if you don't quite have, or it just doesn't quite grip, it doesn't quite make sense with trading. Like it is a certain type of characteristic, certain type of person that can actually do that reliably and actually make an income, not just click the buttons and you're trading, but you're not getting anywhere. It's very, very different.
Very forced.
So there's no problem with quitting, going do the other thing you actually like doing, and you'll probably make way more money. You can still invest, just invest in stock market, longer term stuff, that kind of thing. But trading might not be your spiel, right? Like not everyone can paint or draw or create music or art, right? But they still like music, art, all that kind of stuff. You might have it in your house, you might listen to it all the time, but you don't necessarily create it, but it's still around you. So that same way you can invest over longer terms, but you might not be trading, which is more that like constructive portion of the music or art per se.
Yeah.
It's the same thing with my partner. Like she's a lawyer, she's a solicitor. Looking at markets, she's like, no, this is not my spiel. Like I'm out, right? And good. Like she will do much better just being a lawyer, doing that kind of thing, and she'll clean up and have a very good life. If she went to do this, yes, there's potential of things, but it's just not going to work. No, I wouldn't try and push her to any of that. Now, I would say invest, right? But that's again, a very different prospect than
different
trading.
game. Yeah.
So
And then obviously this is a good one as well, I think. When you realize your heart just isn't in it anymore, and your therapist says your blood pressure shouldn't look like a leveraged crypto chart on a Tuesday morning. The second portion obviously being funny. The first portion being, I think, very good advice. If you just feel like this is just not for you, and pushing it, forcing it, makes you feel like it's unnatural or it's outside what you're comfortable doing, then there's no shame in stepping back and saying, you know what, this ain't for me. But if you do have the heart to try and push on, then that's why we are here. So we can try and help and guide and give advice, even though none of us here are financial advisors and legally cannot give you financial advice.
yeah, not financial advice, guys.
Yes. What we can give you is life advice and say, look, if you want to attempt something, attempt it, but have caution, that kind of like thing.
And trading education. So we'll explain like how we operate, how we act, that kind of thing. And if you guys can pull certain draws from that and aggregate that into your own trading, that kind of thing, then go for it. But we're not here to provide signals, that kind of thing. I will say with the blood pressure to the moon,
Woo!
probably got that myself, and I'm still here trading. So go figure. But hence,
Blood
if you got
pressure?
that and you're not doing well, then definitely quit because there's no trade-off. So I'm running like a risk limitation that it gets up just enough, but I'm making enough, and then I can pull back, and then I'll be good. Or else I blow up. So
For nobody that is aware of this, LJ did an all-nighter on Friday. He was on stream during Trade the Pool and the futures, the final goodbye to Fetcher Powell.
Jerome Powell.
And then after that, he joined us for a games night and ended up literally going to bed like 6 o'clock the next morning.
No, it was 7:30 by the time we finished.
7:30, my apologies.
Like 8:30. Yeah.
What a machine. Hello, Victor.
I'll say
Hi.
hi, Victor. I'll just before, like, I don't encourage this. This is not good as well. When we
Not good.
throw it around as like a haha, this is not healthy. It's not good. All right, guys.
No.
So don't try and copy this to try and become the ultimate trader or something. Just want to say.
Yes.
Just
LJ
like-
is a trained professional, staying awake way past his bedtime.
yeah, but yeah. Hello, Victor. How we doing, mate?
Hi.
How you
Yes,
going?
I think. Yeah, I think it's it's good to know you have the stamina, LJ, pulling all-nighters. I mean, who hasn't? Or I don't know. At least in my world, it's done quite frequently. Although I'm totally there with you. It is not good at all. It shouldn't be done unless as a last resort, and there's nothing else, and the stakes are high, and things like that. So it's not great for your mind, for your brain. But another thing, Rich, when I came in, I was laughing because I was gonna ask. I was looking for the proper timing to ask you how is the circular muscle going. But anyways, let's continue. Um,
Wait, what?
no,
What is a circular muscle?
What does that mean?
never mind. We should just continue.
No, hang on. Wait a minute. What?
It wasn't
Right, you
meant
guys
to.
in chat, what does the circular muscle mean? Explain it for us, since Victor doesn't want to talk about it. What does that even mean? Like, what is this?
It's something Richard said not too long ago. I thought that was hilarious. But anyways, it was meant to be like a subtle remark, not to pay too much attention on. So thank you, LJ, for putting all the spotlight now
Well,
on
there's a
the
lot now.
remark. Thank you.
You know what's the crazy thing is now that you've mentioned it, I'm trying to remember what did I say? And I was
All
like,
right,
when
Rich.
did I mention circular muscles?
Get your circular muscle out on stream once again. Whatever that is. Come on, get it. Just get it out. Get it out. Come on.
Oh, thank you, Infinity Velocity. It's sphincter muscle.
Oh, okay. We don't need to see that then. All right, no, put that away. Never
This
mind.
is a
LJ, what did
sphincter.
you ask there?
This is a
Jesus.
sphincter. Your mouth is a sphincter, among other things as well. It's a muscle that opens and closes, allowing something to go in or come out.
Yeah, put it away, Rich.
A sphincter is a circular
Alright.
muscle.
Yeah.
Well,
I
it could
know
be
Will-
circular, or it could be like all crumpled up.
You know, hang with Will later on. I know he's waiting. Had his lunch.
It was not
He's
meant
ready.
to, you know,
He's ready.
grab the attention of the stream for what seemed like ages.
Oh, but it has now. Definitely has.
Funny thing, if Henry was here, he would have been right away been like, bang, any hole that is whatever, blah, 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 like, would have given the scientific medical explanation right away. I'm sure he's gone to bed now by this time.
Who is almost hitting TP?
Myself and I.
I'm looking for shorts, so I'm waiting for your TPs to be hit.
This TP actually has no bearing on where prices or where I thought price was going to go. I wanted shorts, and we just didn't get them because we had a news event, which seems as though we've had more. Well, let's go to the original one. So the US proposed temporary waiver on Iran's oil sanctions, which led to this initial move that we had here. We had come into an area that I thought maybe we could start pushing lower from. We didn't quite hit the base area. Started to drift ever so slightly, and then we had the news event, and now it seems as though we've had follow-up, which is this leaks to Al Arabiya saying Iran wants a long multi-stage truce, including a long-term nuclear freeze instead of full dismantling. So Iran demands a gradual safe opening of the Strait of Hormuz, and Iran agrees to a long-term nuclear freeze instead of full dismantling. Unconditional transfer of enriched uranium to Russia instead of America. That one, I don't know whether or not the US is
I don't know
going
if that's going to work. Like, oh yeah, we'll just give you our enriched uranium.
Number
and
one.
you guys can give it back
Yeah.
later. And
Number
also
two.
just a long-term freeze, not a full dismantle. So we'll put it on pause, give it to Russia. You guys give it back to us later, and we'll re-kick the whole thing, and it's fine.
Yeah. I'm just
That's
going to
not
go
gonna
ahead
fly.
and say I think it's a little
all.
bit hypocritical for one country that has been the only country to drop a nuclear weapon on any country in history to be the one that tells everybody you're not allowed to have any of this stuff when they themselves have their own ones as well. So, but that's just an opinion, and it is exactly just that, an opinion.
I do not share that opinion,
Yeah.
but it is yours.
Yeah, I don't share that either, Rich, to be fair.
No, I mean, you guys
Sorry,
are
man.
entitled to be wrong.
Hang on.
Okay, this
That's fine. All right, Victor. All right. I'm now the YouTube admin, and Rich has been
Demoted?
recessed. Yeah, recessed. Just put him in the closet. We might need him later. You're right.
He's been
Just like the-
long-term paused.
Enriched uranium later. We might have to pull him back just for a bit of service, but here he is.
Anyway, let me just stop my pleading right there and then.
I do get your point, Richard. I think you do have a point. It's a valid point, to be fair. You can, it's completely true, the statement you said, but I think, it does not
should be.
reflect. It is
Reality.
completely true. I mean, it's based. There's nothing wrong with the statements. However, of course, we all know there's much more to the situation
It's way
than
more in depth.
there's more layers to it, and there's a lot more counter arguments as well to be put in that puts things much more nuanced, not to
Yeah.
say completely wrong. But I'm just saying,
Rich, you're wrong. Victor,
I-
just say it. Rich is wrong.
There's
Say
a
it.
scale.
Just say it. Just be bold.
no,
Right?
actually,
You've got a
I don't
team
think
member,
it is.
right? You got a team member. Just say he's wrong. He's wrong. That's fine.
There's a scale, and
I'm
it's drifting it more towards one side or the other. So
I'm all about debate, and a lot of times there isn't a right or wrong. It's more about illustrating and elucidating arguments and standpoints, and to get a different balanced view on things. And there's not really a
Yeah.
wrong thing or completely right. It's not black and white, as we all know. Reality is shades of grays and different circular muscles. That's how life is.
very much so. You can either have an empirical based argument
that
or
went
you can
so
have
under
a
the
value
radar.
based argument.
I'm sorry, that went so under the radar. That was probably one of the best lines I've ever heard from Victor. That was the most under the radar thing ever. Victor,
Kudos
hats
to
off.
you.
That was great. I'm sorry, Rich. I had to.
Why are you
That just
feeling
went
sorry?
completely by the board. But that was
Do you
amazing.
think that I have? Do I need to go and get myself some afterburn for this burn that I just received from Victor?
Yeah, probably.
I'll go get myself some Factor 50 SPF or something like that.
It wasn't directed to you, Richard. It was just referring to different characters. Playing out these geopolitical.
That was
I know
great.
you're very important, and you are, but I wasn't referring to the
Very-
What? I'm getting burned today. Jeez. I know you think that this comment is about you, but curb your ego, mate. It ain't about you.
Victor did. Victor's on.
Victor's on
storm
fire
right
today.
now.
Jeez.
I know you're very important, but
It ain't all about you. I wanted to say this, like, you get two kinds of arguments. You get an empirical based argument, which is usually in factual information, or it is in information that can be cross-referenced, or you have a value-based argument, which is usually derived from emotional feeling and personal opinion. And you're 100% correct, Victor, in stating that sometimes an argument doesn't have a basis of being right or wrong. You have an argument that is based on just arguing viewpoints. And the viewpoint itself is difficult to substantiate whether or not there is a basis of morality or right or wrong associated with it. LJ, do you need a moment, mate?
yeah, probably do.
LJ's lost it. I think I broke LJ. Actually, I think, Victor,
All right.
you broke LJ. It's your fault.
I don't know. It wasn't deliberate. So I don't know. I don't know.
LJ is literally folding double from laughter. I think LJ is like delirious at this point from laughter. Well, we'll give him a moment. Victor, how have you been? How's the life of Victor?
I've been great. I mean, even I had a little setback on Saturday, and I say setback because it's without going to the details, I worked on something, I lost it, but actually that's even while losing it, I'm gaining a lesson, and I think I'm actually very happy about it. So I'm doing great. How about you?
I'm doing swell. I have some burn marks right now, but I'm sure with time and a lot of love, they will heal. No, I'm joking. I'm doing really well. If nobody's noticed, I went to go and get myself new glasses. So, smart boy.
Nice.
Happy to report my eyesight hasn't really deteriorated. So,
good.
No.
Happy coincidence. First time in 4 years that it hasn't.
There
Okay,
you go.
you're stabilizing. That's good.
Yes, that's
Yeah.
good. That's good.
Staying
Especially being
strong.
in the burn unit right now, stabilizing as we speak.
Oh, dude, I can't even. It's too good, too good. I love you, Victor. You absolutely rinsed Rich.
Yep, very much so.
Coming back
I'm-
to the market,
Victor's like, what did I do? That's why
actually,
I'm so
I
good.
it's it wasn't orchestrated in any way, shape, or form. Um, what do we
I
think
calm
about
down.
what about the news about you know, this is how would you both of you, how would you see this? Um, is this a step forward towards peace or backwards? Because I'm still looking at it, and it looks like they are communicating, which is good. They are
Mm.
giving like options, like they what they want. We know that's much better than not seeing anything back. But then again, you can so that's positive. But let's say the third one, unconditional transfer to enrich uranium to Russia, does not make sense. I mean, that doesn't that's no value. That's an empty shell of an offer.
Yeah.
And so, what do you guys think? How would you think this will affect the markets and risk appetite?
I'll let
Uh,
LJ go first.
so I think it's worse overall. Technically, it's obviously the same stuff that they've been talking about for some time that we haven't heard. Where hence why the US keeps rejecting whatever proposal they have. Iran keeps putting forth publicly these kind of like 12 9-point, 7-point proposals in various forms. They've gone back and forth with that. US is like, yeah, I'm not doing that. Like, that's not really it. Obviously, the actual fronting of true proposals to the actual administration would have had this stuff in there pretty clearly. I think it's very much by the by.
Mm-hmm.
Probably what the US administration has already seen. And now they, for some reason, are choosing to propose that or put that out in public as
Mm-hmm.
this kind of idea of punching stuff to Russia.
Mm-hmm.
It's the same. It's not going to go through. I think overall that's a net negative. It just further deteriorates negotiations. And especially now you're putting it forward publicly, right? It's like, what's the angle for that? What I would say is that if they're now doing that publicly, do we expect something from Trump, from the US side, to put something else publicly forward to also further push back on these kind of not really headlines, but like talking points in general. So potentially we could see US still up, all the majors down. We've had a recovery higher today, so we could see that turn around once again if the US does decide to push back on this kind of stuff. And potentially, obviously, normally when Trump has someone actually going out to press that, which is not in his favor, and you've done this publicly, he will match it and then typically do some kind of excess on top of that. So we could see things turn back the other way. So hence dollar index much higher just from a geopolitical aspect. And just like bring up now, if you look at the Dixie, technically we also kind of line up with that. Right. So I think this is where we're getting kind of double stacked from the geopolitical headline dominant type aspect. You've got a risk weighted potential that you get a dollar moving up, plus from the technicals as far as charts from euro dollar, Aussie dollar, pound dollar, all the majors, that kind of thing, for us to move up overall for the USD. So therefore, the other majors
Yeah,
lower
they start.
once again.
Yeah.
Yeah.
Yeah, I agree with the sentiment. However, I will also kind of like play devil's advocate and just add that I don't think that where these negotiations are going, that it's it's a good thing for the dollar, because the idea is that the counter side of the argument, or the counter side, let's say, of the negotiations, is not playing ball entirely into the dollars, or in this case, Trump's proposal, into his hands. They're trying to counter a lot of the stuff, which in my mind would mean that there's going to be even more countenance from Trump, and then it's going to be a back and forth, back and forth, back and forth. And I think that it's going to delay the outcome even further until one of the two sides can either swallow their pride and say, okay, we agree, or look, this is, we can't come to an agreement. We need a third party to kind of like mediate and find some sort of like beneficial for both terms. In this case, I think that it's going to be, in the interim, a net negative for the dollar, because they're the ones that are losing a lot more by having this continue.
Are they? Why?
It just costs them so much money
No,
just
it
to
doesn't. They're
continue
making
something.
money.
Yeah, they are, but like, you're looking at like, where are they getting the money from?
So everyone else's cost basis for every single activity, oil has almost doubled. Energy input costs have doubled. The US has free base for the next 3 years plus, with producing nothing more that they could sit tight. Now, in the event that somehow the strait stays closed for longer, where's the only type of crude that China, same thing in the advent of war, they would need to get crude from? Venezuela. Who controls Venezuela now? The US. US definitely does have them in that kind of chokehold with that.
Okay.
That will
But I
end
mean,
up
they're
costing
not
them much more.
making, they're not making money either. They're kind of like, whatever money they're getting from that is going straight back into the war machine. So
Yes, but they're also
in the long
making
term, it's like a net negative. And the thing is, they didn't have the oil from Venezuela to begin with. They went ahead and took it. So let's say, hypothetically, they never
But
went
that
into
saved them
that.
money as well,
It did
right?
save them money. Yes, I agree with that. But you're saying for 3 years they can, without changing anything, they can kind of like just continue sailing. But that's stagnation. That means it's no growth, which means that their debt is not decreasing. The debt
But
is probably
it
going
is,
to continue slowly but surely rising.
but it is growth if everyone else is declining.
If everyone, but that's by proxy.
So it's one of those things where you don't have to win; you just have to survive.
Outlast.
Per se.
Yeah.
Yeah.
You have to just
per se.
outlast.
So,
But
so the other portion where they used to buy 200 billion worth of barrels from Canada, which they now don't have to buy, of that heavy crude oil, right? The sweet versus sour, they now get from Venezuela. So they can tell Canada to zip off, right? Which
that's
Trump's
true.
been doing for ages. So that's the same deal. The main thing is ultimately the core crunch point comes down to AI and tech. That's where it becomes difficult.
So in what way?
Well, because you need helium, ultimately. If we go 6 months down the line, and obviously then you've got Australia being the second largest natural gas producer and exporter in the world. So we've got that helium, that kind of stuff. A lot of that is being cut off. People can come down here. Yes, it's very hot. People think of Australia as hot, but if you actually go down to the lower portion, very cool. That's why we have certain lower states in the country that are 80+% renewable and running all tech, and it's now become the home of tech. So just like we had the budget thing, which has cooked a bunch of people as far as certain assets, capital gains tax, that kind of thing. There's a bunch of incentives per se for AI and a bunch of other things for them to come down here already. So China's trying to play for that with us. So is the US. And the same thing with the top band, just like Meta or the big tech companies where they've even tried putting servers either into the cold oceans at the Arctic and the Antarctic, right, on both sides. And then the other portion is to go into space. That has a lot more difficulty overall. Obviously, space is very cold. On the side of the sun, very hot. Hence, you can put up solar. You get the energy. You vent the heat through the back portion. But it's not quite so simple. In space, physics gets a bit different. It's not like a one-to-one. It's not that easy. But yeah, so I got to say, this is where it comes back to the US having them in a chokehold.
Before you continue, LJ, I missed the point. What's the relationship between helium and natural gas?
So with natural gas, like helium is like a byproduct, right?
Okay.
And then helium is needed very much for the data centers, right? And chip production. Now, the modern ones that are being produced that are doing the high-tech stuff, they recapture about 80, 90% of the helium. There's other flow-on effects with the older productions, which goes into like hard disks and like USBs and all the general stuff that we use, which doesn't have that recapture because they're older production centers that they lose a lot of that. So the consumer gets cooked and prices go up. And then hence also certain companies, just like we've seen with RAM, they go, okay, we're going to stop producing RAM and go and produce AI chips and then rebuild all of our data centers. There's incentives from the government. We get refunds, we get funding, all that kind of stuff. Rebuild the whole infrastructure, build that out, and then do that rather than the consumer. Now, the consumer gets absolutely cooked with that, and AI systems keep going. At what point does the consumer getting pressed from everything else, meanwhile AI is making a fistful, where it starts to level out? And then we get stocks going down because that income, that revenue scaling stops going up. Everything comes off. Or does something change? Somehow they put it all to remote servers and no one even has a personal computer anymore. You just have like a hard drive and you connect to like a remote server. And it's all like a foreign thing. Like you don't have a personal PC anymore.
I would absolutely
hate that. It's all on a foreign graphics card, foreign, Hence, there's a big push against that. Like anyone sensibly would say, like, "Oh, I don't like that." But the thing is, the majority of normal people that aren't sophisticated will just be like, "I don't care. I just want it to work," and they'll be like, "Yeah."
They say that until it doesn't do what they want it to do, and then they kick against it. Imagine this. Do you know the stop killing games? I know this is like a I don't know. Do you know the stop killing games incentive, LJ?
Which one is this? Like a global thing or local thing?
No, there's only one. It's a global thing. So there's legislation that is being passed now by the EULA that stipulates that a gaming company, so a person that makes games or whatever, that they have to, at the end of the life cycle of that game, leave it in a state where it is playable, okay? Where in the past, what they could do is they could just say, look, end of service, yes, you did pay for this thing back then. It cost you X $60, $70, whatever. Sorry, you now no longer have access to this thing because on our side, we're no longer going to put any more service into it. Okay, so it's a service level agreement between the user and the supplier in this case. And it's
I know what
gotten
you're
to the
talking
point.
about.
So it's gotten now to the point where laws are being changed where they say that they cannot just do this. This is anti-consumerism. This is against the consumer. You're screwing the consumer because you're taking their money and then you're running off with it and saying, "Look, we're not gonna continue with this thing, but we're still keeping your money." It's the same idea. when it comes to the AI stuff, when you have a service level agreement of some sort where you're renting a system. And it can be for whatever. It can be for gaming, streaming. It can be for crypto stuff, whatever. It doesn't matter. Your personal
That's the
computer
thing.
itself
It'll
will now
just
be
be
a
your
rentable
computer.
thing.
Right? That's the thing. Your AI will just be your computer, and you tell what your computer wants to do.
But
Like,
not
I
even
can see
that.
where you
You
don't
will
even
have to
an
pay a
operating
monthly
system.
subscription. You would have to pay a monthly subscription just to have an operating system that can utilize the stuff. So that's where the problem comes in. People are going to get fed up with that because at any point in time, I can take your money and I can push the price up as much as I want, and you're screwed. There's no alternative. There's no one else to go to because everybody has jumped on the same bandwagon of AI, AI, AI. And if everything is AI, nothing is not AI. So that means that there's no alternative for you to go to. And that's the problem. The consumer at the beginning is going to be like, this is great. It does everything that I want it to do. I have to pay a monthly subscription and I can get all of the stuff. I don't have to go and buy hardware, all of that kind of like stuff. It's great until it isn't. And when it isn't, what are you going to do then? You're stuck. You can't go anywhere. And that's my problem with all of this. Your options are non-existent when this comes fully into play. And that's what I hate about it. If I don't want to participate, I don't want to participate.
I agree. I think
So
that's also
that's
where
the problem. Yeah.
well, hit a wall where this is where we get the peel off for valuations for tech, right? Where people go like, no, we don't want some weird dystopia. They're like, oh, it's utopia, but no, it's dystopia. And we goes like, no, I'd rather just have my own computer and I can run it locally. And like, if you want to sell me the product like Microsoft, okay, but I don't want it connected to the internet all the time and updating all this and get out of here. Someone will create a Linux-like, but you pay like one time and that's it. And you have that same thing, but it does everything and
It's
you get regular
going
updates
forward
and
just to come back. That's what we're doing.
Yeah, exactly. So that's exactly it. So it's kind of like those it's kind of like those meals where you order weekly or monthly meals for like your protein, your whatever. Yeah, it's good. Yeah, it's easy. I can slap it together, and you're kind of like, oh, this actually works out more expensive, and it's actually not that much food, and like I need more food, and then like what? And you're like, oh, this sucks. I'm just gonna go to the store and buy some eggs and some rice and some chicken and cook my own food. Like, I've got a gas stove. Like, why am I ordering this thing to my?
It's like you have to experience that thing just
like,
to realize that it wasn't that bad when you were doing it in the beginning.
Yes.
It's like, I prefer to actually be here. That seems great, but it's kind of a schlep. It's kind of like not great. I'm not really,
And
anyway,
I got to say as well, I think as well, even with what we're talking about now, where this seems very arbitrary as far as markets, but just like we had the gold run up, and now we've got the NASDAQ pushing all the way up, and we've just kept running new all-time highs. And just like we spoke about a year and a half ago with the increasing conflict between countries, that yes, gold will keep going higher. Everyone's buying this. We've got bits and pieces going on. I think this will be the exact same deal where we do, at a certain point, top out. There's huge tax changes across the board, like we talked earlier about Australia. Australia often ends up being, in a weird way as well, the forefront for rate increases, just like we've had rate increases in Australia. Once Australia, the RBA, started doing that, everyone started repricing rate increases for the ECB, Bank of England, and in particular, the Fed, right? Because obviously Australia is tied to commodities, which goes into China, which affects everyone, which affects the whole globe, blah, blah, blah. So it seems like we're this minor little corner of the world, but we're not. We have a major impact distributionally to everyone else. Yeah. Bloody hell! It makes it not.
Long tangent.
Yeah,
Long
yeah, I don't
tangent.
exactly. I've got so much. I could talk for another hour on this stuff. That's exactly what I was just thinking. But I mean, we'll
Victor.
cover this over the next couple of months, that kind of thing. There's Kevin Walsh, the Fed interest rates. There's a lot to go through, Trump, all that kind of stuff. But this does direct the dollar overall, which then goes into bonds, which goes into dollar yen, which is a big point of call right now, especially with the intervention. And that relays into China, which is the China and US relationship around tariffs and everything. We had brief talks around this with Dirk, and we might go back to some of the old 2000 or pre-2000 moves where you think we're just acting technically and that kind of stuff, and we get these massive moves and everything just shifts. Everything goes out the window, that kind of stuff. Which is very much susceptible because most people trading these days, even working at big institutions, did not live through that kind of stuff. Like they weren't around before the euro existed, right? So unless you've actually gone back, looked at this, studied that, definitely a susceptible outcome to this stuff. But yeah, I could yap on for another hour, so I'll just stop. I'm trying to quell myself already. All right,
So let's give Victor a
shut me
moment.
up. Yeah, you go, Victor. Yeah.
Victor, what are you seeing at the moment? Or what would you like to add to said conversation, or even divert conversation?
No, I
Probably do
think
that.
Alj is raising great points. And I'll be honest, there are a couple of things that I would have to, I'll have to research to say anything meaningful back. So I will not and say anything right here. But I think this is what I think, and this is not a feedback of what LJ and you said, Richard, but more there's so many. Just a general observation. There are so many things happening at a blazing speed, and the certainty. There's so little certainty in the direction, the eventual direction that we will end up. That I think yes, we can plan out or foresee certain things, but these developments they change quite quickly, quite rapidly, and to me is the point. You know, if there's so much uncertainty in the developments of these things that will change, the world radically, I find it quite difficult to pinpoint in any specific direction because it's surrounded with so much uncertainty. That I'd rather just be an observer and catch these things as they happen as a technical trader instead of looking to find the next wave before it actually shows up on the charts.
Yeah, but that's kind of what I mean, where we almost go back to a pre-08 situation.
Okay.
Where you don't quite get that, where it's very macro driven, and that's it. Like by the time the move's gone, you've missed most of it. Like the technical thing is built into the macro thing, and then you get the full drive, and then you get cooked on the back end. So hence the same way that even with retail and that kind of stuff, like brokerages, all that kind of thing, where post 2007, retail FX trading really popped off. Yes, you did have computers, you had consumers able to access adequate computing, that kind of thing. And you had the things like RSI, MACD, stochastics, and like, yeah, do this and do the whatever. Now, these things were actually relevant then. They had more weighting. But it was also when we went to a time of relative stability because of the GFC and because of the government financial engineering with the central banking, quantitative easing and everything. that we were more one-dimensional, right? And the thing with Kevin Walsh is he wants to go, and from there we had with the Fed more clear-cut communication as far as their direction from the central bank. Kevin Walsh wants to undo all of that. So I think we might go back to that period of much more volatility, greater volatility, oscillation within currency markets, all that kind of thing. It's definitely on the cards. Now, we still have to see that actually pan out if he does commit to that kind of thing. But it's the same thing when I've talked with Dirk, where he talks about in past days where, and I remember this even back then, where you'd see euro dollar, dollar yen, Aussie dollar, like 200 pip movement in a day would be normal. 100 pip, 150, 200, you get 350, you're like, oh, okay. And a move that way, it might come and center back towards the middle, but those were the kind of movements you get where these days, if you squeeze out 50 pips, like that's a big move. You're like, oh, currency have moved, right? And so the question is, certain traders, the same with the, I don't know, stocks, S&P, NASDAQ, that kind of thing. Like there's certain people that haven't been around. They haven't trained in those kind of environments. Majority of the people like making decisions that have moved up through the certain ranks. You know, people owning the certain companies. Obviously, once they get to that point, they start to step away from certain decision making. Yes, you do have more algorithmic stuff coming in now, and that will only go further. But yeah, that in combination with the current political climate, I think overall we're definitely primed for a more volatile situation, which is good as traders.
Which is, I was going to say that. I was going to say,
yeah, it's very good. That's exactly what we want, right? The question is, does your prior trading expectations or your prior model or style add up into the new regime? And if it doesn't, how are you going to adapt? Because volatility, traders live or die by volatility. That's exactly what we want. It's not what stock investors want. They want a gradual just climb. As traders, we want that back and forth, that whipsaw, give us that raw and dirty type situation. So yeah, go on, Victor.
I was going to say that, but that's exactly where we're going to see the separation between the, the dynamic, the growth minded traders, separated from those who are, found something, a model, an edge, but they are kind of static minded traders. At least, yeah, they still have to, develop that skill to keep on growing. And those will, that if anyone who is that kind of a trader will get stuck and their edge will go away, and only those who are able to recognize what's happening, and even if they don't understand the fundamentals of what's happening, you don't even have to, right? You just have to understand that the regime is changing and you need to do something. Your model is likely not going to have the same edge. And you spot that edge erosion, in time, and you start building something else, or you're already starting to build something else, right? Before even the regime changes, because you're looking for other edges that may or may not be as susceptible to these changes as the one that you're banking on. Because volatility, to me, if we are going to have volatility, and especially if it is going to have if it's going to be trapping a lot of other market participants, that opens a whole new world of opportunities for traders who are, keen on trading exactly that. Trap traders, you can call it manipulation, you can call it whatever you want, but when you see that the market is looking at is recognized or acknowledging a certain bias or a certain expectation of the market participants, and it goes right against it, and you see the market going, berserk, and you recognize that even if you lose, you yourself as well use somewhat in that position, recognizing it in time and seeing for what it is, could make a world of a difference. I like those prospects.
Agreed.
Another
think,
question,
Rich?
actually,
Not even-
LJ.
Yeah, sorry.
Okay, go ahead. No, go ahead.
No, you go. You go.
No, I was gonna say, I ask you a different question, which would, open, switch the subject in a slightly different, direction. So, Richard,
That's
if you're
fine.
gonna,
That's fine.
Do you want me to say something?
no, I thought I didn't want to interrupt anything you might be just about to say and release it into the world. So,
No.
No, that's what I was
okay,
going to say. I'm pretty sure that's fine. I think Rich is checked out on what we're saying. So go
Oh.
on to the next. Yeah. No, it's fine.
No, when you guys were jumping into that, I decided, you know what? I'm going to give the opportunity for you two to just kind of like run with it. I'm going to be looking at information over here, and I'm going to completely switch off. And that's exactly what I did. So I'm proud of myself. Yay me, switching off.
No, I was gonna ask you, LJ, what do you
Yeah, go
think
for it.
about the proposal to let go of that dual mandate
From the Fed,
from the Fed? Yes.
I think that's a mistake. I would say I think that's actually one of the things that keeps the Fed in good measure. I think that's actually one of the things that the ECB has lacked. Like obviously they very much just have the inflation target. Now the ECB is very different. Obviously they're the European Union. They've got the broad prospects of the countries, so it's not really realistic for them to actually target employment data across the broad spectrum, because you like, what are you focused on, one country and not the other, and this and that, and you have an aggregate, like it's pretty bad. But I would say that definitely that's one of the things that has helped the Fed. So I think they should definitely keep that. I think you need to continue both, because obviously the whole, inflation is one thing, but it's like, where and why is inflation happening? So if you just view inflation in like a microscopic sphere in a little tunnel, is it because we're progressing, the country is actually moving forward? And you have to say, okay, is that because the current population, everyone's making more money individually and can spend more? Or is it because we're importing people? What's the job situation? That kind of thing, blah, blah, blah. So I think they have to keep the dual mandate. I think getting rid of that would be very silly. I'm definitely very happy that we have that here in Australia as a dual mandate. I question how much they actually view it as a dual mandate, and they kind of just look more at the inflation component. But yeah, I think just getting rid of it would be a disaster overall. Like you lose like that is the main proponent of inflation these days, especially in the days of like a globalized economy. You have to monitor that. Like, to think that you can't is nuts, honestly. So
Interesting. I was gonna do a joke about zooming out, but I let it go.
the man's back. Sorry, Victor, but the man is back. Dude, big D guy. Dude, I missed you. Yeah, I missed you as well. Don't worry.
I think he was talking to Victor.
He's talking about Victor. Oh no! Come on, you missed me, didn't you? Just
Definitely,
Victor?
he missed Victor. Definitely missed Victor. But maybe there's space for LJ to, to be in that pile of missed people. Just wanted to say we're having the New York Stock Exchange open now.
There is.
Whoa!
What was that? What was
That's
that?
fine.
Lollipop.
I said nothing.
Someone in the chat was asking about the delays. Do we know anything about what's the status, Richard, about the delay? Is it, are we? Is already fixed? Are these just remnants of of the issue, or are we still? What's the status for those who are wondering?
So the status has not changed. The issue, and like I've said this, we keep saying this every single stream, multiple times a stream, that the payout delays were caused due to the payment processor, meaning the third party outside of the 5ers that is responsible for distribution of the payouts. They had technical issues and other like internalized issues. Since then, they have resolved the issue, but now they have a backlog. And it's a backlog of payments that need to be made. And I don't know how many times we've had to say this, and people still jump in and then call the 5ers a scam or stuff like that. They just don't want to believe the answer that we've given. So it's kind of like to the point now where I'm just telling everybody, just go talk to help@the5ers.com, because we're not support. So we're telling people to be patient. We're telling people, look, this was the issue. They just don't believe it. So they'll be happy once their payment gets processed, and then they'll come back again and saying that the 5ers is the best firm again. So yeah. It's just kind of like I have no control over this. Like
it's been the same thing for everyone. So hence, you have a payment processor issue, whatever. You get the backlog of the original like days per process for people. Obviously, every single day, every week, we get more people being like, okay, payout, 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 payout. Hence, you go back to the same thing. So we here as well are subject to the same stuff, like waiting. So it's no different.
Yeah.
So yeah, it's the payment provider going through, and we still have to wait as well, just like you guys. I know it's a pain. It's very annoying.
Yeah, I mean, like there's people coming in and bad mouthing not just the 5ers but us, like the host,
but
as if we have any control over it. Your frustration is duly noted, but I can't do anything. Like my hands are literally tied in this matter. I have no control over this.
It's not
so
up to us.
You can either believe what we have to say, or you can just not, and that's really not my area of concern, at all.
We're not back office. We don't have those controls, those insights, that kind of thing. We just talk to you guys every day, host the YouTube, that kind of stuff, teach you guys, bring some education, that kind of stuff. We don't have controls over that. We are subject to the same stuff as you guys, so also have delays, that kind of thing. If you do, that's fine. Just message support. They should be able to give you some kind of time frame. At the end of the day, just be patient. Just like Richard said, we've addressed this for a while. I know it's very annoying. There's a massive backlog. Everyone will eventually get through. But in that same element, like, had people coming here. Yep, cool. Sorry, guys. I was harassing you the other day. It wasn't coming through. Now it came through. Thank you very much. That kind of thing. So, yes, it will come through. Don't worry. If you're concerned about like cash to actually go out, don't be concerned. Believe me, you're plenty fine.
Asking where Samir is. Samir is joining Dave in the Futures channel at this moment. Like I think they started streaming 2 or 3 minutes ago. So if you are looking for Samir, you can find Samir in the Futures channels. You can just go to the 5ers /futures on on YouTube. So you can go and follow him right there. He's busy there. Every Monday, it's either Monsieur Victor or Monsieur Samir that is joining the futures stream, which I think is pretty cool. I think the futures program is pretty cool.
I think it's good. I think it shakes it up. And you guys, you want to jump over there, head over to the 5ers futures. You can figure that out. See Samir on the off days. You can see Victor trading the futures.
Yes.
And you can come back here. But just stay here with us. Promise.
Yes.
Better. Right, Victor?
It is. It is.
Victor,
We're one.
Victor.
We're.
I won't pay you this month if you don't say yes. All right.
Yes. Yes.
Yes, sir.
Yes.
Yes.
This is a answer of free will. Yes.
Blink.
I am not
16
in
times
trouble.
if you're in danger.
I am not under duress.
But yeah, guys. So Samir and Victor do one-offs every other Monday. So if you guys want to see Samir right now, you can go over to the 5ers futures. You can find it on the YouTube. Definitely sub to that as well. If not, then you can have both screens open at once as well. Good idea. Cross comparison.
And if you like what Samir has to say, mute us, but do keep watching, and then you can just listen to Samir.
Indeed. There you go.
For those who are wondering what I'm showing here on the chart, it does say it is my screen, so there's no explanation on that part. This is EU. We've had some. We have some extended move from some time ago already, actually from the 11th of May, where the market seems to just wanted to go to sleep, or not to sleep, but sideways, southwards, and that has changed with in the mean process. That has changed with today's move, but that in the process of going south, it has broken some important structures we had before. We had an accumulation of order blocks. I already deleted quite some, and we are now left with I just left the last one, which has already been taken out by by Friday's close. But I left it in because, as we know, right, these structures, they become structures of the opposite. When they get invalidated, it becomes structure of the opposite nature, meaning demand becomes supply and vice versa. So you want to know about them if you want to understand what likely reaction the market could have whenever we get back. So we had market broke these structures, which are quite relevant in the overall market structure. Actually, from the higher time frame, it makes a lot of sense that we did, because we did go from this was a reaction, or was on the back of a reaction on the monthly time frame. That's why we want to know what the monthly is telling us, because it trickles down to all the other time frames, obviously. So if I was showing you guys, it wasn't a quasi in terms of the main strategy that is all the way with alignment from, let's say, the H4 to lower, or H4 to the higher time frame to the daily. It was just based on the fact that this we are in a, let me indicate this as this was an H2, not an H4. So on the H4 you can't see anything, right? So that's why there isn't it's not a main strategy trade. But however, what I just mentioned about the lower border of that invalidated structure or order block bullish that has been taken out, what you can see is actually it was an H4. My apologies for that confusion. So the border of that the daily order block, what happened was that when we got there, we had this reaction, and you can already understand, or we can anticipate, you can look for indications whenever we reach these levels. That's the lower border of that invalidated structure. Whenever we get them, you can expect some kind of reaction. And when it is just a reaction, just a couple of bars on the 1 minute or the 2 minutes, It's a scalp. It's a little scalp. I only go for a couple of pips, and that's it. Just to the next H5, the next 15, even 15 minutes is too far away. To the next structure in slightly higher time frame, maybe the 3 minute or so on. But in this case, the market on the 1 minute actually created an elaborate, not elaborate, but I mean a much more clear reversal pattern, which is not to be surprised. It is the quasi. We got this as the established uptrend. Market takes it out only by a little bit, but it did take it out and came back to retest one of these two entry order blocks. The first one, and I was waiting for that to happen. I saw that a reaction, got in, and because normally I would want to go for the 1 hour structure as the target, but since this isn't the main strategy, and you want to look for something nearby, and normally this would be the first target, right? The lowest point between the entry and the head of the quasi. But in this case, we did have something to the left, which is these. You can see it on the hourlies, which is the broken level, or the the level we broke out of to reach the quasi, or the structure on the higher time frame. And that break and retest is a very common theme or way that the market moves. So it makes sense that the market will at least try to approximate that level very quickly. So, and that's why I targeted that level, which is this line, and price comes back, and it was I didn't expect it to be this precise, but I mean, oh, look at how beautiful this surgical reaction was of that same line, right? And that, to me, there is no bigger, confirmation that, these technicals patterns, they work, not only work, but over and over and over again. They're so repeatable, and you can take advantage of it. As a viewer of our stream, so that's my screen explained. If you learn anything by it or from it, hit like, subscribe, or just stick around. All right. We have the open. Let's take a look at the open as well.
Sorry,
we have
Victor.
the US
Yeah,
Open.
sorry, Victor. Yeah.
No problem at all. I was just, giving you guys opportunity to say anything, just in case, if you guys, because I'm aware that I tend to start talking and then, fill the time, and
And we love you
No, that's
for it,
good.
Victor. We genuinely do.
Dude, that's what people turn up for you for. Like, they want to see
Yeah.
this, like where your order blocks, all the bodies are, that kind of stuff. Like, what are we seeing, like, going forward over the next couple of hours? Like, they roll this into the next day, dude. Valuable. It's what people want.
Well, thank you. You're kind to me, LJ, and I don't know you otherwise. Let's see. So we have on the higher time frames on the NQ, I eliminated some structures. I mean, they're getting tight. That's also a indication of that the market is slowing down, right? It is maybe still gonna be going up, but at a slower slope or rate, not so inclined a slope. So that's something, right? When these order blocks, they are created close to each other, opposing order blocks are created close to each other, that could be the beginning of either a reversal or just a ranging continuation or consolidation for the coming period. So on the H4, what do we see? We see price coming back to the order block we had indicated before, which is that daily, and we do have an H4, but that one is no longer fresh, right? If you've been watching here, I explained the rules that I trade by, and this is the immediate retest, the first candle. This is the first retest, although it's technically the second because the immediate is already the first one, but I still call this the first retest. And I don't trade the second retest, right? In that way of sequence of describing them. I don't trade them. They're still quite tradable. You see that reaction and the another reaction we see today. But I just chose not to to trade them. So the order block on the H4 to me is not tradable, although it does indicate a demand zone that you could, if you have other indication, other confluences, that it is tradable. You could trade it. I mean, if you have enough reasons to do so. But I don't use it anymore as an H4 line or signal, I should say, not line, signal. There isn't, to me, this isn't a fresh order block, although the market has reacted to it quite nicely, almost to the level where I would be interested in buying. We have, and if we keep on scrolling down, you have the, if you're looking for that reversal to go long again, it is on the H2. It is here. That's the entry, or not the entry, the structural break or the neckline to be broken for that bullish quasi. And by bullish, I mean this quasi. It needs to break here first, break that high, and then come back for that retest of some structure it left behind. And then, so what it means basically is that the market is not ready yet for the reversal back into bullish, right? This is the neckline on the H2, but also on the H1, indicating that the market is at all not ready yet for, at least it hasn't given us, the green light to start looking for a long on from the hourlies. And if you go to the opening range, which has just closed a minute, almost two now, we can mark the high of this candle, which is the 50-minute candle, or the 50, indicating the 50-minute range. And this sets the tone for at least the first hour, sometimes for a couple of hours afterwards. How this is reacted. Are we going to break this range and continue? And even if we come back, right? If we come back, how do we react to this? Do we push through, or do we actually use something that was left behind for that continuation? So it's interesting to see. We don't have enough information to interpret this as either bullish or bearish yet. We still have to wait how the market. You could start getting some ideas if you go to lower time frame to see, are we getting, is something changing, right? This is quite cleanly a bearish move. Are we changing now that we are, breaking out of that range? Is there something changing in the price action, in the order flow? Are we suddenly seeing, that kind of a price action, which might indicate price going to retest the upper border of that range, or at least the upper part of it, or not? And I just hit DP on EU. All right. On EU, on NASDAQ, I would like to just wait. I'm still waiting to see what direction the market wants to go. If we do get reversal patterns, either here or even a little bit lower, and we come back to that the breakout line of the breakdown line of the opening range, then I want to see how it handles this area, right? When it comes back, does it react something like that, which would be obviously bearish? And if so, then we know what kind of day we're likely going to be heading into. Or are we claiming it back and then responding, not completely, but I mean reacting bullishly? If we do so, something similar to this, then I would be looking for seeing if we can see a reversal into the upper range. It's basically a three-step plan. It needs to actually come back, not break it definitively, that range, come back, and I want to see how it react when it comes back. Do we get this kind of what kind of price action do we get once we come back? Do we get just reversal, just higher instead of the lower end? If that's the case, then you want to go short. And if not, you might be getting ready for the continuation of the market that we have seen all these days, which is most of the days the market breaking and just continuing like a train, like a steam train, all the way into new all-time highs over and over again. So I'm keen to watch if going to have another day of upwards movement. I like this. This is only the 1 minute, doesn't say much still, but see how the bodies of these candles, so far it's only a couple of minutes, doesn't really mean much. But if this happens more, this could be the first sign of the market telling us it's not likely to break down. It's just looking for some kind of support to then start building its case, its bullish case again. See how the wicks are left, the lower wicks are left below the opening range. That tells me that the buyers are actually, impeding, or they're not allowing price to stay below the level too much. That's something you want to be seeing. That's the buyer's appetite. That is what you want to see. That's the one of the first signs, and you start building your case for the possibility of an up day again in NASDAQ, which has been so common lately.
Yeah,
What are you guys watching? Go ahead.
I wanted to mention this, Victor. If you have a look at ever since we broke out of the all-time highs on NASDAQ, I'm just going to bring my chart up.
Okay.
If you just take into consideration the all-time highs that was established in October of 2025, and basically that almost retest that we had in January, and then just that volumetric absolute send-off that we've had, since we've broken that one, we've had 32 days since breaking that all-time high that was established in October of 2025. 17 of the days produced a new all-time high. So of the 32 days, 17 of them have been new all-time high that was created. Even if it created a pullback afterwards, a new all-time high has been created. So 32, 17. So that is a large portion of the all-time high that has just been running and running and running and running. And I'm pretty sure LJ would maybe agree to this statement, but at what point do we say, okay, screw it, all-time highs is expected, but a pullback is more likely? And that's kind of like where I'm sitting on the fence right now of where do I want to see pricing going? Like, obviously, I'm not somebody that trades with, let's say, speculation. Like, I need for it to go up and then I'm going to try and speculate a buy going higher. I just kind of like trade what happens on the day. And if it's bearish on the day, I trade bearish. If it's bullish, I trade bullish. But long-term view, I'm very much on the fence of what I would like to see happen.
I think we go much higher.
And that's the thing that scares me, is the moment, LJ, when you
I think
said
we
that,
definitely go much higher. Like, not I think, which implies like a kind of slightly more than 50-50. Like, I actually think we go higher. Like, I think it's like 80-20 we go higher.
Yeah, and I mean, if you just look at what has been happening over the last, I don't know, 32 days, 17 of those 32 days have been all-time highs broken, and at no point did we see any sort of like semblance of a reversal to a bearish structure.
Yeah.
Or at least a bearish structure that has had follow-through.
Yeah.
My money's on buying.
I think, actually, what you said earlier, LJ, I think it's applicable here as well. Where this is not about policymakers who haven't lived through the internet bubble, but I mean about the repeatability of the market through ages and decades. This is not so unfamiliar to those who lived through those times, LJ, where the market seemed not to have any limits to how high it could go. And why was that? That was because of the naming said it all, right? The internet promised everything would change, and did it do that? Sure, but I mean, it's not exactly a happy story all the time. And I think for AI, we're gonna have likely something similar. What do you think?
I agree. I think it's almost similar to gold as well. Seeing gold rip, and just like you've seen, like my propensity has been to short gold, and we've knocked that out the park. But again, it goes back to that same thing of back in the day where we had gold ripping, and then it comes off, and we hit certain points after, and then just dies. Like, it doesn't just go one way. That's not how it works. It's a time and place given the other conditionals around that. Just like right now, you're seeing things kick off, but gold's not going anywhere. Hence, yes, it's entirely around the other conditionals around that. Now, I mean, this has definitely been one of the more extreme runs, but we've knocked that out the park in the past. Even last year, when I was saying, okay, where are we going for gold? We've hit the all-time highs. I think that will still stick. Same with the NASDAQ and the S&P, saying that I think going into Q2, Q3, that will actually be where we see peak liquidity and actually see all-time highs for stocks. And we're not going to get this whole inflation thing coming through from tariffs and it's going to kill everything and the stock market crashes and blah, 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 that kind of stuff. We've seen that come through the whole board. Now, that was almost a year ago. That was like mid last year. And I had a very firm, confident view where I was willing to put that forward. And I kept putting that same picture forward. And we stuck there and got there. Now, if I had to say that from where we are, even to next quarter, I don't know. Q4, I don't know. Now, what I would say is, as far as stocks, right, S&P and the NASDAQ, I would say higher. But around the conditionals as to why we're higher, I would say are probably more soft, right? So we might be higher, but they're very susceptible to us dropping off. Like, I don't necessarily think it'll be for firm reasoning. I think going forward, we've seen the PMIs starting to increase, that kind of thing, or the financial conditions for the US. There's very much a huge cloud around Kevin Walsh, and then that goes on to the Bank of Japan and exactly what kind of, and the Ministry of Finance and what kind of further positions they take as far as intervention or not. That changes the entire direction with bond market. And then we've got the UK situation going on right now as far as, is Keir Starmer out or not out? Are we going to have like a stable government at least for like 3 or 4 years? I would say now we're in that like obfuscation type period. It's very opaque. It's very difficult. And so I would expect more volatility across the board. Just like we were saying before, Victor, this is where for us traders, if you do it right, this is the perfect situation you want. Get it wrong, you're cooked.
Painful.
But yeah, I must say in the wrap up, like I don't have that same clarity like I did, say, 9 months ago from here. So it's a bit more difficult now.
But then again, it is actually all the more as a warning to those who are maybe new to the markets and they have seen NASDAQ being so bullish, breaking and making these all-time highs that humanly, like psychologically, it starts to normalize to expect these kind of movements and to just it's gonna come back. It's gonna break down maybe a couple of hours, but it's gonna come back. I can leave that position on. That's something that's not gonna stick forever. For certain, we know that for certain because the market will change, and it cannot go up forever. And what you mentioned, that backdrop of the all these uncertainties, that will definitely have an effect on the equities in NASDAQ and in this asset in particular. There will be a time where the market will feel this fear of heights, and you can see you go up by the ladder, by the staircase, and come down with the elevator, if not jumping off.
Yes.
Windows and stairs.
Exactly. So for those who are long only, be aware of that risk which is building up as we are quite one-sided or have been the last couple of weeks And
Yeah.
if you're not only long, that's a good thing, but make sure that you're back tested outside of last couple of weeks, and actually go to the a period in the market where the market was sideways or even bearish, and see how your strategy would fare. That gives you a much better indication than just looking last couple of weeks or months, because then your data is simply not applicable.
Yeah. It's understanding that the
Yeah.
market is cyclical in nature and that there's changes. Not that it's like it's always up, always down, always up, always down. It's that there's change. That's the cyclical nature of the market. Is that it doesn't always conform to one kind of sentiment. It's ever changing, much like the whole of life. And with that, we have pretty much come to the end of today's stream. Is there any last final words from you, LJ, and you, Victor, before we go ahead and close out today's stream?
Go ahead, LJ. If you
I was going to say, we've got a couple of questions from Amit here, like Michael. Bang this stuff towards us tomorrow, right? And I will smash it out. We probably don't have quite the time today to box that up. But apart from that, I think we've covered most of things overall. As ever, stay safe, trade well. See you guys tomorrow. If you do have further questions, just like that, bring it to us tomorrow. I'll be here tomorrow. We can smash it through, no problem, in depth. Hit me up. I'm waiting for it. So there you go.
Perfect. Just want to invite everyone to the like button, the like and subscribe. They need you. They want you to find them. Look at it as a scavenger hunt, a little challenge. I know it's not a challenge, but just trying to make it fun here. All right, that's it for me. And see you guys soon again. Back to you, Richard.
Dude.
Awesome. So thank you very much for everybody that has joined us today. Tomorrow is a tantalizing Tuesday. It's a brand new week. A lot of activities to be had, a lot of trading opportunities, and hopefully we can find a few more tomorrow. If you haven't already, drop us a like, drop us a subscribe, and then hit that notification bell so that you know whenever we are going live. Thank you to Victor and to LJ for keeping me company, and thank you to everybody in chat for all of the good questions and all of the banter and also all of the critique. We do take it all in, even if we don't want to. And then to Remy, our producer, thank you very much for everything you do in the back. All right, guys, see you all tomorrow. Have a good one. Cheers.
Bye-bye.
See you guys tomorrow.